The Congress party appoints Rahul Gandhi to be the leader of the opposition in the 18th Lok Sabha. The race for the speaker heads to a vote for the first time in over 50 years, with members of the House set to choose between NDA's Om Birla or India Alliance candidate K. Suresh to lead the 18th Lok Sabha. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking for you. But as always, let's first take a look at what the Asian markets are doing. Largely mixed, you have to say today. Again, that's the picture with the Asian markets. While the Hang Seng is in the red right now, 42 points lower there. The Taiwanese index is up 135 points. The other indices, the likes of Nikkei, doing well in trade today. We also have the Kospi, which is sitting with gains of around 0.2%. But we have something like a Shanghai, which is in the red, down 0.4%. And GIFT Nifty, that will come up for you on the screen because that's the one which will indicate the way Indian markets will move. The GIFT Nifty here, 21 points lower right now. So that could indicate that the start could be slightly in the negative, or it could be a muted to flat start for our own markets. That's what's happening in the Asian markets today. But let's talk about the US markets, because Wall Street ended mixed for a third session but saw a comeback in the chip sector. The Nasdaq Composite snapped a 3-day slide, gaining 220 points in the back of Nvidia's rebounds from the week's earlier losses, while the Dow Jones shed close to 300 points after heavyweights Boeing, Home Depot and Goldman Sachs all declined. The S&P 500 also gained after 3 sessions of sell-off. CNBC's Kate Rogers gets a wrap of all the action on Wall Street.
In this afternoon, shares soaring up more than 40%. That's on news that Volkswagen plans to invest up to $5 billion in the electric vehicle startup, starting with an initial investment of $1 billion. The additional $4 billion expected by 2026. It includes plans for $1 billion each in 2025 and 2026, followed by $2 billion in 2026 related to an expected joint venture to create electrical architecture and software technology. That's according to a release by the two automakers on this Tuesday. FedEx reported fourth quarter earnings that topped Wall Street expectations, with adjusted EPS of $5.41 per share compared to an estimate of $5.34, revenue of $21.1 billion, right in line with estimates from analysts. For the full year 2025, FedEx sees adjusted earnings per share in a range of $20 to $22 versus an expectation of $20.85. For revenue, the company expects low to mid-single-digit % growth year on year. It also said it plans to repurchase up to $2.5 billion worth of shares in fiscal 2025, and the stock climbed about 15% on that news. Carnival shares added more than 8% after the cruise company posted a second quarter earnings and revenue beat, reporting profit of 11 cents per share on revenue of $5.78 billion. Analysts were expecting a loss of 2 cents per share on revenue of $5.68 billion. Carnival also offered strong third quarter and full year outlooks. And finally, shares of SolarEdge tumbling about 20% following the announcement that it will offer $300 million worth of convertible notes due 2029. The company also revealed in a U.S. SEC filing on Monday that a customer won't be able to pay about $11.4 million that it owes after filing for bankruptcy.
Okay, all right, that's the U.S. market action. And former PIMCO CEO and Alliance Chief Economic Advisor Mohammad Al-Arian is of the opinion that Federal Reserve is overly cautious and is afraid to take a call on a rate cut.
You had disagreement about what's happening to inflation dynamics. You had disagreement about the growth dynamic. You even had disagreement about the impact of lower interest rates. We're living in this very uncertain world. If you look at the tails of the distribution, which you worry about in an uncertain world, they're heavily tilted in terms of the economy slowing much faster than people expect. In such a world, if you want to deliver a soft landing, you've got to start cutting sooner rather than later and not go too far in cutting. So the most likely mistake right now, the most likely policy mistake, is a Fed that got shaken by 2 pretty bad calls in the last few years, will end up being overly cautious and will end up not helping to preempt what could be a significant slowdown. I have 2 views. One is I think this economy is slowing much faster, and in particular, the household sector no longer has excessive savings, no longer has much debt capacity. This is not about a K-shaped economy. This is about an economy that no longer has buffers. So if the Fed gets the labor market wrong, we are going to have a much faster slowdown than they can even imagine. So that's the first issue. The second issue, which is much more controversial, is that I don't think 2% is the right target. I think, in fact, if they pursue 2%, they'll run an over-tight monetary policy, and they'll end up sacrificing the second part of their mandate. This is an economy whose underlying equilibrium inflation rate is higher than 2%. It's closer to 3%.
Okay, well, let's move on. Tuesday was a subdued trade or day of trade for European equities. The French CAC slipped about 45 points. The German DAX lost over 145 points, while the British FTSE closed with losses of about 34 points. Shares of Europe's largest aerospace group, Airbus, stumbled over 9% after the company cut its targets for 2024. Separately, ahead of the French parliamentary elections on Sunday, the operator of the Paris Stock Exchange said that the prospect of politically extreme party with little or no government experience reaching power is worrying investors. Meanwhile, shares of Danish pharma giant Novo Nordisk hit a record high after the company said their weight loss drug Wegovy had been approved in China. Okay, all right, that's all the global market action and opinion. But how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. What is the trade setup looking like, the stocks that will be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Hormaz, let me come across to you first up. What is the market setup looking like today?
The setup is pointing towards a subdued start, but then that should not come as a surprise considering the move that we have seen over the last two trading sessions. Now, if you compare Monday's low and Tuesday's high, the Nifty is up exactly 400 points from the lows of Monday, and if you take that high from Tuesday. But that also is led by one sector, and that is banks, and the banking stocks are the ones that are leading the Nifty higher. The Nifty was up around 180 points yesterday, and almost 75% of that came from just three stocks, which was HDFC Bank, ICICI Bank and Axis Bank. The top three contributors to the Nifty. Reliance and L&T also put their hand up in yesterday's trading session in taking the Nifty higher. But it is the Nifty Bank that has been the star of the show last week, and it is continuing from where it left off there as well. Now, from the June 4 lows, which were around levels of 46,000, the index is already up 6,500 points in just 15 trading sessions, including that one as well. So the Nifty Bank is scaling newer peaks, now well over the mark of 52,500. So 53,000 now becomes the next level to watch. But that may also be because of the fact that institutional flows are returning to the market, specifically the foreign institutional flows. The FPIs were net buyers of Indian equities for the 12th trading session yesterday, and that is the longest buying streak for FPI since the June of 2023. And since the 7th of June, they've bought equities worth over $3.7 billion. And that could also be a reason why the banks are moving higher, and subsequently the Nifty as well. But aside of the banks, the rest of the market was pretty much sulking in yesterday's trading session. There was a bit of pressure in the broader market, some profit booking in the mid-cap space. Realty index saw a bit of a sell-off as well, as did the metal stocks, which also witnessed some profit booking. Today, Wednesday, being the monthly expiry for the Nifty Bank, there's also HAL's board meet to consider a dividend, Inox Green's board meet to consider fundraising, and of course the Spectrum auctions continue for the second day. There's no clear handover from the US markets as well, because all depends on how Nvidia does, and that is when the markets move there. But the GIFT Nifty is pointing towards a slightly subdued start for our own markets.
Oh yes, it is. So there could be some muted movement that we could see today, but thank you so much, Hormaz, for that. Now over to Abhishek, who will list out the stocks to watch out for in today's trading session.
Well, to begin with, Sanghvi Industries promoter Ambuja Cement and Ravi Sanghi to sell about 3.5% stake in the company. Ambuja Cement will offload about 2.36% and Ravi will offload about 1.16%. The floor price that's been kept over there is ₹90 per share. There have been resignations, so M&M Finance has seen their CFO resign, who will leave the post in October 2024. Ratan India, their CEO, has placed resignation with immediate effect. Now, sources on C-Info System, the promoter Rakesh Kumar is looking to offload a part of his stake, that is about 0.9%, which is valued at about 114.6 crores. Ultratech Cement UAE arm, they have revised the buy offer in Ras Al Khaimah to 25% from 31% that they had earlier applied for. In terms of Z Entertainment, the NCLT has allowed the withdrawal of implementation application of composite scheme of arrangement that they had with Sony. Back to you.
Okay, all right. Those are some stocks on our radar today. Finally, let me go across to Manglam. He's joining with all the cues from the F&O space. Hey, Manglam.
Good morning. So, the Nifty was in a trading range for the last few trading sessions, and yesterday it broke out of that range. In fact, it broke out of that 23,350 to 23,700 sort of range, conquered the 23,700 mark intraday and closed above that as well. So that was an important one. Additionally, it was led by, the weekly options expiry. If you just take a look at both the financial services index as well as the Nifty Bank, you would realize that both of them ended at the high point of trade, and that's exactly what led the market higher as well. The Nifty Bank was the biggest contributor. In fact, if you look at the Nifty Bank, that led the overall rally in the market. Top contributors, of course, were the top private sector banks, HDFC Bank and ICICI Bank. And that is an important sector to watch out for today as well, because it is the Nifty Bank June series expiry. It's a Wednesday. No problems with the cash market. The FI has bought about 1,200 crores, and that is understandable, largely because the private sector banks doing extremely well. But the bigger purchase was in index futures, almost 2,700 crores. We've been talking about how FIs have been increasing their long exposure left, right and center, and this one was in addition to that. 47,000 long contracts added, and with this their long exposure now stands at 61% and net long stand at 1,40,000 contracts. Where does the market go from here? Because tomorrow is the monthly expiry. 23,750 call writers are active for a premium of 90 rupees, telling you that, levels upwards of 23,800 may face some sort of congestion. But the important part is, with the market breaking out yesterday, we are seeing supports move higher as well. 23,700 put writers active for a premium of 80 rupees, 23,600 put writers active for 55 rupees. So the base for the market from 23,350 to 23,400 has moved to 23,500 to 23,600 itself. For the Nifty Bank, there are supports at lower levels. 52,500 put extremely active, just about 100 points from where it is right now, and on the way up 53,000 is where all the room is up to. Keep an eye out on a bunch of stocks, a lot of them getting out of F&O ban on expiry week. So we have Balrampur Chini, Chambal Fertilizers, Granules and Piramal, all of them in focus on account of getting out of F&O ban.
Okay, all right. So that is the F&O setup. Thank you so much, guys, for joining us and prepping us up for this trading day ahead. We'll slip into a break. Up next, RBI Governor says that the central bank is confident of achieving 7.2% growth this year. More on this when we return.
आतिशी जी 5 दिनों से अन्न त्याग करके बैठी हुई थी, अनशन पर बैठी हुई थी। उनकी तबीयत बिगड़ रही थी। डॉक्टर उनको बार बार कह रहे थे कि आप अपना अनशन तोड़िए। लेकिन कल रात में अचानक उनकी हालत बिगड़ना शुरू हो गई। पहले एलएनजेपी के डॉक्टरों की टीम ने शाम को देखा।
Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. Well, the RBI is confident of achieving 7.2% growth for the current year, says RBI Governor Shaktikanta Das. Addressing the 188th Annual General Meeting of Bombay Chamber of Commerce and Industry in Mumbai, he spoke about India's growth trajectory and the central bank's main focus moving forward. Listen in.
We are confident about the 7.2% growth for the current year. Of course, in any projection, in any forecast, there would be always risks to the upside and risks to the downside. What is for real today is that global growth is improving, but at a slower pace. Rural consumption, which was lagging behind for a long time, has picked up. The sales of FMCG goods in the FMCG sales volumes have increased in the rural sector. What India has been experiencing and what India needs in the future is a growth that is driven by multiple sectors. A country of 140 crores, a country which is now the 5th largest economy, aspiring to become the 3rd largest economy, a country which has aspirations of becoming an advanced economy when we reach 100 years since our independence. A large country like this cannot depend on a single sector, whether manufacturing or services or export-led growth or whatever. It has to be a multiple sector driven growth story for India. We are completely focused on, as a central bank, we focus on price stability, we focus on controlling inflation because it is in the interest of long-term growth.
Okay, that is the word coming in from the RBI governor. But let's move on. Pulse, onion and tomato prices have surged following a record heat wave in the country. The centre has imposed stock limits to keep the rise in prices of pulses in check. The government has bought over 70,000 tons of buffer onion stock and expects prices to stabilize as the monsoon progresses. My colleague Sandhya was at the APMC market in Pune to get us the ground report on soaring vegetable prices. Take a look.
So the tomato price has reached the mark of rupees 100 per kg in multiple parts of the country, especially the southern states. So what exactly is leading to this? First of all, the annual monsoon factor is in the play here. But other than that, this year, the summer crop of tomatoes got destroyed because of intense and excessive heat. And that has led to an imbalance in the demand-supply chain, which has led to this spike in tomato prices. Now, what happens every year is monsoon factor, which usually leads to a price hike during this time of the year. The fresh monsoon crop of tomatoes, the moment it hits the market, that leads to cooling down of these prices. But this year, because of the delay in monsoon's progression, this delay has led to a delay in the sowing of kharif crops, including tomatoes. That means that the monsoon crop, which was all set to hit the market towards the end of July, is going to take some time, which means that the much needed respite in the price of tomato is going to take some time. It's going to further delayed, and the worrisome factor is that the prices could increase further.
Okay, and Sandhya also spoke to a few tomato farmers who described their plight given the difficult conditions they are facing. Listen in.
क्या हुआ अभी वो हीट की वजह से कुछ माल कम निकल रहा है, कितना भी बाजार बढ़ गया तो कुछ वो भांडवल बहुत लगता है, कॉस्ट बहुत लगती है, इसलिए कुछ फायदा नहीं होता है. 1000 के आगे जाएगा तो भी इससे खेत सब फार्मर को कुछ नहीं मिलता है, हाथ में मिलता है, मजदूरी बढ़ती है, भाड़ा लगता है.
हर साल 2-4 लाख होती है, मगर इस साल में धूप के वजह से, बारिश के वजह से बहुत कम हुआ है. 1 लाख भी नहीं हुआ है. सब खेती वालों को ये टमाटर माने ये हुआ है, नुकसान हो गए.
आज 950 रुपए क्रेट गया है, पर लेकिन इस साल में तेज पकड़ा है, लेकिन तेज
मतलब 50 रुपए किलो गया होगा.
हाँ, 50 रुपए केजी टमाटर गया है, पर लेकिन उतना उसको किसान को प्रोडक्शन हो रहा नहीं है. उस हिसाब से हर साल टमाटर का 1 एकड़ जो खेत होता है उसमें 800-900 हज़ार पूरा सीजन में जाता है एकड़ के हिसाब से, लेकिन ये साल में 200 क्रेट भी नहीं जाएगा, क्योंकि ये धूप के टेम्परेचर की वजह से फसल इतनी खास नहीं है.
मतलब
तो
दाम
ये 1000 रुपए क्रेट है, पर कुछ मतलब नहीं है. 3000-4000 तक क्रेट जाएगा तो किसान को कुछ तो उसका नुकसान, अब जो एक्सपेंसेस हुआ है वो निकल जाएगा.
Okay, the prices have surged of vegetables and pulses. We'll keep getting you more updates on this developing story. For now, we'll slip into a break. Up next, we get you all the cues from the commodities market, so stay tuned for that.
फिर अपोलो में उनका ब्लड सैंपल चेक कराया गया, एलएनजेपी में ब्लड सैंपल चेक कराया गया, और उनका जो शुगर लेवल आया वो 43 आया. उनको एलएनजेपी में एडमिट कराया गया और आईसीयू में उनको भर्ती किया गया. आतिशी जी अभी भी एलएनजेपी के आईसीयू में भर्ती हैं. इन सब परिस्थितियों को देखते हुए अब इस लड़ाई का जो अनशन की लड़ाई थी, जो अनिश्चितकालीन अनशन की लड़ाई थी,
Welcome back. You're still tuned into Power Breakfast. We spoke about a whole host of things. Let's focus on the commodity space. Manisha Gupta is joining us with the update. Hey, Manisha, good morning.
Morning, Sanal. Thank you for that. I'll start with gold and silver because the sharpest of declines have come in for these. So while the gold prices fell a percentage point overnight, but the silver prices have seen a 2% decline. With this, we are down more than 3% on week. So while silver did make an all-time high of 96,000 rupees a kg in the Indian markets, it's trading at around 86,000 right now. So we have seen a sharp decline come in for this one. This is on the back of US dollar index, which has gained up to a 2-month highs. There also is an uptick in the treasury yields, and the market markets are now waiting for the US GDP numbers that come in tomorrow and the US inflation data that comes in on Friday. So ahead of that, there is some choppiness continuing. In the industrial metals as a sector as well, we've seen profit taking coming in. So copper prices are trading at a 9-week lows. You have a 2-month lows continuing in case of iron ore and aluminum prices. And the HRC steel prices now have declined to a 17-month lows. Profit taking is what is continued for the crude oil prices also. Here as well, the markets are anticipating an increase in the U.S. inventories in the last 1 week, and that has weighed on. In any case, the supply disruption concerns due to geopolitics have kept the prices supported, but the markets have seen some profit taking coming in on the higher side. So while we were trading at above $86 yesterday, we are barely holding 85 for the Brent prices right now. So it's a cross profit taking is how Asian markets have opened today. And this is on the back of strength in US dollar index, which is trading much higher, above 105.
Oh, okay. All right. Thank you so much, Manisha, for joining us with all that updates. So that's what's happening in the commodity markets for today. Some profit booking across the board. Let's move on now. No relief for Delhi Chief Minister Arvind Kejriwal after a Delhi High Court has stayed a trial court order granting bail. The Supreme Court is scheduled to hear the case today. Kejriwal has been accused in a case about the Delhi government's excise policy. Ashmit Kumar filed this report last evening.
Well, the Delhi Chief Minister Arvind Kejriwal suffering a fresh setback, this time at the hands of the Delhi High Court. The Delhi High Court saying that the trial court order which granted bail to him is indeed perverse and that it should be stayed. That's the broad rationale, that's the broad takeaway from the Delhi High Court order. So what was the rationale that the High Court expressed? The High Court gave its rationale at 2:30 p.m. That's when the order was pronounced. The High Court found itself in agreement with the Enforcement Directorate that there was not enough consideration paid by the trial court to the submissions, the avaments, the consideration, the arguments forwarded by the Enforcement Directorate. What the Delhi High Court held is that there was not enough application of mind, that there was not sufficient opportunity granted to the Enforcement Directorate to make its case against the grant of bail, and that forms the basis of this order being perverse and that should be stayed straight away. However, it may not be the end of the road for the Delhi Chief Minister. Bear in mind that on Monday, which is just yesterday, Kejriwal, assisted by his legal team, had moved the top court, whereby they had questioned the stay of this bail order by the High Court on Friday. At the time, the Supreme Court had stayed shy of passing any observations on the merits of the matter, but had said that given as how the Delhi High Court is about to pronounce its order, which is today at 2:30 p.m., the Apex Court saw it fit to post this matter, this challenge issued by Kejriwal, tomorrow. So tomorrow, June 26th, is when the Apex Court will take up this matter, and tomorrow will be critical in terms of deciding the fate of the Delhi Chief Minister on whether he stays locked behind Tihar jail or whether he walks out as a free man.
Okay, Ashwin, thank you so much for getting us all those details. And in a late night development, the CBI arrested Arvind Kejriwal in a corruption case from Tihar jail last night. He's expected to be produced before Delhi's Avenue Court around 10 a.m. today, after which a formal arrest will take place. The CBI then plans to seek his custody in the Delhi excise policy case. And in an important update, Lok Sabha will witness a rare contest for the Speaker's post today between BJP's Om Birla and K. Suresh of Congress after the NDA government and the India group of opposition parties failed to arrive at a consensus. This will be the first time in nearly 50 years that the Speaker will not be elected by consensus. With NDA having a strength of 293 out of 543, Om Birla in all likelihood is set to get a second term as the Lok Sabha Speaker. The Congress party has announced that Rahul Gandhi will be the leader of opposition in the Lok Sabha. This will be the first time in 10 years that the Lok Sabha will have a leader of opposition. The Congress had failed to get the required 10% seat in the last two elections for the post. Congress party president Mallikarjun Kharge said Rahul Gandhi will truly represent the aspirations of the people as the leader of the opposition in the lower house of the parliament. Okay, all right. That's all the update on the political news. But for now, we'll take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next with all the market action.
दिया जा रहा है, लेकिन सारी विपक्षी पार्टियों को लामबंद करके संसद के अंदर पानी की आवाज को बुलंद करने का काम हम लोग करेंगे।
GST had certain advantages of avoiding multiplicity of taxes or tax on the various transactions, the various purchase and sales transactions. GST, I think, has been one of independent India's biggest structural reform since 1947. When GST was introduced in 2017, it was expected that once the system stabilizes, and I'm happy to mention and happy to see that in India, the GST has stabilized much faster than many other countries.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. You know, this is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different?
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Middle of the week. It's a Wednesday morning, and it's a rainy Wednesday morning here in Mumbai. Although I must say, it should rain a little bit more. It's just holding there, right?
It is finally, right? I mean, there are no rains. It's the end of June and it's a scary situation. I mean, it's not only hot, but the monsoons need to be here for things to kind of move on track.
I mean, I think we're 20% deficient in June. The only sort of silver lining hope really is that the Met has said that June will be deficient and rains will pick up from July onwards. Yeah. So hopefully it'll be made up, but that's, I mean, you're really hoping it does.
Absolutely. But morning, Rima, lots to talk about today.
Hi, lots to talk about, and it's raining gains, particularly if you're in the banking sector. So yesterday was a day of big milestones. 78,000 on the Sensex, 23,700 crossed on the Nifty. The Nifty Bank continued to soar and finally closed well above 52,000.
Absolutely. So let's kickstart the day today and tell you all that you need to watch out for. I mean, it's been very good for the market, right? No two ways about that. The Nifty has been hitting record highs for the last few days and sustaining above record highs as well. In fact, the GIFT Nifty this morning is suggesting another gain of almost about 30 odd points. The last time I checked, the Nifty perched, beautifully above that 23,700 mark. There was large buying from foreign investors yesterday. So FI has bought almost 1,175 crores in the cash markets yesterday. The flows are also coming back, especially from the foreign investors. But I think it's financials that are reigning supreme right now. So once again, look at the Nifty Bank, perched above that 52,600 mark. There was large delivery-based buying in the banking names as well. The Nifty Bank is now up almost 6,500 points from the June 4th lows of 46,000. So that's the kind of gains that we've seen under our belt. And even if you look at individual banks, right, ICICI Bank has actually been a star. I mean, from the 4th of June lows, the stock is up almost 12%, large delivery-based buying there. Kotak Bank not too far behind, about a 9% rally there. Even in the global markets, after a 3-day decline, the S&P 500 ended in the green. The Nasdaq has arrested its fall as well. Nvidia, after falling non-stop for 3 days, has sort of, seen a bit of a rebound. So all is well, even in the global tech stocks. And for now, things are not looking too bad.
Yesterday's session in the US was almost a mirror image or a reversal of what we had in the prior session. And talking about banks, 60% of the Nifty gains were courtesy just HDFC Bank and an ICICI Bank. You throw in an Axis Bank and then that number goes up even more. So single-handedly, banks carry the weight yesterday. And tomorrow, remember, is the June monthly series expiry. And there appears to be maybe some pre-budget rally also taking place. Just one point, in this rising tide, promoters continue to pare their stake. So today you will see block deals where the promoters will be selling stake in MapMy India and Tega Industries. We'll talk more about it. But yesterday also you had, the Alchem Labs promoters selling stake. Mr. Suta of Happiest Minds also sold, more than about 6% stake. And there was this interesting study done by Business Standard. And I picked this up from there. They're saying 15% of the company's promoters have sold stake in the March quarter. And this is the highest that they've seen in more than 12 quarters. And that's the number of companies out of a sample set of a little more than 3,000 companies where the promoter holding has come down on a quarter-on-quarter basis. So that's just one, point. Some cues to watch. Today at 11 o'clock, the Lok Sabha speaker election will take place. So the voting is at 11 o'clock. It's also day 2 of the Spectrum auction. Day 1 saw 11,000 crore of bids. In companies, it's Inox Wind and Z Media, where the board will meet for a fundraise. Hindustan Aeronautics Board will meet today to consider a dividend. And in terms of the U.S. economic cues, U.S. new home sales data will be released today.
You're talking about the Business Standard report, right, in promoter sales. There's a Novama note. They're saying that over the next 3 months, there's about $12 or $13 billion worth of locked shares which could not be sold because there is that one year lock-in period, 6 months, etc. 12 billion of it will get free. I mean, in the next 3 months. Not that all of it will come to be sold, but you could not sell it because early investors, etc., pre-IPO investors. But now it will be open, and this is from now till over the next 3 months or so. So a lot of activity happening. You guys have sort of wrapped up things nicely. I'm just going to put out levels, and that's it. So I mean, on the index, right? I mean, things are looking good, and the Nifty, of course, yesterday was a pure financials-led rally. I mean, everything else underperformed. Everything else took a back seat. It was just private banks, right? Axis, HDFC, ICICI, Shriram Finance. These were the top 4 gainers on the Nifty. So what does it mean for sort of levels here? So on the Nifty, we are on the, if you look at the hourly charts, we are at the upper end of the rising channel, which is 23,750, right? We're very close by. So once you actually cross that, you essentially are looking at, you got to project levels higher. The daily upper Bollinger Band for the Nifty is 24,067. I mean, I would say it's not very far away, but that's the first level, the first target in that sense that the Nifty perhaps will get to, and then we will see what happens there. Of course, this is on the back of a close above the 23,750 level that I pointed out. Now, on the Nifty Bank, the upside targets come in slightly above 54,000. We got a big break. Remember, banks are the one area which have got sort of, and this has been, it's like common consensus, they've underperformed relatively the most. They've absorbed maximum selling from FIIs, and foreigners are back since the sort of election results. So maybe there is more to go here. So the target's slightly above 54 to be precise. It's 54,386. And on the way down, you got to sort of, see how it goes. Very near term, the 20 hourly average is 51,882. And the 40 hourly exponential average is about 41,318. It's not a bad looking screen to start the day. GIFT Nifty will come up on your screen, especially on the US side. I mean, I think, the handover is much more positive. Thank you, Nvidia, for that. 25 point lower start is what we are seeing after, the last 2 days where we added 50 points on Monday, and yesterday it was almost a 200 point kind of day on the index. So that's the picture, but the impulse is to try and buy the dip whenever, as and when it kind of it is emerging. And this morning, it's a small, flattish kind of start, 25 points lower. Sonia.
The move in the market, Prashant, reminds me of this one book I'd read. It's called Unshakable by Tony Robbins. I don't know if you've read it. No. In that, he speaks about financial markets over the last 100 years and lessons from it, right? He talks about how the biggest fear that people have is a correction or a crash. But that's not the biggest fear. The biggest fear is actually staying out of the market. Because in the last 100 years, every correction that has happened, every bear market that has happened, has not lasted for more than 2 months. So before you know it, things turn around, and then the biggest fear is just missing out on the rally.
The 2 month is recent, right? Last 5 years. I mean, we've had longer bear markets if you go back, 2007, 2008, we've seen that, right? But yeah, you absolutely.
On an average, he's mapped it from, the 19... Yeah, all the way. And then on an average, he says that it doesn't last for more than...
Yeah, you're right. I mean, the actual fear is to be out of the market.
As I say, right, more money is lost waiting for a correction than in the correction itself. So staying out of the market, you end up losing a lot more money.
Absolutely. All right, we have a lot more commentary coming in actually this morning. So let's get straight to it. First up, Venugopal Gare of Bernstein says that there is limited scrutiny on earnings in such phases of the market. He says that any idea is rationalized as the next wealth generator, and a broad positive 50-year view on India suffices the investment thesis. He also says investors rush in to neutralize any valuation arbitrage they see. He adds this kind of investing with a negligible assessment of models and governance stays good till the cycle peaks. He also says momentum chasing in the short term is too lucrative to stay away from. Still, he adds a longer-term play on bottom-up ideas, some of which feature in their India portfolio, will always keep one safe when the domino effect takes over.
We'll have to invite Venu over. Interesting comments, right? 50-year cycle and momentum. It's a very interesting view. We'll try and have him on the program here. Well, let's get you some money market views as well. Kunal Sodani of Shin & Bank says that the Federal Reserve Governor, Michelle Baumann, delivered hawkish comments that boosted the US dollar. He says dollar index once again is trying to approach the 106 mark, while oil prices have cooled off a bit. He says inclusion for India government bonds in the JP Morgan bond index starting this Friday is a positive for the rupee. So for the currency pair, he says 83.35 is support and 83.55 to the dollar is a resistance.
We have lots of stock-specific action to track today. We'll get to it in our special Top 10 segment. We're looking at Bank of Maharashtra, Central Bank, Gokuldas Exports, Arvind Fashion and Aditya Birla Fashion. These stocks could open higher. Stocks with negative news flow are SBI Cards, MapMy India or CE Info Systems, Sanghi Industries, M&M Financial and Borosil.
Okay, well, some more sound bites. This is former PIMCO CEO and Allianz Chief Economic Advisor, Mohammad Al-Arian. And it's his opinion that the Fed, the US Fed, is overly cautious and is afraid to take a call on rate cuts. Listen in.
You had disagreement about what's happening to inflation dynamics. You had disagreement about the growth dynamic. You even had disagreement about the impact of lower interest rates. We're living in this very uncertain world. If you look at the tails of the distribution, which you worry about in an uncertain world, they're heavily tilted in terms of the economy slowing much faster than people expect. In such a world, if you want to deliver a soft landing, you've got to start cutting sooner rather than later and not go too far in cutting. So the most likely mistake right now, the most likely policy mistake, is a Fed that got shaken by two pretty bad calls in the last few years will end up being overly cautious and will end up not helping to preempt what could be a significant slowdown. I have two views. One is I think this economy is slowing much faster, and in particular, the household sector no longer has excessive savings, no longer has much debt capacity. This is not about a K-shaped economy. This is about an economy that no longer has buffers. So if the Fed gets the labor market wrong, we are going to have a much faster slowdown than they can even imagine. So that's the first issue. The second issue, which is much more controversial, is that I don't think 2% is the right target. I think, in fact, if they pursue 2%, they'll run an over-tight monetary policy, and they'll end up sacrificing the second part of their mandate. This is an economy whose underlying equilibrium inflation rate is higher than 2%. It's closer to 3%.
Okay, that's an important voice weighing in on Fed rate cuts. Dean Kim is head of global research product at William O'Neill & Company. Dean, great to have you with us here on the program. Thank you. Now, the banks index, the Bank Nifty, Dean, was all the rage yesterday and single-handedly really led the market higher. So let's just start with banks. I was looking at sort of targets here on the Nifty Bank, and I thought the bank's index could get to about 54,300 plus. I mean, in the immediate leg. Do you think that's possible? And how would you trade the Nifty Bank? Which are the strongest stocks there?
Yeah, I'm keeping an eye on HDFC Bank very closely at the moment. It's close to being, breaking out from a stage one base. The pivot is 1721 Indian rupees. So should we, breach that pivot point with high volume, I would say that would be a great indicator that Nifty banks will continue to work. So pretty exciting. So finally, we're seeing some, buying into Indian banks. Of course, you've got Federal Bank that's doing well. State Bank of India continues to do well, as ICICI. But the flagship HDFC Bank, that's the key one that we're keeping an eye on.
Across at least the larger banks, have you looked at charts? Is this giving you an indication of a fresh leg higher? Of course, HDFC Bank, you think there is enough steam, and that's the largest weight. But what about the others, Axis, ICICI, IndusInd, and the others?
Yeah, so, a lot of the banks are consolidating well within the base. And so we would not be aggressive until we see a breakout. So as I said, HDFC is about to break out. So that's very, very exciting. Others, ICICI is getting, slightly extended. And so I wouldn't chase here. But certainly Federal Bank, State Bank of India, and then, keep a close eye on ICICI. I'm sorry, IndusInd Bank. IndusInd Bank, as well as Bank Maharashtra. They're all consolidating in the base, and we just need a few more sessions of updates before we can, gain more confidence that the breakout's going to work. So I think we're heading in the right direction.
We're heading in the right direction for sure. I mean, the Nifty Bank, who would have thought, right? Everyone was waiting for the 50,000 milestone, and lo and behold, we're now at 52,000 on the Nifty Bank. But Dean, so you said you're watching HDFC Bank very closely. Another bank that has been doing well is Kotak Mahindra Bank. I wanted your thoughts there. From the June lows, the stock is up about 9-10%. Do you think it could play catch up to the other banks, and how is the chart looking? It's consolidating well above moving averages. Still has a little bit of work to do. I believe they've overtaken the 100-day moving average. So once we see some, positive reaction amongst other larger banks, Kotak Mahindra should follow suit. It's an indication that especially foreign investors, they believe in, the Indian economy is going to continue to be strong, particularly on the back of China. China is getting much weaker now. In fact, we've put the market status to a downtrend just today. And so, I think a lot of money, global money, is going to flow towards India, and in particular, some of the, the sectors that haven't really performed well today,
low valuation, and those are large cap banks.
On HDFC Bank, getting back to it, you said 1720 is the level that you're watching out for when it completes, I think, some base one sort of a correction or consolidation. What happens after that once 1720 has been breached on the upside?
Yeah, so we look at volume very closely as well. So if the stock can punch through that 1721 level with high volume, that would be a great indicator that the breakout's going to work. And we've seen other bank like Punjab National Bank, some of the state-owned banks perform very well recently, and we would be expecting that kind of performance out of the private sector banks.
Okay, that's on the private sector banks, got it. The other space that has, just not participated in the rally much is IT, but of course there is potential for leadership there. How are they looking on the charts? Do you see any kind of catch up over the next couple of months from the IT space? And if yes, what would the stocks be to watch?
Yeah, I mean, if we look at some of the larger cap, obviously Tata Consultancy, Infosys, they still have a lot of work to do. They're kind of testing the 200-day moving average. That's, following suit with other global IT providers such as Cognizant in the US. Charts look similar. But if you look at some of the smaller cap names, CE Info Systems, that looks great, breaking out from the base. Imudra, I'm not sure if I'm pronouncing that right, but that one looks good, as well as Tech Mahindra. And I think these are the three smaller cap names that are opportunities at the moment.
Yeah, no, got that. Fair enough. That's IT services. Any other sort of names, Dean, where so much, right? I mean, in terms of a broader market, single stock action, humongous in many cases.
Yeah, the breadth of the market is fairly wide. So you've got, traditional sectors like basic material, cap equipment continue to do well. Within cap equipment, particularly, sort of agricultural related, Chemplast, Sanmar, Bayer, Crop Science, those types of names are doing well. Ratnamani Metals and Tubes, Ramkrishna Forging, these are some of the names in basic material. And then cap equipment, KEC International, GMR, Airport Infrastructure, Proj Industries. These are names that are, we're noticing breaking out at the moment. So these are great opportunities. And then, consumer cyclicals, there are some names popping up that, we haven't seen, sort of perform before. So you've got sort of auto parts makers, Signature Global, Sundram Fasteners, and then, you've got the other traditional cyclical names like Indian hotels that are breaking out. So lots to choose from, and the breadth is pretty wide.
Dean, getting back to the global construct, you said you recently changed the status on China to a downtrend. What are the other big changes? What's happening on the global front?
Yeah, in emerging markets, India, Taiwan, Korea continues their uptrend, while some of the larger markets like Australia, Japan, still an uptrend, but sort of under pressure. And so needs some consolidation there. But I would say the best performing markets at the moment that people should focus on is India, Taiwan, and Korea. Obviously, Taiwan and Korea largely driven by the tech sector. They tend to be suppliers to global sort of semiconductor and AI themes. And then India is sort of the growth of the economies that's supporting the performance in the market. So, but China is a concern. China has been moved to downtrend, and they're just not doing enough in terms of stimulus. And so we're seeing the market treading, sort of the other way as opposed to India, Taiwan, and Korea.
Dean, just one last question. If you looked at the Nifty CPSE index or the PSE index, right? I mean, it's been up same levels where they were pre-election Is there a case there? If you've, I don't know which one you looked at or if you've looked at it at all, but if you have, a case for some more consolidations, sideways action even maybe?
Yeah, I haven't looked at those very closely, but I think it all depends on, let's say the new government, what types of policies that they're going to come out with. And so far, it seems like the domestic markets as well as international investors are believing in the incumbent government and thinks that they can get things done. So that's good news. I mean, otherwise, banks will not be performing as it has been. So I think it will take time, but glad to see the breadth is widening.
No, absolutely. Dean, great conversation. By the way, one of the reasons why banks did, I mean, it's obviously conjecture, is that starting this Friday, India government bonds are going to be part of the JP Morgan bond index. Now, there is no direct impact. I mean, the indirect longer-term, medium-term impact is that it perhaps pushes down the cost of capital, interest rates, right? So one sector which gets the benefit is financials. I mean, I think, so people were scratching their heads wondering why are banks suddenly out of the blue. Last week they did 3.5%. Monday they took a break and they were back yesterday. So, markets like to latch on to reasons. This is just one of them, which is it's a big one, I mean, for the bond market. And we'll, of course, leading into it this Friday, explain what this means with our colleague Lata. So that's that. Dean, great conversation as always. Thank you very much for your time here. We'll take a break. We'll come back with our list of top stocks to watch out for with a research team that's coming up.
The last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand. But there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be in certain ways self-funding, at least for now.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of education.
Welcome back to Bazaar Morning Call. Things have been looking really good for the bulls. In fact, the market has been, from the 4th of June lows, the market has just been tearing away now. But the Nifty implied opening this morning is suggesting some consolidation. Let's see which way it goes. But for now, plenty of stocks in focus. So let's get straight to it. Our research team is joining in. First up, Bank of Maharashtra and Central Bank are two stocks you should be looking at. Sapna is joining in to give us more details on that. Sapna, over to you.
Yeah, hi. So basically, a 5,000 crore QIP issue is likely by Bank of Maharashtra, sometime in the current financial year, and this is likely to help the bank meet the 25% public float norm. As we are aware, there has been pressure on 5 public sector banks which remain in terms of achieving the the stipulated public float norm as has been stated by the government from time to time. The current exemption this comes to an end in August. This is what the plan is. Similarly, Central Bank also, they are planning to do a 2,000 crore QIP from both purposes, in terms of growth capital as well as in terms of trying to meet this stipulated public float norm. So that's likely. And what the sense we have been given from government is that they are very much in favor of this kind of a calibrated fundraising, to serve both the purposes, growth capital as well as bringing the government equity down over a period of time. So it's also likely that the current exemption that these 5 banks are enjoying at the moment from the 25% public shareholding norm, that also is likely to be extended by another 2 years.
Thank you, Sapna, for that important update on PSU banks. Moving on to SBI cards, Abhishek joins in with details. Abhishek.
Well, Rima, it looks like you went on a holiday and the spends have increased a lot for the credit cards on a lighter note. So for industry, for the month of May, the credit card spends have grown at 17.3% YOY and about 5.5% on a month-on-month basis. The card issuance has slowed down a bit to 17.7% YOY and about 0.74% on a month-on-month basis. Average spends per card is down about 0.4% YOY, but they are up 4.5% on a month-on-month basis. So for SBI card, the total credit card spends have increased by 10.8% YOY and about 7.2% month-on-month. The card issuances continue to slow down. They have grown at 11.5% YOY and about 0.6% month-on-month. Average spends is down about 0.6% on a YOY basis, and they are up 6.6% month-on-month. So in terms of market share, they have lost out market share with respect to total credit cards. It's down to 18.5% versus 19.5% that they had on a YOY basis, and even on a month-on-month basis, they have lost market share by 2 basis points. Total spends, their market share is at 15.98%, a decline when you compare to YOY number of 16.9%, but they have gained a market share on a month-on-month basis anywhere between 25 to 30 basis points. Back to you.
Okay, Abhishek, thanks a lot for that. So, Rima, seems like you're maxing out your credit cards.
I wish.
On your holiday.
I wish. But, Abhishek, do stay on. We're going to come to you for more stocks. Before that, I just want to talk a little bit about MapMy India, or CE Info Systems. Now, today, promoters, what we picked up from sources is that the promoter, Rakesh Kumar Verma, is likely to sell 5 lakh shares or 0.9% equity via a block deal. The floor price is at a 5% discount to where the stock closed yesterday, and the total offer size is about 115 crore rupees. The promoters have about a 52.9% stake as of the March quarter. And remember, this is a stock which has surged. Yesterday was flat, but in this month itself, particularly last week, the stock surged after Goldman Sachs initiated coverage with a target price of 2,800. So that, it's up 25% this month, and now the promoters are looking to sell about a 0.9% stake in the company.
All right. Rima, thanks for that. More stocks with news flow. Sanghi Industries and M&M Financial Services also in focus. Back to Abhishek. Abhishek, morning.
Good morning, Prashant. Sanghi Industries, there is an offer for sale. So seller is promoter, that is Ambuja Cement, as well as the founder, Ravi Sanghi. So offer size is about 90.9 lakh shares, which is about 3.5% of the outstanding equity. The floor price is about 90 per share, which is at a steep discount of 12% to yesterday's closing price. So total offer size is about 82 crores that they have with respect to, if you take into consideration the floor price. M&M Finance resignation has happened. Their CFO has resigned. His last working date will be 31st of October 2024. That will be to pursue his personal, social and professional interest as well. He'll be there till 31st October, which means that he'll be there for Q2 FY25 result of the entity. Management has highlighted that they are in the process of identifying a suitable candidate for the succession plan that they have for the CFO. Mr. Karve had joined MMFSL as CFO in September of 2020, coming in from Marico, where he was a group CFO. Back to you.
Okay, thanks a lot for that, Abhishek. Well, let's go across to Vamakshi now to talk about some more stocks that are in the news. Vamakshi, good morning.
Well, good morning, Sonia. Let me first take you through some of the textile names that will be in focus with the likes of Gokuldas Exports, Arvind Fashion, AB Fashion. All of these counters are expected to open higher today, and that is because Textiles Minister Giriraj Singh yesterday said that they are now considering extending the 10,000 crore PLI scheme to the garment sector, and this is being done in order to boost manufacturing and exports. The market size of the Indian textile industry, in his opinion, is around $165 billion, and his aim is to take it to $350 billion. The ministry is framing a roadmap to move ahead of China in the sector, is what he says. He further adds that there is a huge opportunity in exports, and the industry should ideally target nearly $50 billion worth of shipments in the coming years. So overall, this bodes well for the textile sector. Expect all of these stocks to open higher today. Lastly, let's also focus in on Borosil. The counter was in focus yesterday, and it continues to be in focus today as well. The company has raised 150 crores via QIP. The issue price is at 318 per share, which is coming in at a discount of almost 8% to the closing price yesterday. However, it is important to note that it is also lower than the floor price of 331.75 per share. This QIP is expected to lead to an equity dilution of nearly 4%. However, there are some marquee names that have entered the stock on account of this. DSP Small Cap Fund, Society Generale, Morgan First, Morgan Stanley Asia, Quantum State Investment Fund are some of the allottees which have been allotted over 5% of this QIP. Overall, because of the equity dilution, my sense is the stock is expected to open lower today.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Bank of Maharashtra, Central Bank, Gokuldas Exports, Arvind Fashion, Aditya Birla Fashion. Keep all the textile stocks on your radar. Stocks with negative news flow are SBI Cards, MapMy India or CE Info Systems, Sanghi Industries, M&M Financial and Borosil. But now let's get to the commodity action from overnight. Manisha Gupta joins in now. Hi Manisha, good morning.
Morning, and thank you for that, Hima. Well, the strength in US dollar index, which is now trading at a 2-month high, clearly seems to be some putting pressure on commodities. So when you look at the Asian markets, the screen right now, many of these commodities are trading in the negative. I'll start with the precious metals because there's a sharper cut onto this one. So while gold fell a percentage point, silver fell 2% in the overnight market. It also has to do with the industrial commodities where the copper prices fell another 1.5%. That one is trading at a 9-week close right now. Aluminum and zinc prices fell 0.5% to 1%. We also have crude oil prices, which had been holding up for the last couple of weeks now. That has also seen a decline of more than a percentage point in the overnight market. The crude has declined because the U.S. inventories have seen a build-up, while, of course, the supply disruptions due to geopolitics is keeping the prices supported. But all of these markets will watch out for the U.S. First quarter GDP numbers that come in tomorrow, and then, of course, the inflation data that comes in on Friday. So ahead of that, it's a choppy market and some profit-taking as we head towards the month end.
Okay, Manisha, thanks a lot for that. Well, let's do one thing. Let's take a short break. Up next, we'll be joined by Devin Choksi of DR Choksi FinServe to discuss the fundamental stock analysis. Stay tuned.
Right? If they're within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Unifor, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Unifor?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think it.
Welcome back. You're watching Bazaar Morning Call. It's a Wednesday morning. The US markets closed up with strength. Yesterday, Indian markets were very buoyant, closing at record highs for the Nifty Sensex, even the Nifty Bank. The mid-cap index hit intraday record highs, but by the close of trade, we did see some profit booking, and the mid-cap index ended with a cut of close to about 0.4%. Deven Choksi is now with us on the show. Deven, the story in the market has been about the comeback of banks, the catch-up rally that's currently taking place. Sapna was just putting out that story about how PSU banks are likely to see some QIPs, which will help bring down the government stake. We could see that in Bank of Maharashtra, Central Bank of India. Your thoughts on this particular development, how it impacts PSU banks?
Good morning, Nima. Well, certainly, I think this is a time when probably most of the promoters should be catching out, given the kind of rally that the market has given to individual stocks, be it in the public sector space or be it in the private space. Most of the companies, even in private space also, when you look at, I think some of the companies, I think they are quoting at a significantly high premium valuations. And that's the time when the promoter would probably take some money off the table from this company. Is not very surprising. At the same time, coming to the public sector banks in particular, there is a significant amount of appetite also coming in from the financial investors. And the financial investors definitely want to enter into these stocks, given the kind of long-term prospects that one is experiencing in the economy. So from that perspective, if the government is selling part of their stock and cashing out part of money at a total valuation of PSU banks, I'm not completely sure about the number, but somewhere around 45 lakh crores kind of a market cap of all the banks put together. Given that situation, even if government so decides to cash out, I think 2.5 to 5% also out of this cap, it's a significant amount of money that we are talking about getting collected into the balance sheet of the government. So from that perspective, I think it serves the purpose for the government. On the other side, I think these banks are quoting not at very expensive valuations. So somewhere around 1 to 1.5 to less than 2 times price to book value, at which I think these banks are quoting at. So from that perspective too, I think the financial investor would see the limited downside in these stocks, at the same time opportunity to make money. So it's a win-win, I guess, I think, to cash out at this juncture and accommodate some new investors into the portfolio of capitable of the company, respective companies.
Okay. In the private sector space, Deven, hi, good morning. I wanted your thoughts on ICICI Bank. It's been a big mover, 12% higher from the 4th of June lows. Do you reckon that there could be more upsides here in ICICI Bank, and what's the best way to approach it?
Yes, Sonia, good morning. Well, on one side, I think the HDFC Bank started moving up, and as a result of which, I think it is naturally putting some amount of weight into the banks. And as a result of which, the investors would also, I think, do the weight allocation accordingly. So from that perspective, I think some of the banks that you like, ICICI or Axis for that matter, even IndusInd, I think those banks are likely to see the action purely because of the weight allocation, weight balancing, which may happen into the portfolios of investors. Other fundamentals remain equal. I don't think that, I think they have changed as far as I think the fundamentals are concerned. On the contrary, most of these banks are available at a valuation which is not so expensive compared to the overall market. So I believe that I think likes of ICICI, likes of HDFC, SBI, they are relatively, I think, available at a compelling valuations for investment. All these banks are also suggesting that in next 4.5 years time, the size of their balance sheet is going to grow double, given the kind of AUM growth that they are experiencing. And at the same time, I think some amount of monetization possibilities from their subsidiaries is not ruled out in this 3 to 4 years time. So given these actions on plan, I would think that 25-30% kind of an upside into respective stock is not ruled out for 12 to 15 months time.
There have been lots of stocks to discuss, but I just want to pull back a little bit, Morning, and ask you slightly near-term market, broader market question. So the budget is around the corner, and it seems that after the election results, right, where the victory for the incumbent was weaker than expected, and now they got allies, etc. Markets just sort of clean moved on, right? We're talking about new highs, both for the Nifty, for the Bank Nifty. There's been really no price to pay except for that one day. Now think of the other sort of the corollary, right? If you had the big numbers and an absolute majority, by now we would have had that 100-day agenda, etc. All of that would have come through with full force, right? Which so far we've not. So I'm just saying that do we need to kind of be mindful of some of that as well? The first indication we will get about the trajectory for the next 5 years is going to be the budget, which is about a month away, directionally speaking. And we're all, of course, assuming that it is absolutely business as usual. So just your thoughts and what it means for the market, if anything at all. Go on.
Yes, Prashant, good morning. Well, you're spot on. Actually, I think there is nothing more to think about as far as the budget is concerned, because more or less, I think the fabric is woven. You are likely to see the continuity of the allocation of expenditure, which the government has spelled out even in the interim budget. To me, the interim budget was almost like a full budget, I think, in which they covered almost all areas. But having said that, I think they may probably, I think, want to increase some part of the allocations in the areas where probably I think it matters most, particularly for the generation of employment, as the agenda may be, which is infrastructure and agriculture to begin with, where there may be, I think, some tinkering with the allocations. Additional amount of money could get allocated from whatever they had shown in the interim budget. So from that perspective, the market has taken a note of it, and according to me, I think market is moving on with that particular spirit that budget is going to be the growth provider budget going forward. Well, I guess I think everybody wants to see a correction in the market at this point of time because the valuations have scaled up, I think, to a good amount of premium level. Particularly in the mid and small cap companies, I think somewhere I think it is unimaginable amount of premium valuations have been given to some of the stocks. Whereas on the other side, I think the frontline stocks into the Nifty basket and all, they are available reasonably at an attractive valuation given the growth that the respective companies are assuming in that. So from that perspective, I think it would not be very surprising if you see the profit booking in the premium valuation and money shifting to some of the frontline stocks, given the kind of compelling proposition that they are offering at this point of time. That would not be very surprising. Another aspect is the liquidity. The flow of money into the market is continuing. With this flow of money coming in, even slightest of negative will not live for a longer period of time. I think this particular negative will once again overcome because of the flow of money is strong and investor wants to deploy that money back into the market. So this equation is suggesting that liquidity is intact. When the liquidity is intact and the fundamentals are intact on the other side, I think the market will have limited ability to do the correction. And maybe I think every correction will be bought into by the select investors.
Okay. Devin, we'll come back to you in a bit. In the meantime, Anuj is also joining in for a quick trade setup. Anuj, good morning. It's records galore for the market and especially led by the Nifty Bank, a point that you were making a couple of weeks ago as well. This is like a fast train, right? Momentum is picking up so much in the market. You think it could continue?
Morning, Sonia. It's about, it reminds me of my early days in Mumbai. You come to the station, there's a local which is running and, the call that you need to take is run after that local or wait for the next one. It's that kind of market right now. But, the other thing is that the market's Bahubali is back, literally. HDFC Bank, that's the one which has carried the market over the last few days. HDFC Bank is now just 2.6% away from 52-week high. and from the recent low, it's rallied 25%. That's the kind of rally that we have seen. And it all started when the meme factory got active in HDFC Bank. Yesterday, delivery volume of 3,500 crore. And in 5 days, delivery volume of 13,000 crore. That also explains why this FII momentum has turned on the positive side, and FIIs have turned buyers. In fact, HDFC Bank alone has been responsible for 1,500 points of the recent Bank Nifty rally. Now, if you look at the trade setup, there are a couple of points that I want to highlight. First is the FII long short, because yesterday also longs were added. 47,000 longs were added. And what it means is that we are now at 61% net long, which is almost historically the highest. Just a month back, we were at historically high short positions. We are now almost as historically high long positions and 1.4 lakh contract long. And the other one is Nifty put call ratio, which has gone up to 1.38, which is normally a peak zone. The only reason I want to give a benefit of doubt is because we're just 2 days away from expiry. So perhaps on Friday, we'll relook at both these numbers because the momentum is extremely strong. On the Nifty, the first resistance is 23,750 to 23,800, which is yesterday's high and also options based. The bigger resistance is 23,950 to 24,000, psychological level, of course. Support comes in first at 23,650 to 23,700 based on the hourly pivots, and then 23,550 to 23,600, yesterday's low, and based on options. The Bank Nifty has the monthly expiry today, and the momentum is, of course, with the bulls. 52,740 to 52,800, the all-time high zone, perhaps could get retested. And then the bigger resistance comes in at 53,000 to 53,100. The support comes in at 52,250 to 52,300, and then 51,850 to 52,000. Quote of the day today, perhaps, now I don't know who wrote this, it's perhaps all of us. Wednesdays are like Mondays in the middle of the week.
Okay. Well, a lot to ponder. Anush, thanks very much. It's a lovely quote. We'll take a quick commercial break, I think, here. I think before that, actually, we have the Momentumizer stock of the day. Mangalam is here with the stock he's putting, rather shining the spotlight on. Mangalam, morning.
Good morning. So the stock that I'm looking at is Raymond. Definitely has a fair amount of momentum behind it. In fact, yesterday as well, the stock hit a fresh record high. In yesterday's trading session, it was up around 6.5%. This week, it's up 10%. This month, it's up 26%. And if you, map the stock price move for this year itself, it's up 61%. And traded volumes as well yesterday were 4 times what we usually see in this stock. And over the last 3 trading sessions, something's definitely up with Raymond. Why do I say that? Because I looked at the delivery volumes over the last 3 trading sessions. Yesterday was close to around 2.7 lakh shares. Day before yesterday was close to 2 lakh shares. And the previous trading session, which was Friday, we saw a delivery volume of close to 2.6 lakh shares. And this number typically is just around 30 to 40,000 shares on a regular day. So there has been marked increase in delivery. The stock price move is telling you that. And volumes are also increasing. So what are the key triggers that we're looking for in Raymond's? One would be growth in real estate business. Likelihood of textile sector PLI, we had Vamakshi say that earlier as well. Growth in their ethnic wear business, which is a fast-growing brand for Raymond, and improvement of balance sheet. They have over 4,000 crores of debt on their books. So deleveraging that would be extremely crucial to watch out for. But most important trigger, what we will keep an eye out on is tomorrow. They have the annual general meeting, and the shareholders will decide on the reappointment of Gautam Singhania on the board. So those are a couple of things that we'll be watching out for the stock at a record high.
Thank you very much for that. Proxy advisory firm IIAS had advised the shareholders to vote against the reappointment of Gautam Singhania as the chairman and managing director. But the AGM is tomorrow and all eyes will be on that. Deven, come in on Raymond if you have a view.
No, since we don't have the coverage on the company, only can computing.
Okay, you don't have a coverage on the company. Got it. The other stock, Devin, I wanted to talk to you about was Tata Motors because, there is a very interesting JP Morgan note this morning where they have a target price of 1,115 and they talk about how the retails in the month of May were very strong and also there is perhaps re-rating that we could look at in this stock. It's consolidating around these 1,000 rupee mark, but do you think that there could be more upsides for Tata Motors in the near term?
Yes, Sonia, the underlying proposition for segregating the commercial vehicle business and the passenger vehicle business and concentrate significantly on both the businesses is the name of the game going forward for this company. In my viewpoint, I think whatever in previous years, I think the mistake would have happened in the business of the company. Probably, I think they are trying to correct it by way of keeping a separate focus on both these areas of business. And that is what is exciting as far as I think the outlook on the company is concerned. In my viewpoint, I think the GLR portfolio, Tata Motors electric vehicle portfolio, and also the ICE and flex engine portfolio that they have on the passenger vehicle side, I think it offers a reasonably good amount of clarity with the zero debt, and at the same time, JLR also proposing to get out of the debt by the end of this financial year, is suggesting that the passenger vehicle portfolio is likely to get the higher amount of weightage into the portfolios of the investors. The Hyundai IPO is going to be a catalyst wherein I think you are likely to see additional flow of money coming into the respective portfolios of the investors. And that is where probably higher allocation of money would take place. So both on the fundamental side of the activity and at the same time, I think the market side of the activity wherein the new money is getting into the portfolio from the investor will keep this particular stock active as far as I think the market price is concerned. To me, I think the 20-25% kind of appreciation in the stock price is not ruled out at the current levels.
All right. Got that. Devin, we'll let you go. Thank you very much for being with us here on CNBC TV18 as always. Good conversation. We'll take a break. We are back in a bit with our technical experts. So trade some trading ideas with Mitesh and Sudarshan when we return. Stay tuned.
GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application.
Right.
Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with Nvidia becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first,
Okay, welcome back. There's 7 minutes to go for the pre-open session. We have Mitesh and Sudarshan who are with us with what they are making of things and the big move that we saw led by banks. Gentlemen, good morning. Great to have both of you here as always. Mitesh, so let's just start with the Nifty Bank and how much gas is there in the tank, and what could what are targets for the Nifty Bank and which are the strongest names there?
Good morning, Prashant. Yesterday we had a target of 52,600. We got nearly around those levels, 52,740 being the high. And now I'm looking at a slightly revised target. Though the Nifty Bank is in an overbought situation, the trend is still on the upside. So 53,250 is the near-term target, then possibly 53,500. But my only worry is that the PCR for the Bank Nifty is also about 1.6 or so. And the stocks and the index look overbought on the hourly chart. So maybe you'll get a day of pullback. The idea is to maintain long positions. Don't buy into it if you've already missed the rally. And, look at possibly getting into individual stocks.
Okay, look at getting into individual stocks. Got that. Sudarshan, what about you? What's the best way to approach the market now? Record highs, that's something that continues. And what are the stocks that you're looking at today?
Yeah, good morning. For the last 2 days, I've been saying focus on the Bank Nifty and leave the Nifty alone. Now, the Bank Nifty obliged us, but the Nifty also went up. It's not always possible to catch every move. If we were with the Bank Nifty, that itself was enough. Now, today, I think the markets can easily become choppy. The Bank Nifty is having its monthly expiry. The Nifty is at a point where a choppy market condition is imminent. So my suggestion would be to avoid the indices and, as Mitesh said, focus on individual stocks. Reliance is a buying opportunity. Consider buying Reliance with a stop under 28.36. PI Industries is a buy with a stop under 37.20. I have one intraday short. Remember, short selling should be done only intraday. Coromandel International is a short with a stop above 15.50. And finally, Bajaj Finserv is a positional buy. Of course, it's there for the intraday trade also. Buy with a stop under 15.40.
What about you, Mitesh? What would your stock ideas be?
I have a mix of buys and sell. I think, the oil refining companies look weak, and I have a sell on BPCL here with a stop at 301.5 and look for a target of 284. Some PSU names also look like giving a pullback or a correction, led by profit booking. So NMDC could be sold for a short-term downside target of 245 and keep a stop at 265. On the buying side are some financial names. Bajaj Finserv with a stop at 1584. Look for targets of 1650, and HDFC Life with a stop at 578. Look for targets of 615.
Both were sort of strong movers in trade yesterday as well. We'll take a quick commercial break here. Thanks very much for joining in with those trades and recommendations. We'll return with, of course, the pre-open session, which is just 4 minutes out, and more on market. Nitin Agarwal of Motilal Oswal Financial Services will also join in. We put the spotlight on what else but banks, right? The big move that we've been seeing, and we'll ask him what's the sort of dominating driver and what next.
It shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now Nvidia is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast Nvidia is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy, well, implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
You've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister.
Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. Let's get some F&O cues going. Rajesh Palvia, the Vice President, Technical and Derivative Research at Axis Securities, is joining in. Rajesh, hi, good morning, and thanks for being with us on the channel. What are your thoughts on how to approach a market when it hits record highs? Because, people who are on the sidelines are still perhaps a bit skeptical about the move that this market has seen. Your thoughts in the F&O space, and also what are the stocks to look at today?
Good morning, Sonia. So we are on the last leg of this series expiry. So looking at the overall structure, still we believe that this momentum can exceed further, and towards the expiry for this monthly expiry, we may see further more round of short covering action. Both indices have witnessed short covering in previous day. Bank Nifty and Nifty both have almost closed at all-time high trajectory. the way all the constituents of Nifty and Bank Nifties are performing at this moment, that clearly shows that, here we can see, further more upside for both the indices. So for Nifty, till Nifty is holding about 23,600 zone, I think one should remain on the long side of trade. Though market is not giving any kind of significant corrective move, so still left out feeling is there in the market. That's why we are seeing that this rally is still continuing, and though we have staged this rally, but still buying action is there in the market. So 23,600 is the important support area. Till we are holding above those level, I think trend is likely to remain on the bullish side. Possible target for Nifty we can see towards 23,850 to 23,900 in the continuation of this up move. So to play this up move, we are initiating here to buy 23,750 call option, which was closed at around 89 rupees. So if you get any kind of dip in this call option towards 75 or 80 kind of zone, you can buy this call option for upside target of 130 to 140. Keep your stop losses around 45 rupees. For Bank Nifty, though we have seen very strong rally in last couple of days, if you get any opportunity towards 52,300, 52,400, that's again attractive level based on the put-based concentration to go long in Bank Nifty also. So our stop loss for Bank Nifty is placed at around 52,200. Till these levels are intact, one should remain on the long side of trade. Buy on dip should be your strategy. And maybe once Bank Nifty again manages to cross above 52,800, then this rally can extend to 53,400 also. So both indices are looking bullish. Buy on dip should be your strategy. On the stocks front, Apollo Tyre is looking very promising. The way stock has moved up in the last 2-3 trading session, long built up is there. Stock managed to give breakout of its previous swing high. So we believe that this rally can extend further. 540, 545 could be the next target for the stock. Keep your stop loss at around 509. The second stock that we are focusing is from housing finance sector, that is LIC Housing Finance. Very strong buying action in most of the housing finance stock. LIC Housing Finance managed to give breakout of last 4 days consolidation range. Looking at the structure, we are projecting target towards 790 to 800. Keep your stop loss at around 755. And the third stock is from banking space, that is HDFC Bank. Very strong buying action. Now stock is approaching towards its December 2023 swing high. We believe this rally can extend further, and stock may manage to give breakout of this swing high of December 2023. And we are projecting target towards 1760 to 1780. Keep your stop loss around 1690.
Okay, well, thanks a lot for that, Rajesh. Appreciate your time here. That is Axis Securities on the F&O space. But let's move on and talk about banks, which were the big movers in the last couple of days. Nitin Agarwal, Senior Group Vice President and Head of BFSI Institutional Equities at Motilal Oswal Financial Services, is joining in. Nitin, hi, good morning. Always good to see you. Banks have suddenly made a comeback, and some of the laggards like HDFC Bank have now come back full throttle, right? But what is leading to this up move, and where are we on the valuation argument now? Is there more upside both in terms of growth and valuations, especially for private sector banks?
Yeah, hi, good morning, Sonia, and thanks for having me. So yes, there has been definitely a good action that we have seen in private banks, and with HDFC Bank participating in that and in fact leading the rally. That has created the space overall in terms of the other larger banks also. So there was never a worry around the performance of these banks. We were seeing very strong return ratios, loan growth back to back. If you look at the last 2 years, was strong for the system as such. And now going forward in FY25, we are reaching an inflection point. So last 3 years of earnings growth deceleration that was going on is now going to bottom out sometime in the second half of FY25. And that is going to be, I think, watched very closely, because beyond that, you will be looking at an acceleration in earnings. So in fact, our estimates, if I talk about like FY25, if we are looking at a 14% growth for the private banks, then this number will move towards 16 to 17% in FY26, and which is therefore generating a lot of interest in the sector now. And valuations, as you talked about, yes, the entire gap that get narrowed between PSU and private is now again beginning to take a relook, and which is where private banks are looking very attractive, both from the growth standpoint and as well as how the asset quality trends are still emerging on the ground. So which is where we are still projecting a very healthy levels of profitability to continue in the coming 2 years.
Nitin, particularly zeroing in on ICICI Bank, because yesterday you all raised the target price on ICICI Bank to 1,350, and this call came after you met with the management of ICICI Bank. So what is it that they said that made you more optimistic on ICICI Bank?
Yeah. So ICICI Bank clearly has been delivering the best-in-class performance in the prior years. And we see that this trend will likely sustain at a very healthy level, while the earning growth from the optical standpoint, yes, will moderate, given that the margins have come off from the highs. But apart from that, if you look at the way the bank is positioned in terms of overall growth, in terms of how the asset quality is trending, and in fact on the CD ratio also, wherein ICICI Bank is on the lowest among the larger peers. We believe that bank is well positioned to garner the liabilities and fund a healthy high teens growth. And alongside now, incrementally, bank is also looking at operating leverage as a big earnings driver. In the prior 3 years, if you look at the OPEX was growing somewhere at 21-22% average in the prior 3 years. Now, in our estimates, we are somewhere around 15% on the OPEX growth, but we believe that there is a room for bank to further control it down, and which is where we are confident that the bank will deliver a healthy double-digit growth even in FY25 when the margins are going to be like on the lower end of the curve versus the last 12 to 18 month period.
Nitin, hi, morning. Prashant here. Some of these factors, right, has been there, you would agree, for some time. But we were waiting for people to come and buy some of these stocks. So is that sort of more to do with return of foreigners? And of course, they sold the most in this sector, so there's maximum room to go in as well in that sense. Just weigh in there, or are there any other triggers as well? There is this index inclusion in global bond indices. India bonds will be part of the global indices starting this Friday. I mean, it's a medium long-term trigger, but it's an important one. Hopefully reduces cost of capital overall, sort of going forward. It's positive, financials generally. Just wanted your thoughts there. Away from the fundamentals, and is it just sort of return of foreigners more than anything else?
I think yes, Prashant, that is quite possible, because you cannot see such a big move in private banks without FI buying. So that would have definitely made a good contribution to this entire move. But if you look at last 3 years, the private banks were living under the overhang, especially the last 2 years, around credit growth, the sustainability of this level of credit cost, and last 12 to 15 months, even on the margins, which have been on a one-way decline. Now, we are somewhere reaching out on the bottom on most of these things. The credit growth, as things stand today, still remains strong. The latest print from the RBI still implies a 16% growth, which is where we are looking at a full year number to be somewhere close to 14.5, which was in question 3-4 months back. So that looks to be very sustainable. And secondly, on margins, some banks have already reported NIM expansion in the prior quarter. And until at least the rate cycle turns, we are therefore looking at more or less the margins to remain range bound with a good degree of stability to continue on margin front. And thirdly, even on the asset quality side, things are trending well on ground. So unlike some of the smaller retail banks or say SBI cards as such, wherein delinquencies have been higher, the larger banks are still placed well on the asset quality and are indicating stable trends to continue. So this thing, I think, is now being taken more and more note of, as I said, because this is a year wherein the earnings are going to bottom out and you are looking at earnings to accelerate from FY26. So all these things together are like bringing in more interest in the sector.
Yeah, the other, just a brief comment, then if you will. So there are reports of farm loan waivers, right? There's Telangana, there's Jharkhand. With Ujjivan Small Finance Bank, which lowered their growth estimates, increased their credit cost, etc. guidance recently. Maharashtra goes to polls later in October this year. It's an important state. Will some of this need to be watched, especially with banks, especially with the PSU side, where exposure to farm loans is much higher? Just your thoughts.
Yes, this will be, of course, an important data point to keep a track on, because while we cannot really say that these waivers will result in a higher delinquencies or credit cost of the banks, because eventually the loans will get repaid by the government to them. But this does question the credit culture that will continue, and therefore the smaller lenders, especially the MFI, we have seen that even the borrowers at times stop making payments to those lenders as well, and which is where the delinquencies picks up. for them. And therefore, we need to keep an eye on it. And incrementally, not just this, but even the ECL, which will come into being from next fiscal. The filing guidelines on that are awaited. So from both these things, I think, are very important when you look at an investment from the PSU banks as such. So pretty important to watch out for both these things.
Okay, thanks. Thank you for joining us. And, it was nice speaking to you to understand what's driving the banks and the way forward. Well, for the market, looks like it's going to be a quiet start. It's flat with a bit of a positive bias, but we've had a fair share of action yesterday. So let's see which way things go today. Axis Bank is actually a big mover in pre-opening, up almost about 0.7%, followed by ICICI Bank and a couple of other names as well. But Sudarshan Sukhani is back with us. Sudarshan, what's the big call at 9:10?
Well, consider buying Bajaj Finserv with a stop under 1540.
And Mitesh, what about you?
I also have a buy of Bajaj Finserv, but I'll choose a HDFC Life for targets of 615.
Okay. In fact, let's stick with the financial space. There is a note coming out from Goldman Sachs on the farm loan waiver that we've seen in Telangana, the outlook on MFIs given the rising stress. Abhishek joins in with Goldman Sachs' take on it. Abhishek.
Well, Goldman Sachs has written on the banking sector. They say that rising concerns around the health of rural lending, especially the farm loan and the MFI in the financial system, is a pain point. So one MFI player, which is obviously Ujjivan, has lowered their FY24 guidance and raised the credit cost estimate with stress building up in certain states. So NPLs in states like Maharashtra is as high as 14 to 27% for PSU banks. So if farm loan waiver is implemented, earnings will come under pressure for banks like SBI, ICICI Bank, Kotak Mahindra Bank, for NBFCs like MMFSL and L&T Finance, as well as for companies that have MFI exposure like Bandhan Bank, IndusInd Bank, Credit Access Grameen, as well as L&T Finance. So they maintain their preference with respect to SDFC Bank being their top pick. Kotak Bank, Axis Bank and IndusInd Bank amongst private banks is what they favor to. Amongst NBFCs, they favor Credit Access Grameen, L&T Finance as well as Shriram Finance. Now they say that bureau data does suggest, and management commentary also suggests, there is a deteriorating asset quality environment and over leveraging across states. Now we had explained in FinStreet that customers are leveraged as high as 6 to 7 times from a single borrower or lender. So select states where shares of borrowers having more than 3 lenders is higher than the national average of 14%, includes the states like Tamil Nadu, Odisha, Bihar, Kerala, Karnataka, UP, Rajasthan, and bureau data does suggest that there is stress rising in various pockets like those who have less than 2 lenders or 3 lenders or 4 lenders, etc. Back to you.
All right, Abhishek, thanks very much for that. So keep an eye out on this as well, even as we look at what Bank Nifty can do on the upside. Important to stay cognizant with some of these risks at the margin. Now let's focus on Dalmia Bharat, where I think there are a couple of downgrades which have come through. Hormuz is here with details. Hormuz, morning.
Morning, Prashant. And there's a couple of downgrades that have come in for Dalmia Bharat, the cement player. And first one coming from CLSA, where they have downgraded the stock to an underperform from their earlier rating of accumulate. Now this is the second downgrade that has come from CLSA for Dalmia Bharat in at least 2 months, because in April they had downgraded the stock from accumulate from buy, and the April price target was around 2600. Now they have cut that down to almost 2050. Now they say that sustainability for Dalmia Bharat is on track, but the growth remains uncertain, and that is because of the fact that the JP Associates insolvency admission, since that has happened, the medium term capacity targets which they have set, which is around 75 million tons for FY27, now that seems under threat and it looks difficult to achieve, is what CLSA is saying, and hence they have downgraded the stock. Of course, they have said that the organic expansion remains on track, but the other expansion targets that they have set look difficult to achieve. The other one comes from Nomura, where they have downgraded the stock to a reduced rating from an earlier rating of buy, and they say that they have downgraded the stock based on the uncertainties over the JP deal, because the binding agreement doesn't hold anymore, the limited capacity expansion that the company has undertaken, and the loss of market share that Dalmia Bharat has seen in some of its core markets. And they have cut their FY25 to 26 estimates by around 30, EBITDA estimates by 31% and 30% respectively, and they say that they see limited re-rating potential if they strip off the JP assets for Dalmia Bharat, and as a result they have cut their EV to EBITDA target multiple to 11 times from 13 times earlier. So a couple of downgrades coming in for Dalmia Bharat, the stock set to open in the red.
Okay, thanks a lot for that. So that's Dalmia Bharat, but another stock that I'm looking at this morning is Tata Motors. Now, JP Morgan has put out a note on Tata Motors, very interesting one there. They have an overweight on the stock. They have a target price of 1115, so that's a big upside to the current market price. They talk about how the retails sales for JLR in the month of May was very strong, up almost about 21%. And across most spaces, whether it is, US, EU or China, JLR retail sales have outperformed a lot of its luxury peers. So that's a big positive that they're looking at. They also say that the stock could see a re-rating over the medium term because not only is the business improving for Jaguar Land Rover, but the balance sheet is also improving overall for the Tata Motors, for the Tata Group. And hence that's something that they like. But here's the first tick on the index, by the way. It's absolutely flat on the opening bell, but holding on to the 23,700 mark on the Nifty. The mid-cap index is up almost about 100 odd points, so that's where all the traction has been. But largely quietly positive, you'd have to say, for the market. Sensex holding pretty above the 78,000 mark. What's gaining from the front, the Bank Nifty, by the way, is up about 20 odd points, so just consolidating with a positive bias. ICICI Bank is the star of the show, up about 1%. You have a couple of other banks, Axis Bank that's in the green as well. And the other space that's looking good is some of the consumption names today. So HUL, Nestle are both up about anywhere between 0.5%. Ultratech Cement is up about 1%. LTI Mindtree is up 0.6%. And TCS is also gaining ground, up almost about 0.3%. The market has now dipped a tad bit into the red. It's flat actually, just with a little bit of a negative bias. What's dragging the market lower is Hindalco, which is down 1.5%. Shriram Finance is down 1%. ONGC, Bajaj Auto, Apollo Hospitals, Dr. Reddy's, and Tata Steel are a couple of other stocks that are trending in the red right now. JSW Steel as well is down about 0.5%. It's a nothing sort of opening for the market, just consolidating around these levels of 23,700, which is not a bad thing given the kind of run we've had.
Lots of individual names as well. I mean, if we can pull up Vedanta. Vedanta is down about 2.5-3 odd%. There's been some talk of a block, so we'll see if that's going through today. 14 rupees a week. It's been weak. It was weak yesterday as well. Nimesh was highlighting that 440 nearly on Vedanta. Look at Mazgaon Dock, which is on the upside now. Mazgaon Dock is the biggest volume-led gainer. It's up 5%. And Garden Reach is another one. Shipbuilders 3.25% on Garden Reach as well. Bharat Defense is up about 2%. So that's about 1578 or so on Bharat Defense. I mean, so that's a clear move. PNB Housing, I saw an initiation from IIFL, 2% higher, 799. PNB Housing, was doing very well right after the election results, but then it had a big sell-off, I think, in the second half last week, trying to come back to 800 kind of levels. Time Technoplast is up 3.5, just trying to spot things with volumes here. We've got Wockhardt Pharma, which is up 3%, but no volumes. I mean, so it's a pretty short list of volume-led gains today. So I'll look at what's down. MapMy India is down 3%. That's, of course, the block, 0.9% block that we were highlighting. So 23.43. MapMy India was up almost 23% last week. Max Health is down about 2.5%. It's got large volumes in it. NMDC is down about 1.5%. NMDC, I think Citi this morning was basically indicating that there is a price cut which is imminent from NMDC. So they have a sort of call on that one. Craftsman Auto had a big 13-14% move yesterday. It's pulling back 4% right now. So stocks at about 52.40. And I think Ujjivan Small Finance Bank is down another 1%. M&M Finance is reacting to that news of CFO resignation, 1% lower. GAIL is down 1%. TVS Motor, Bajaj Auto, Hero MotoCorp. I mean, actually, the auto names are all down between 0.5% to 1.5% at this point in time. So I think, at least to begin the day, there is more volume on the downside with stuff. Wow, look at Vedanta. If we can have Vedanta back up, 5% lower, 3.3% of equity has changed hands, and that's a large cut which has suddenly materialized. It was, I think, it went down to being down about 6% on the day from yesterday's close, but it's recovering a little bit, but still weak, 4.5%. It's a big block which has gone through. And Nimesh has been highlighting that. So 3.3 odd percent. We'll have Nimesh back up to talk about this one and put this in perspective. But Rima, more.
Well, on the way up, Amara Raja continues to see buying from yesterday. It's up close to about 4%. Its week-to-date gain in 3 days is now 21%. But Exide, on the other hand, is absolutely flat. So Amara Raja continues to play a bit of catch-up in terms of the valuation after that technical tie-up that they did yesterday for lithium-ion batteries. So that's a big mover. Apart from that, you also have textile names. So Gokuldas Exports is higher by close to about 3.5% on that PLI scheme for textiles amounting to nearly 10,000 crore rupees. On PNB Housing Finance that you spoke about, IIFL has initiated coverage. It's a buy call and their target price is 1,050. The current market price is about 800 rupees. So there is close to about a 25-30% upside. They call it a credible turnaround story at inexpensive valuation relative to peers. So bullish note coming in on IIFL Finance, and Prince Pipes too has got a thumbs up from Nuvama, and they've put the target price at 830, where the upside, according to them, should be about 20%. Prince Pipes too has opened up in the green with a gain of about 1.5 to 2%. On the way down, Sanghi Industries is another one where we're likely to see that block deal with promoters offloading some stakes. So Sanghi Industries, along with MapMy India, are showing you a cut of close to about 3.5%. Outside of that, Zomato is seeing some profit bookings. So Zomato is down nearly 1.7%. Ujjivan Small Finance Bank has cracked another 1.5%. Week to date, Ujjivan is down close to about 8%. And you have cuts in a few of the PSU banks like PNB. Today is a bit subdued. The Nifty now has also dipped into the red, but I guess the big stock mover is Mazgaon, Amara Raja and Vedanta.
Yeah, no, absolutely. And, we'll have more on these names as we go along. The list of volume-led gainers is now expanding a little bit. It was pretty short when we started. It's like absolutely flat on the Nifty as well. 2-point change, like a blinking red and green, just making up its mind. But the big block has gone through on Vedanta, and more details there with Nimesh as well in a bit from now. Nilesh Shah is with us now. He's, of course, our market master of the day, managing director at Kotak Mahindra Asset Management Company. Nilesh Bhai, good morning. Great to have you with us here. Prashant this side. Thanks for joining in. You know, markets have been doing so well. So let me just take a slightly, not contrarian view, but we get the first indication of what the government and what they want to do when the budget is presented, right? That will give us a sense, because the budget is now, because taxation, etc., largely is out of it. It has also become like a vision document, and this is the first of the next 5 years, so it will give us a sense of the roadmap in that sense. Is it going to be how critical is it going to be? Because the market and the way it has reacted, there was that 1 day of pain when there was uncertainty, and after that it's just really taken off across the board. So in that sense, in terms of validating the market move, how critical is it going to be? Because if you look at earnings, etc., it's got a direct correlation. I think we are now much more dependent on top-line growth as opposed to margin expansion, because the story of margin expansion is played out in FY24. And now top-line growth has got to come back, and that ties in with government policy, etc., etc. So just wanted to start there, Nilesh Bhai. Go on. I think we lost the line. I think, okay, we can hear him. Go on, Nilesh Bhai. We couldn't hear you. Go on. Okay, I think we'll have to dial that. In any case, that line is bad, so we can't hear him very clearly. So we'll have him back with us in just a bit from now. In the meantime, let me just take a quick look at a few other names. Piramal Enterprises is another. Just wanted to add one more name in the mix along with what Rima mentioned earlier. It's up 3.5%. Piramal Enterprises 910. So that's a large mover. I mean, names like Sharda Motor, for example. I mean, it's up 8%. And the only reason I'm mentioning that is because of volumes. It doesn't ever figure in the top gainers list at 915, but it is right now. 361, the wealth management firm, 6%. It's got very large volumes coming through. So that's some of what is moving. But I think we have Nilesh back with us. Nilesh, go on if you can hear me. If you heard my question, please.
I heard your question. Today, market is pricing in continuity of government and continuity of reforms. From that point of view, budget becomes critical. Ideally, market would like vote on account to continue with some amount of direction towards policy making for next 5 years. And most importantly, in the vote on account, the government achieved fiscal prudence despite election looming ahead and continued focus on infrastructure investment. They have got about 1,23,000 crore additional from RBI dividend. And with that extra money, they can continue in the same direction of fiscal prudence, infrastructure investment, and yet achieve certain obligations of coalition politics. So markets will be looking forward to the budget in terms of policy making for next 5 years. And as you very correctly mentioned, now for Indian equity market, margin expansion story is over. Valuations, we are already trading at a premium to other countries, other peers. And hence it will be all about governance and earnings growth. In both those two things, we can't disappoint. In a lighter vein, Prashant Bhai, Indian equity investors and Indian T20 spectators are the same. They have seen a fabulous play by their team or market. But now competition is becoming tougher and will continue to maintain the same form. If we maintain the same form, undoubtedly we will win. Same way in market, we will require earnings growth of 15 to 20% and comfort on the governance side, where we are managing fiscal prudence along with investments and taking care of coalition dharma. If we can achieve that trinity, I think market is still in good shape.
Got that. Nilesh, hi, good morning. Always great speaking to you on the channel. You know, suddenly we've seen banks come back in a big way, right? Is there any reason for this? I mean, as we speak, ICICI Bank has hit a fresh high and there's so much money that's flowing into the banking sector as well. What could be the main reason for this and how are you approaching this space?
So we have been bullish on private banks for a while. It didn't work for some time because flows were not coming and market was ignoring valuation. But look at now from a comparative point of view. Banks are trading at historically lower valuation. Businesses are still in good shape with deposit and credit in lower double digits. NPAs are fully provided for. And yesterday we were at 180th AGM of Bombay Chamber of Commerce, where RBI Governor Mr. Shaktikanta Das mentioned that we are very, very sure about the growth of 7.2% for next year, for this year. That growth can only happen if finance is provided for. So there is reasonable surety about growth in banking business going forward. Valuations are in your favor. Businesses are doing well. NPA worries are not there. It was just waiting to happen. And now, fortunately, market is looking at valuation and adding to private bank portfolio. One trigger, and this could be potential trigger, is MSCI's revision of one of the leading private sector banks' weight. They had included it at 50% weight. It can go to 100% in September 24 revision. If that happens, there will be buying of about $4 to $5 billion by passive funds and hopefully even some more by active funds. So today, fundamentals and flows both are staked in favor of private sector banks.
Nilesh, morning. This is Rima here. We've seen a notable pickup in the promoter and, the funds cashing out or selling stake in the markets, people who are in the know of the business. So when you speak to the corporates or funds, what's driving these exits, the sort of exodus? And two, should retail investors be a bit worried?
So undoubtedly, when you're buying for promoters, Rima, you have to be careful. They know what their business is doing. In terms of private equity, the exit happens because they had invested long time ago. Their funds are maturing. And if they don't sell in today's red hot market, what will be a better time to sell? So private equity selling is understandable based on their holding period, based on their fund maturity coming up. On the promoter selling, we have seen interesting things. In many companies, the second generation of promoter is not interested in running business, or they want to diversify away from the parent's business. They need capital to run those businesses, and hence some promoter encashment is happening. Second, in some cases, promoters are also realizing that they need to diversify their wealth. It's concentrated in just one segment of industry. There is technological disruption coming. While going is good right now, who knows about the future? And hence, they are probably diversifying their risk. It's not that they are worried about the business, but they just want diversification. In few cases, promoters are probably tempted by the valuation market is giving, and they think it's time to offload something which is going at such an expensive valuation. The third category is where one has to be careful. You are playing against someone who knows inside out value of his or her business, and one has to be careful. But all promoters selling is not necessarily bad. There may be real reasons behind it. And as a professional fund manager, we'll have to identify the reasons. If promoter is selling because he believes the businesses have become expensive and he's getting far more than fair value, then one has to be cautious.
Nilesh bhai, the other big sort of milestone which is lined up in front of us this week is finally, how many years we've spoken about it, right? Inclusion of India bonds in global indices, bond indices, starts in a phased manner from this Friday with a 1% weight in the JP Morgan index and goes up to 10%, which is the maximum permissible limit. What does it mean from us? Not immediately. Some have been suggesting that there is already a fair bit of pre-positioning which has happened. You know, out of the $25 to $30 billion which was expected, since the announcement last September, a lot of money has come in, so maybe it could be in relation to that. But beyond the near term, what are your expectations? Will it really, you think, put a ceiling on cost of capital, put a ceiling on interest rates on a durable basis? Your sense?
So Prashant bhai, when equity foreign investors came to our market, we transited from a Wild West to what is today's mature, developed, well-regulated market. In the 90s, we did witness a big scam and regulator did take action. But the discipline of the market in terms of valuing governance, in terms of avoiding unscrupulous promoters, all those things came, when foreign investors came in. Fortunately, in our debt market, it is already well-regulated and well-developed. So we really don't see too much impact coming from foreigners' participation in debt market from a regulation point of view. But what we look forward is towards deepening of our market. These investors are sophisticated investors. They are using derivatives. They know how to price risk. And hence, their participation will help in deepening our market in terms of new product launches. Second, in debt market, generally we see one-way trend. Either liquidity is high in domestic market and everyone is buyer, or liquidity is negative and everyone is seller. There is very limited contra trade. With foreigners coming in, they can provide contra trade to our market. They can be buyer when everyone else is a seller and vice versa. And third and the final thing which this debt index inclusion can happen is essentially globalizing India's debt market. Today, we don't have a sovereign yield curve in dollar market. And many a times, you need a sovereign yield curve to price other credit risks. By inclusion of India's index, by inclusion of India in debt index, hopefully it will lead way towards sovereign bond issuances, establishment of dollar sovereign yield curve, and fine pricing of Indian securities.
Okay, well, for now, just wanted to mention that the market is seeing some pressure. There is a bit of profit taking. The Bank Nifty is down about 113 points. The mid-cap index is down 118 points. And the Sensex just shy of that 78,000 mark. But Nilesh, I wanted your thoughts on whether you see any kind of correction. I mean, we're not talking about a bear market here, but any kind of correction coming through, because since the end of COVID, right, this market has not seen any meaningful correction, more than a 15% correction. So at some point that has to kick in. Do you see that coming through? Is there any reason for that to kick in? And if yes, how does one approach it?
So undoubtedly, Sonia, never say never. Can market witness a correction? Answer is undoubtedly yes. The trigger for that will be some of the event going against expectations of the market. For example, market is discounting low double-digit earnings growth. As long as it comes through, corrections are unlikely to happen. And even if it happens, it will be shallow. But what if earnings growth trajectory comes down? margin expansion story, as Prashant mentioned, is over. If volume growth doesn't come through, then certainly earnings growth could be in trouble, and then there could be correction in the market. Similarly, market is assuming continuity of government, continuity of reforms push, and the momentum of economic growth continuing, which ultimately translates into earnings growth. Any change in that expectation, any event which can lead to change in that expectation, undoubtedly will create its own correction in the market. As I mentioned earlier, because the team has played so well, we are expecting that India will go and thrash England in the semi-final. But the players still will have to play. Either Rohit Sharma has to go and knock out English bowlers or someone else. Some bowlers will have to bowl like Kuldeep Yadav. So market has done well, but we still need to ensure that players play in terms of earnings growth and governance.
You know, what could come as a bouncer, Nilesh, this time is the fear in the budget about some clamp down on F&O, because clearly SEBI, the government, they're worried about the kind of trades taking place in the derivatives market. Have you picked up anything on that front? What could be the nature, if at all, and how will the market react?
So clearly our markets are liquid thanks to very deep F&O market. But in some sense, that deep F&O market is more of a daily market rather than a longer term market. Our futures trade up to 1 month, options trade more on a daily basis and then up to 1 month. The longer term market is not really deep. So if there is any limitation on F&O participation or F&O volume, will it impact liquidity on a longer term basis? My answer is no. Second, if you look at from a purely academic point of view, there are two players in the market, one who loses money in F&O and one who makes money on F&O. It's quite likely that people who make money on F&O are having better computing power, better algorithm, and better connectivity. And the cohort which is losing money is one which has less computing power, lower or less speedy connectivity, and who probably is not as knowledgeable. Now, should there be a level playing field whereby the cohort which is losing money, which is more likely retail Indian, they are kind of supported, and the cohort which is making money, including one famous hedge funds case we are hearing, they should pay higher tax, or their ability to make money is restricted a little bit. I think if that happens, overall it is good for the market. Traders may become investors. Traders may not lose as much money, which will be good for India.
Nilesh, great conversation. Thank you very much for joining us this Wednesday morning. Let's invite the management now of Tega Rail. CRISIL recently upgraded the long-term debt and the short-term debt credit rating for Tega Rail. How will this development impact the company's cost of finance? How is business shaping up? Umesh Chaudhary, Vice Chairman and MD of the company, is now with us on the show. Umesh, morning. This is Rima here. First, if you could tell us, does this impact your ability or what your cost of finance is? What is it currently? And then just lay out the debt picture for us. What is the current total debt, the need for working capital?
Good morning, Rima. Always a pleasure being with you. So this is a kind of a, apart from being having an impact in our overall cost of funding, and I'll get into more details of that. It is also a validation of the strength of the company, and the company has been growing from strength to strength. So if you see over the last 2-3 years, we have had several notches of credit upgrade, which is reflective of how the company has been moving, the trajectory that the company's been moving in. In terms of our debt, we are, as of now, we are debt-free. We are net debt-free company, but we have substantial in our business. We require substantial amounts of guarantees and LC, so non-fund-based limits, and definitely a stronger credit rating helps us in saving costs of the cost of LCs and BGs that we have to incur.
Umesh, hi, good morning, and thanks for that. So debt-free, that's always great music to the ears of investors. Let's talk about growth, right? I mean, this is a space that the government is focusing on in a huge way. So tell us, what is the kind of potential that you see over the next, say, 1 to 2 years? What is the updated order book? The last number I have is 28,000 crores. Have you been able to build on to that? And what are the kind of expected inflows for this year?
Morning, Sonia. So, yes, absolutely. We are in a sector which is, if I may say so, having a dream run. The government has focused a lot on the infrastructure, and I think the Modi government has pretty much uh, defined that the roadmap or the rail map, if I may say so, to the third largest economy or the $5 trillion economy is the railways. And they are working truly towards that objective and on that route. So we believe that the growth in the railway sector, whether it is on the cargo side or it is in the passenger, is going to continue. In terms of the order book, we normally declare the order book on a quarter-to-quarter basis. But having said that, if you really look at our last year revenue, which was 3,800 crores, we have a very strong order book. So our focus is not so much on building order book, but it's on execution now.
Okay. So just one follow-up there. In your order book, I mean, of around 28 to 30,000 crores, 50% of it comes from the passenger segment. Do you think that contribution could go up further, given the kind of focus that the government has on this space? And if yes, what are we looking at in terms of a split over the next 1 to 2 years between passenger and freight?
Absolutely. So, I would probably take a little longer term. I would say in the next 3 to 4 years' time, the capacity that we are creating, and I have spoken about this in your channel as well, that we are creating a capacity which will give us almost 800 to 850 coaches a year. Now, if you look at the overall potential revenue out of that 850 coaches a year, each coach is about 10 crores. So that's 8,500 crore of potential revenue. Now, how much will that get executed? It will depend upon the market forces, execution, and all of that. So, but if you really look at the split of our revenue, it used to be 90% plus in the rail freight side, and it has the potential to go to 60% plus on the passenger side. So from being less than 10%, we can actually on the rail passenger rail segment, it can go up to almost 50-60%.
No, got that. Umesh, hi, good morning. Prashant here. We had spoken, if you remember, right after the sort of election results, right? And after the portfolio births, etc., were given out. And, we were, at that point, we discussed the issue of premium trains versus other trains, right? And you had said that even within Vande Bharat, the government, because of issues like overcrowding, etc., which is now becoming a bit of a sort of larger pain point, there will be various variants of Vande Bharat. I remember you had said. Now, there's an article, this is in the Free Press Journal, which basically says, and this is, I think, 2 days old, they said that the railway, in a recent meeting, the Railway Board has resolved to manufacture an additional 2,500 general class coaches beyond the current annual production schedule. 2,500 sort of general class coaches beyond the current annual production schedule. Have you heard anything? Can you sort of share anything on this with us?
So, yeah, morning, Prashant. So, my information is exactly the same as yours. I've also seen it in the media that they will be producing 2,500 more general class coaches in order to curb the overcrowding. And I still maintain that it is not either or, it is and. I think the railways is gearing itself, and rightly so, to cater to all strata and sections of the society, whether it is the premium segment, whether it is the chair car segment, whether it is the overnight journey segment. Like the Vande Bharat that we are making, or we are designing and manufacturing, is the overnight segment. So long distance one, because it's the sleeper Vande Bharat, which we believe, and I am quite convinced about it, will actually we would like to change the way people like us, you and I, would travel. And if we can ditch the flight to take a train, that is the real market shift that is likely to happen with these premium segments. On the other side, we've seen the kind of overcrowding in the general segments, which is causing safety concerns, and rightly so, the railways have taken a short-term measure to immediately produce 2,500 GS coaches, which is a very standard 3-tier type of coach in order to curb the overcrowding. So I continue to believe that the entire spectrum of the coaches, whether it is premium or the general, will continue to see a higher demand.
The article also says all these 2,500 coaches are slated to be ready within the current financial year. I mean, is it possible? I mean, how will it happen?
Yeah, the railways have 3 production units. There is ICF Chennai, RCF Kapurthala, and MCF Raebareli. So, the way I look at it is that if the capacity of these plants is moved towards making general coaches, then they would require the private sector to come in and supply the premium trains. Of course, this is not something that the railways have announced or no tenders have been floated, but this is how our estimates are figuring out. And I believe that the premium train segment is more and more going to come to private sector suppliers like ourselves and some others like Alstom, etc. Because premium trains require also premium design, European technology, and all of that, which is available with only the private sector players.
Got that. Now, just one last question from my side, Umesh. There is no railway budget now. It was done away with, but it's an important part of the budget document, which is it's not very far away. Are you expecting anything new here, or just reiteration of the goals, etc., which have been laid out earlier?
See, I mentioned this, that I think the roadmap was pretty much set out. So I don't see that there will be anything transformational that is possible in the 100 days. What we would love to see is substantial allocation of budgetary resources to the railways, so that, so on one side, I would say the journey from here to, let's say, 5 years from now, which means more rolling stock, some debottlenecking of infrastructure. But on the other side, we would like to also see the 5 to 10 year horizon, which means more track. And that's what we've been reading in the news, that railways will sanction additional amount of money to increase the track capacity. And we believe that what happened in the road sector over the last couple of decades or last decade will really happen in the rail sector over the next couple of decades.
Okay, Umesh, we leave it at that. All the best. As you said, that this is a great time to be a part of the sector, which is booming right now. It's seeing a dream run. Hopefully that should continue. And the street always likes companies that have no additional debt. Titagar is a net debt-free company, so that's always a positive there. But let's move on. The RBI has appointed an additional director for Bandhan Bank. What do these RBI appointments on bank boards say for the financial sector? We have the former RBI Deputy Governor H.R. Khan and Abhijit Divanji, the partner and national leader financial services at EY India, joining us now. Gentlemen, thank you so much for joining in. Mr. Khan, I want to start with you. What does this really mean, these additional appointments on bank boards for the sector, for the various stakeholders of the sector as well?
There is RBI has a wide-ranging power over the regulation and development of the banking sector and the entities which come under its regulatory remit. So in terms of approval of the director, chairman, MD, and there is a specific provision, Banking Regulation Act 36AB, which provides that RBI can appoint additional directors for a specific period in the interest of banking policy, or in public interest, or in the interest of the company, or in the interest of other stakeholders, particularly depositors. So public interest is a wide term, so it could mean many things, and also it is in the interest of the company. So that is the source of power for Reserve Bank to appoint additional directors. And in the past, RBI has put additional directors in many banks. So that is the background for appointing additional directors.
Got it. I just want to get Abhijit Divanji into this discussion as well. Abhijit, hi, thanks for joining in on the show. There are two ways to look at it. Of course, this is an interim measure by the RBI in order to improve the functioning of the bank, right? So on one hand, one can believe that this is a more prudent measure exercised by the RBI. But there is one section of the market that also believes that there could be more skeletons in the closet of these banks in terms of higher amount of NPAs, more increasing amount, in the stress pool, etc. How are you reading into the developments here?
So I think, as Mr. Khan just said, that RBI has the ability to appoint people, and RBI has exercised that. I think what is important to notice is that I think it's about causes for horses. Depending on where the Reserve Bank feels the need for incremental supervision, or incremental involvement, I would say, not supervision, involvement, they would take steps. So whether, in some cases, as we have seen, that they have barred specific operations, they have barred customer acquisitions, they have, depending on what they believe the issues are. Now, in this particular case, maybe the issue would be that, there is a CEO discontinuation that's happening on the 9th of June. And there needs to be somebody at an overall board level. And that's important to notice. It doesn't really specify or pinpoint to a particular problem, but it says that there is an overall need to stabilize the ship in case of a leadership change. And in this particular case, especially when there have been issues around, their claims that have been put in on the NPL that have been claimed from the government as far as COVID lendings and etc. were concerned. So there is an issue to say, let us have somebody on the board at a supervisory level so that the overall operations of the board can be handheld till such time that a stable leadership is put into place. So that could be the intent.
Yeah, no, we've seen action like this earlier as well. RBL, of course, comes to mind. Mr. Khan, for viewers who are watching and maybe investors in particular, they'd like to hear from you, sir, as a former regulator. How should they see this? It helps in steadying the ship, or cleaning house, and more stuff will come out in the coming months. What's your sense, sir?
And I'm not in a position to second guess what could be the intent or for Reserve Bank and what could be the information available with them. As I mentioned, we have a broad spectrum powers available to Reserve Bank, and in particular under 36 AB they can appoint additional directors in the interest of the company, in the interest of the public, in the interest of the depositors, so they can do it. So so there are many ways of looking at it, whether providing continuity, because there is, as Mr. Abhijit said, about there may be a gap in between the old MD leaving and the new MD coming. So provide some continuity, or just to provide some supervisory comfort to RBI. So what exactly is the intent behind this? We can't only just second guess. But as I told you, this is a power available to Reserve Bank, and Reserve Bank does exercise powers as and when it feels like, with reference to information it is available. And these days, of course, Reserve Bank supervisory practices have been sharpened further. They have now analytics available. They do a lot of on-site supervision. Then there is top management is very hands-on. So they would be having information. And so I'm not in a position to second guess what could be the reason, but this is a power available to Reserve Bank and they have exercised. And what exactly is the intent?
Mr. Khan, in the case of Bandhan Bank, the additional director has been appointed for a period of 1 year. But in many other instances, the appointment was done for a period of 2 years. Is there anything to read in this?
I don't think, because you have to specify a tenure. That is what the Act says. You have to specify a tenure. So they have specified a tenure. If it's a 1 year, it can be increased to 2 years also. But one need not read too much into that. So as I said, tenure has to be specified. That is why they have specified.
Okay.
It could be relating to transition, as some people have commented.
Sure. Got that. Separate from this issue, Mr. Khan, I just wanted your thoughts on the health of the banking sector, because, yesterday there was a note from Goldman Sachs on the sector where they said that there are now rising concerns around the health of rural lending, where there could be a rise in the stress over there in NPAs, etc. What are your thoughts on how things could shape up, especially in the rural side of things?
No, the rural sector is slightly different ball game. A lot of things depend on we have seen the recent past, there has been a bit of deceleration in the agriculture growth. So that will, of course, percolate to the ability of the borrowers to service the loan. So once the rural sector growth picks up, these issues should vanish. But then there is another issue of credit culture, which is there. It is not a new issue, it's an old issue, which is happening for a long time. And the whole model of agricultural lending, you lend and you try to get back once the crop cycle is over. I think those models probably needs to be looked at, whether we have something called KCC, which has looked at that and provided some flexibility to the borrowers. I think there is a need to look at the lending models for the rural sector, because the things have changed and we have to look at the fresh way of lending in the rural segment. And as I mentioned, because the rural sector, there has been a bit of deceleration, it will get reflected. So that could be the reason. And once it picks up, monsoon picks up, I think things should normalize a bit. Yeah.
Okay, Mr. Khan, thank you for your thoughts. Appreciate your time here. Abhizar, before we let you go, same question to you. I mean, is there something to worry about in terms of the credit culture in the rural lending space? Are we staring at higher amount of NPAs? What is the health of the rural lending system at the moment?
Not the best person to comment on it, frankly. Sure. But I do believe that, it'll all depend on the monsoons and stuff like that. We are expecting better monsoons. We've been optimistic, but the monsoons haven't played, to our tunes as yet. But if they do, I think there will be an uptick, and you will find that rural distress will come down. Rural distress is a fact that we've been living it for a long time. I don't think there is anything new or resurgent that is emerging out of it. RBI has been concerned on a larger scale in terms of the quality of credit in the system, which is non-corporate banking credit, and I think that is that they have shown out amply in whatever they're doing. But I must comment, on the going basis that from the topic that we are talking about on Bandhan, and I couldn't help seeing the ticker that flows along with our conversation, and that keeps showing that Bandhan Bank has actually increased the maximum today morning. So I guess everybody is hailing this as a stability factor for our current conversation. And if that is actually the case, I think it's better for the banking system, and RBI's involvement seems to be taken as positive by everybody.
Yeah, no, I agree. I mean, but also maybe the fact that it's such a bombed out name that from those levels there is a bit of some buying which is coming. I had a few other questions, but we're out of time. So we'll request you to come back. We'll invite you back. With regards to some of these regulatory actions that we've been saying, and market is waiting to hear from the RBI and some of the actions they've already taken, names around IIFL, etc. But that's for a later date. Thank you very much for joining us. Great speaking with you, and it's always good conversation. We take a quick commercial break here. We have the management of Borosil joining us on the other side. They've raised 150 crore rupees via a QIP issuance. We'll talk about that, and of course, and how business is shaping up as well. Stay tuned. Okay, welcome back. We've got the market, which is absolutely flat, about 20 points lower. And I just want to quickly point out Vedanta. Vedanta was down 6%. That block got done. It's recovered sharply from the day's lowest point, down about 2.5%. But it's been weak for the last couple of weeks now in anticipation of this. And of course, now this is finally done. Let's talk about Borosil now, the glassware company. They've raised 150 odd crores via a QIP issuance. Let's talk about this more and what this means for the company's debt reduction plans, expansion plans. Srivar Kheruka is Managing Director of the company. He's with us now to take us through some of this. Srivar, great to have you with us here. Good morning, Prashant this side. So let's just start with the QIP issuance. I mean, tell us the kind of response that you've gotten. We've gotten names of some of the prominent investors who've participated. What will you use this money for? What happens on the balance sheet side, on the debt front? What will this be used towards? Some of it will be at least used for capex as well. Just some basic hygiene elements first. Srivar.
Yeah, so thanks for having me. As far as the QIP is concerned, we've raised a small amount, 150 crores. The majority of this will be used to just repay debt. We have anyway a low level of debt, but as a management, we are fairly conservative, and we like having low debt on the books. So the objective of the QIP is mainly to repay the debt that's on the books. We've done a fair bit of expansion for a company our size in the last 2 or 3 years. We invested more than 600 crores in the business altogether, and we raised about 150. Now the business itself has been growing, well. Last year we closed the year at about 950 crores of revenue. This is up roughly 4 times in the last 6 years. So we see a future capex as well coming up, for which again we will raise some debt. So those are the main reasons for the QIP.
Srivar, as you said, this is by the way new listing as well. Look at that, DEE development. Srivar, just coming to you, big big listing pop, 70%. In markets like this, it's almost kind of you're actually nowadays surprised when you don't see a big pop, but that's the market we're in, up and up kind of session. We'll have more on this company with our research team in just a bit from now, but that's a new listing for the day. Srivar, on that point, you yourself said that it's a debt was not very large in any case, right?
Yeah.
So why do this? Why do this QIP and dilute equity to do this right now? And you're saying that you will raise fresh debt for expansion going forward.
In the future, yes. I mean, when we see more plans coming up, we will do that. You see like I said, we are fairly conservative. Our internal metrics, we go up to 2 times debt EBITDA. That's roughly where we were. And we have, now with this, we'll be back to almost zero debt. So in terms of, view, given that we have more expansion plans coming up and we have a, internal metric that will not go beyond a certain level of debt, we wanted to come back down to zero. And then we don't mind again going back up when the expansion does work out. So it's kind of, that's a little bit, conservatism, you may say, from our side, but that's the way we think. We like to focus on, our business at hand, which has been, growing quite well. We, invested a lot of capex in manufacturing in India. So in our Jaipur plant, we put up, we almost tripled our capacity in the last 24 months. And the focus is really to improve efficiencies there, sell out the entire capacity, and then maybe look for organic or inorganic, growth opportunities.
So Srivar, talking about business, how has business been in Q1? Schools are open. So, if you could just throw some color on the demand and the growth numbers. And for the full year, what are you expecting on the top line and margins?
Yeah, thanks for the question. As far as our growth has been, we've been always guiding a medium-term CAGR of 15 to 20%. Although if I look at the last 6 years, we've been closer to between 25 and 30%. So, and that's right through COVID even. We've been able to show that growth. So if you look at the current scenario, while obviously I can't share numbers, what I can say is that while, different parts of the market have been slow and some have been okay. So the trade, the general trade has generally been slow. Maybe that's something to do with the excessive heat we've seen in North India specifically, and even in parts of West India. But on the flip side, channels like e-commerce have been doing well. So overall, I would say that we would stick to our 15 to 20% medium-term CAGR growth kind of numbers. Obviously, that's not specific to any quarter, but general yearly trends. And we are a kitchen and table products company as far as Borosil Limited is concerned, and we see that India is upgrading its lifestyle. People are getting generally better off. People are buying new houses. So the demand in the medium term seems to be quite strong. And with our brand and our distribution, I think we'd be well placed to, be market leaders in this area.
Okay, so what are you targeting? I mean, you've spoken about top line growth, Shrivar. What are you targeting in terms of margin growth? And what is the peak revenue potential once your new opalware plant comes on stream? What is the capacity utilization that we're looking at?
Frankly, our opalware plant's already on stream, as is our new borosilicate plant. Both are already on stream. As far as last year is concerned, we did about 950 crores of revenue on our consumer side. So still quite small. The peak revenue from our own manufacturing from these these two segments of opal and glassware would be closer to 700 crores. Which roughly was about 500 crores last year of sales. So we could expand about 200 crores from our own manufacturing, which will add to the overall top line. Plus, we also outsource some of our products to third-party vendors, and we are more and more developing the vendor ecosystem in India to have made in India across the entire range. So I would say, combined with our own manufacturing and with the third-party vendor ecosystem we have, I think achieving 20% growth can be sustainable for at least the next 3 years with our current setup.
And when is the next, just to go back to what you started with, when is the next capex cycle going to start?
Yeah, that's it. We are working on it. I can't give you any specific timelines, but I do believe that probably sometime by the end of this year, we will announce something. We will announce some, the new capex cycle.
Okay, and you also alluded to organic, inorganic, anything on the inorganic side that you're looking at?
Look, as a company, we're always looking, and there's always, good opportunities for acquiring new products in this kitchen and table space. So we continue looking. There are some interesting ideas we have. Let's see how that works out. Obviously, I can't speak more about it till there's some concrete action on the ground.
Okay.
Okay, we will let you go on that note. Thanks a lot for joining in. That's Borosil. By the way, stock is holding up in a market that's slightly tepid, nothing alarming. The Bank Nifty is down about 200 odd points. The mid-cap index is down 120 points. Mitesh Thakkar is joining in now to give us some cues for the day. Mitesh, it's been largely a ho-hum sort of a day, just consolidating around these levels. But for the rest of the day, what are the stocks that you're looking at? What's your advice?
So you're right, Sonia. I think the markets have been pretty quiet, except for the fact that there is some profit booking happening in the Bank Nifty. But it's the breadth, which is of interest to me. A lot of breakouts happening in cement stocks. You can see India Cement's doing very well, and I've identified Ramco Cement as a trading bet. That's a stock which I would like to recommend long positions with a stop just below levels of 860 and look at a target of around 925 over the next few days. While the PVR Inox is also something which has caught my attention. Keep a stop below days low 1432 and look for a target of around 1495.
Okay, Mitesh, thank you very much for those trading calls. Need to get into a break. On the other side, Manisha will join in and she'll put the focus on commodity markets. Stay tuned.
आतिशी जी 5 दिनों से अन्न त्याग करके बैठी हुई थी, अनशन पर बैठी हुई थी। उनकी तबीयत बिगड़ रही थी। डॉक्टर उनको बार बार कह रहे थे कि आप अपना अनशन तोड़िए। लेकिन कल रात में अचानक उनकी हालत बिगड़ना शुरू हो गई। पहले एलएनजेपी के डॉक्टरों की टीम ने शाम को देखा, फिर अपोलो में उनका ब्लड सैंपल चेक कराया गया, एलएनजेपी में ब्लड सैंपल चेक कराया गया और उनका जो शुगर लेवल आया वो 43 आया। उनको एलएनजेपी में एडमिट कराया गया और आईसीयू में उनको भर्ती किया गया। आतिशी जी अभी भी एलएनजेपी के आईसीयू में भर्ती हैं। इन सब परिस्थितियों को देखते हुए अब इस लड़ाई का जो अनशन की लड़ाई थी, जो अनिश्चितकालीन अनशन की लड़ाई थी, उसको विराम दिया जा रहा है। लेकिन सारी विपक्षी पार्टियों को लामबंद करके संसद के अंदर पानी की आवाज को बुलंद करने का काम हम लोग करेंगे।
GST had certain advantages of avoiding multiplicity of taxes or tax on the various transactions, the various purchase and sales transactions. GST, I think, has been one of India's, independent India's biggest.
Welcome back. Well, let's get you a quick update on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what's the one commodity you're looking at today?
Well, I'm looking at a sector, and that is metals yet again, because we have seen constant decline come in for this one. The last couple of weeks have been on the weaker side. And if you look at the month of June now, we are headed for a negative June for precious metals and many of those industrial metals as well. That is because, there is an uptick in the US dollar index, which is trading right now at around 2-month highs. There also is an uptick in the US Treasury yields, which is putting pressure onto the markets. If you look at the prices then, and we have seen almost all commodities here decline, barring energy, perhaps almost all commodities are headed for a negative June there. Take a look at the metal prices then, and silver has seen a decline of 2% overnight. When you look at the previous 1 week, and the silver prices have declined by more than 3%. And for the month of June, we have turned negative by 9% for this one. Gold prices also have slipped to a 2-week lows. Overnight decline has been to the tune of 1%, and that's exactly how we've done last 1 week as well. And for the month, we are down by 1.7%. So the precious metals, which hit all-time highs for the month of May, seems to be clearly getting down for the month of June. Well, there is demand improvement though, and that's the positive side to precious metals. As you have seen the prices decline, Asia has started to buy, the global ETFs are buying as well. But when you come to the base metal prices, we are looking at further decline onto this one. Strength in US dollar, profit taking, the near-term demand concerns is what seems to be weighing onto the prices here. Copper prices, which hit all-time highs in the month of May, have seen a very sharp decline come in for June by almost 9.5%, with overnight declines coming in at 1.5%. Not just copper, the HRC steel prices have declined to multi-month lows, 17-month lows onto that one, and 12% down in the past 1 month. Zinc, clearly, which is used for steel, so no surprises there. We've seen a sharp decline onto that one as well. That is trading at a 3-week lows, has seen a decline of 7.5% for the month of June. Aluminum is down 8.5% for the month of June. So everywhere that you look at industrial metals, ferrous, non-ferrous, precious, June is ending on a negative side there. What the street is now watching out for is the first quarter GDP numbers from US on Thursday and the CPI numbers on Friday. Ahead of that, the strength in US dollar definitely making a pressure there.
Okay, thank you very much for that. One of the big stocks of the day is Vedanta. Large block deal took place in the morning. Nimesh joins in with what he's picked up. Nimesh.
I remind us, so this deal was in the works for the last couple of days. In fact, it was part of my deal sheet chatter as well. And I had indicated that there could be a large block where the promoters will be a seller. That got executed today. Nearly 2.5% equity got changed hands at an average price of 425, which works. The deal size works out to over 4,000 crores. Now, there is an official communication from Vedanta Resources as well that yes, one of the arms of Vedanta Resources has actually sold 2.5% stake via block deal today, and some large investors were the buyers in today's block. Interestingly, what this means is the leverage at the promoter level will go down. In fact, if you look at the stock price for the last couple of days, the stock actually has corrected from 480 all the way to 425 at the price at which today's block got executed. Now that the block is done, the overhang seems to be out of the way. And there is an official confirmation as well that Vedanta Resources did sell 2.4%. I guess the entire money will be used to deleverage the balance sheet. So that's going to be positive as far as Vedanta is concerned. But purely from a deal perspective, I understand some large FI investors were buyers in today's block deal. So the disclosure will be quite interesting. But there is at least a confirmation that yes, the promoter entity did sell 2.5% in Vedanta today.
Thank you very much for that. You've been on top of this, story. That's Vedanta for you. Another company where we saw a large block deal was CE Info Systems, MapMy India. Now, the total block deal size was about 1.1% equity, amounting to nearly 150 crore. But what we had picked up in the morning is that the promoter is looking to sell about a 0.9% stake. In fact, we also got a comment from, the promoter on this particular matter. And the key takeaway is that they're selling the stake for their philanthropic efforts. They've not sold stake. Mr. Rakesh Verma has not sold stake even during the IPO. This is the first time he's selling stake since the company went listed as a public entity, and they do not have plans to further bring down their stake. So that should quell any fears in the market. But on the back of this 1.1% block deal today, we have seen the stock come under pressure. Get into a break on that note. On the other side, we'll connect with Nidhu Saxena, MD and CEO of Bank of Maharashtra, as sources say the bank is likely to raise up to 500 crore rupees via a QIP.
Reform since 1947. When GST was introduced in 2017, it was expected that once the system stabilizes, and I'm happy to mention and happy to see that in India, the GST has stabilized much faster than many other countries.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and resting.
Hello and welcome to Corporate Trader. Not It's the Economy, because Bank Nifty has been such a flavor of the moment. And one bank that has been the market flavor actually for the past year is Bank of Maharashtra. The stock has seen a near 140% rise year on year. And that's due to quality performance. I mean, normally we don't associate such performance with public sector banks. It has the lowest cost to income ratio in the industry, 38%. CASA, that is a current and savings account, low cost deposits, 52%, which is by far the highest in the industry. The return on assets at 1.73 compares with quality private sector banks. And finally, today, of course, we have the big news that CNBC-TV18 broke, that the bank could be one of the many PSU banks who could be doing a QIP, probably 5,000 crore rupees. To give us more insights on the fundraising, but more importantly on the outlook of the bank, I'm joined by Nidhu Saxena, Managing Director and CEO of Bank of Maharashtra. Mr. Saxena, good morning and thank you very much for joining us. First, the breaking news, of course. We understand that there have been hectic meetings at the DFS and quite a few banks are going to raise QIPs. Are you going to tap the market?
So thank you, Latha, for that introduction for the bank. And coming straight to this question that you flagged. So currently, if you ask me, our Government of India holding is around 86.46%. And yes, the bank has been consistently doing well. So for last 12 to 14 quarters, we have displayed a good growth on all parameters. We have had good efficiency ratios, profitability ratios, numbers are all favorable, the way the market would like to see. So yes, if you ask me, there is no urgent, emergent need on me to raise the capital for growth. But yes, I am currently maintaining a CRAR of around 17%. Going forward, I need to, my guidance is to maintain a CRAR of 16%. So that makes me raise money for my growth. So yes, with that thing in mind, we have actually taken a board approval, and board has permitted us for this year for a capital raise. But what will be the deal size and what opportune time, and that as we go along the year, we will take a call at opportune time and do the capital raise.
You know, you've been making so much profit. You're adding to your net worth considerably. I think in a couple of years, your net worth will be like, what, 30,000 crore or something? I mean, it's a huge net worth. You don't really need the QIP, do you?
So, as I said, currently my capital adequacy is much above the regulatory prescribed level. But I need to, going forward, these are the good times. So we need to be mindful of, keeping those kind of high capital reserves with us. So if that is the level I plan to maintain for my growth, because if you look at currently my balance sheet size, so here onwards, after displaying, consistent 12 to 14 quarters performance, I feel that we should start becoming a bank of greater significance. Today, among the PSB space, also we rank at certain level. So maybe in this 1 year, one notch above, and next 2 to 3 years, 2 to 3 notches is what we broadly look at. So if I have to grow my top line, and yes, while I say that growing top line, we'll be mindful of the bottom line. So we'll grow with profit. We'll grow profitably. So if all that is there, I do need capital for growth as well.
Okay. No, a point is taken. If you, this is an inflection point for the bank if you, in addition, have capital. Now, the other thing I wanted to ask you about your profit, in spite of it being very good in the past year, it seems to me understated because you've been providing hand over fist. You're what, 98% or something provided for, which is the highest provision coverage ratio in the industry. Now, what will you provide for? There's nothing left if you're 100% provided. So, do you think there can be a quantum jump in profit in the current year? Because you will provide maybe, the 2,000 crore of provisions will be available to you.
Right. So, yes, Lata, what you have observed is correct. My PCR today stands at 98.34. So, with such a high PCR, the requirement for us to incremental provisioning requirement has really come down. So my credit cost is also reached 1% and we'll go below 1%. So this pressure on increased provisioning is not there. But all said and done, we do see some headwinds around the market towards the NIM if the rate cut happens and all that. So we are keeping a guidance for a stable, rather as a high double-digit growth in all parameters, and maintain a good yield in the loan portfolio, maintain our stress level, also within limits. So with all broad things, we wish to take the bank forward.
No, I am coming to your loan growth and deposit growth. All of them are crying out for questions. But first, more importantly, I wanted to know if your credit cost still has headroom to fall. You're not 1%. My analyst, Abhishek, says that you're probably 91 basis points in credit cost. Is there room for it to fall further?
So maybe we can improve this number also and go up to between 0.5 to 0.75. Because the way PCR is already there, high PCR, I think that should not be a challenge. So we plan to do that.
Okay, credit cost will fall and you don't have to provide for PCR. Last year, you did 2,800 crores of extra provisioning. I'm assuming that can go to the bottom line this year. So, I mean, I'm adding all that into, what looks like a good year ahead. 52% CASA. Can you continue to maintain current and savings at that level?
So while that rightly pointed out, one of the enablers and the good points in the balance sheet is the high CASA percentage, the high CASA share. But see, I'm mindful the deposit is a very competitive area, and wherever we are having existing relationships, maybe even the state departments, the government departments across the country that we are having, and we want to deepen the relationship. So we are trying to see that the vanilla operative account, beyond that, do we have their other relationships? Do I have their collection and, payments, collections, businesses also, whether I'm taking...
One minute, Mr. Saxena. We are already ending April, May, June quarter. You are in a good position to tell me whether your CASA will remain above 50 and whether your cost to income will remain at 38-37%. Those two numbers can we take as given?
So absolutely, CASA, our guidance for this year, if you look at, that number is, we will maintain our CASA above 50. There is no big issue on that. We are working to see this stable number remain in the bank, and several initiatives we are taking. So initiatives around the products, which segments are currently not serviced properly. We will have segmented products to reach out to them. And as I said, the government and institutional relationships, how we can deepen further so that there's a stickiness that we build for ourselves through this CASA. So CASA guidance above 50, cost to income, the second part of your question, let me take that as well. So cost to income today is 37.5. And yes, you rightly pointed out, we are lowest in the industry on that parameter as well. And the major enabling factor, two factors, in fact, the per employee business is highest for the public sector bank. So it's a 35 crore plus per employee business that we are having. Also, whatever incomes increase that is happening in the system with us, that is more than the OPEX that is going up. So these two factors. So, but I'm keeping a guidance because I'm going for expansion also. I will be recruiting also. So 1,000 officers and other recruitments of specialized vertical officers we are planned. And that part of the exercise is already completed. So I'm keeping a guidance of less than 40 cost to income to be maintained.
Okay. Good to hear. I have to squeeze in two quick questions because I'm running out of time. One, very quickly, you got nil tax because you were writing off past losses. This year, will you have to pay tax?
So that accumulated losses still allow me. This current year, my estimate tells me that we may not be requiring. We still have a accumulated loss of more than 6,000, around 6,000 crores. So,
so you don't have to pay.
I don't have to. Even the next year, the following year, FY26, a little portion of that may be available to me.
Wow, this is some advantage. Okay, Abhisita, very quickly, because you have so much resources in terms of retained profit and the potential capital raising, what kind of loan growth are you targeting? And quickly, another question. Are you seeing worries in the rural lending? It's all over the place that there is stress because of inflation, late rains. So can we expect some stress in the book?
Okay. So my credit growth, if you see this year has been 16%. And within that, if I look at the retail has grown at 21%. And we have a RAM corporate ratio of 60-40. So we are going to maintain this guidance of 60-40. And going forward, we are looking at even corporate book to grow in specific sectors like renewable infra. We have LRDs, wherever the government PLI incentives are coming. So those sectors are our focus sectors for growth in the corporate. The RAM also is going to grow, and we should be maintaining a ratio of 60-40 for the remaining year. Within this, just to quickly add, we are picking up few segments like gold loan. It's a zero risk weight product, and I get a good yield with that. My portfolio has grown with a high YOY growth of almost 50%. So around 2 years back, we were 5,000 crore. We are touching 10,000. We would like to see another 5,000 crore addition in the next one.
Yeah. And the stress part very quickly?
Yeah. So stress, yes, that is always we are mindful that what is the quality of underwriting that is happening and how the stress, if at all, is building in my loan book. If you see that my March 23 was 5 plus, it was 5.73, the stress part, which has come down March 24 to less than 5. We are 4.75. So stress is well managed, but within the segments, the two segments, yes, the agri segment that you pointed out, one, and even in the retail segment, what we have seen is the SMA 0 part of it is quite high. So if my retail is 10%, within which SMA 0 is almost 6%. So if, but that is more of a technical reason, part 50% of that is home loans. I know they will not slip. So maybe there are some technical reasons around that. But yes, MSME and agri stress will continue to remain our concerns. But let me just quickly add with the last update, the monsoon predictions are quite favorable. If those things really are happening, I think we may see, servicing of our agri portfolio also by borrowers quite well.
Okay. I'm sorry we are out of time, but you merit a half-hour show, Mr. Saxena. Thank you very much indeed for joining us. A bank well poised to take a huge leap. And of course, they have to be careful when the going is so good. On that note, curtains on Bazaar, Chartbusters coming up.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates.
A big block deal in Vedanta sees nearly 5% equity worth about 7,500 crore rupees change hands. Vedanta Resources says its arm Finsider International had sanctioned the selling of 2.5% stake for balance sheet deleveraging.
Sources say Sanghi Industries promoters Ambuja Cement and Ravi Sanghi will sell up to 3.5% stake via an offer for sale. The floor price is seen at 90 rupees a share, a 12% discount to yesterday's close.
CE Info Systems, Matma India, that is down by about 4% as equity worth nearly 140 crores changes hands. The promoters likely to have sold stake.
Piping solutions provider DE Development Engineers makes a strong debut on the street, listing with a premium of 68% to its issue price. The management will also be joining in on the show to discuss the company's post-listing strategy. Hello and welcome to Chartbusters here on CNBC-TV18. I'm Hormas Fatakia. With me is Mangalam Malu, and it is the start of the first hour of trade is complete. And as we say, the first hour in any cricket match is very crucial in a test match. But today it's been a quiet first hour of trade, the Nifty being absolutely flat, and that is because the banks are quiet in today's trading session. The banks have been leading the charge on the index over the last week and in the start of this week as well. The Nifty has just turned positive. Around 23,720 is where it is. The Nifty Bank currently trading with losses of around 100 points.
All right, the first hour and last hour both very crucial for the markets as well as cricket. But let's move on and let's talk about the debutants today. We have the management of D developers joining in. What a strong listing in this market today, over 60% in terms of a premium to its issue price, and that holds on as well. You can see the visuals of the listing itself, which happened at 9:15 today. We're now joined by KL Bansal, who's the chairman and managing director at the company, joining in now. Thanks a lot, Mr. Bansal. Congratulations. It's been a strong listing, momentous day for your company, your teams, as well as your shareholders too. But I remember we spoke the last time. You said that you are looking at margins to sustain between 20 to 22%, and also at the same time looking at profit margins to improve going forward as well. So let's build further on that conversation itself. For the very near term, what is the kind of volume growth that you anticipate in your business, and what's the kind of revenue growth trajectory that you're forecasting?
Thank you so much, sir. Thank you so much, and I shall like to say my gratitude for the strong listing also to all my investors. And now, as far as our strategy is concerned, we are very clear that, since we are already doing 50% of export and 50% in domestic sector, and power sector is coming up with a very high volumes in the near future, and similarly oil and gas also, there are a lot of potential orders which are in the pipelines. So, we are expecting I will say that comparatively much better healthy order book, and it should continue. There shouldn't be any problem as far as the order booking is concerned or order execution is concerned. We are already geared up. We have set up a new plant in Anjar, which is partially commissioned and is likely to be commissioned in near future, and our another plant at Numaligarh is already commissioned fully, and we are working over there on a full-time basis. So, our strategies are in place, our order book is in place, and our future order book also looks good. So, the growth and other things are likely to be on track as expected.
Mr. Bansal, good morning. Thanks a lot for joining in. First of all, many congratulations on your listing. A big day, as Mangalam said, for your company, for your investors as well. I'd like to ask you about your order book. As you mentioned that in the December of 2023, it stood at around 828 crores. Could you share a latest number as of March 2024? What was the order book position like?
Sir, I can only tell you that since it's not published as yet, I cannot reveal that. But I can only say that the order book is going to be quite healthy, and it's as per the expectation, and it is as per the trends which are prevalent. So, you really believe me, I mean, the order book is going to be quite on track.
All right, let's look at, back calculating some of your order book versus revenue. So FY21, your revenue was close to around 500 crores. The order book at the end was 335 crores. 434 crores was the order book in FY22 when your revenue was close to around 461 crores. First 9 months of this year, your order book was close to around 830 crores. Whereas your revenues were close to around 546 crores. So what are you likely to end this year with, that is FY24, and what are you likely to see in terms of an order inflow in FY25 and the revenue growth in FY25?
Sir, as I just told you, if you will see that, we have the healthiest order book as on December 30th. So, the same trend is going to be there all through the year. And, practically the expectation is that, the whatever order book is required to do this year business, we already have it. And, in future also, in coming future also, there is a very healthy pipeline. So, again, I'm saying that exact numbers I may not be able to reveal, but we have a real healthy order book and an execution strategy in place because of the commissioning of the new plants. We are bound to get good bottom line, and we are bound to get, good EBITDA, ROCs, and all other factors.
Mr. Bansal, you also have a facility in Barmer, correct me if I am wrong, and that is specifically dedicated to meeting the requirements of the HPCL Rajasthan refinery, the piping and erection requirements. Do you get regular order flows from there as well? Could you quantify that in numbers? How much of that is a contribution to your business in general?
Sir, right now it is very less. It's hardly maybe around 2-3% of the total revenue, and we'll continue with that unit, and we are expecting a lot of traction from there. Apart from HRRL refinery, whatever other refineries may be coming in the western sector, that can be that will be an ideal unit to suit that. But it will all depend upon our capacity constraints. We shall use that unit only if there is a capacity constraint in our main unit, which is going to be the Anjar unit and our Palwal unit. But if there is no capacity constraint, then we may just like to keep it idle. But I do not expect that, because a lot of orders, as I'm telling you, are there to execute. So we shall be continuing with that facility to serve the western sector of the country.
I wanted your thoughts on the recent expanded business. I remember we speaking about this when the IPO was open as well. The business vertical of design, engineering, fabrication and manufacturing of pilot plants. You had said that this is an important big opportunity for the industry because there are a lot of pilot plants being constructed. What we didn't get the last time is how big is the addressable market here, and what is your intention of a revenue share from this business?
Sir, the pilot plant, basically, if I try to explain you what a pilot plant means, is that, whenever there is any research and development thing happening, it has to be tried first on a mini scale plant, which we call it as a pilot plant. And, with the government of India's directive of Make in India to all the industries, whether it's a chemical industry or a pharma industry or any other industry, that's why, the need for these pilot plants has grown tremendously over the last 1 year, and we expect it to be multiplied in the coming 3 to 4 years time. And there are as a matter of fact already a lot of inquiries which are already there. Of course, again I am saying that it has a huge potential, and right now if it is 2 to 3%, we may go up to 5 to 7%, 8% also within this year itself.
And over the long term, where do you intend to take this business? I mean, from 3 to 5%, this goes all the way up to 8%. In the long term, do you have a...
Maybe around 10%. But, again, I'm saying these are just tentative figures. I cannot really put numbers to my talk right now. But, it is going to be quite hefty.
One final question, Mr. Bansal. What about margins then? Can you share a number on that now going into FY25? What do you expect the year to end with?
Sir, if you will see our historical trend, and if you will see our record even for last 3 years and the audited numbers of last nine months, you will find that it's a upward trend, and we are likely to maintain that upward trend fully. There is not going to be any dip in that, and this is what I can tell you right now, since our numbers are still not published. But we are going to be on track and following the trend which we had been doing, upward trend which we had been doing in all the numbers I am saying.
Right, Mr. Bansal, you've been guarded with some of the commentary that you've given with regards to the numbers. We understand that you will, tell us more when the results do come out. So what we'll do is we'll leave you with a promise that whenever your numbers are reported, you join us here and then give us a detailed outlook into what one can expect going forward as well. But for now, enjoy the day. It's been a good listing for you. Take a short break. Come back. On the other side, we get you more on the stock-specific action, which is currently underway in the markets.
Good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be in certain ways self-funding, at least for now.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions.
But after some quiet trading in the first hour of trade, the market's now picking up some pace. The frontline indices, the Nifty Sensex as well as the mid-cap index have now moved into the green. The Nifty Bank still, a little quiet after a big blockbuster day that it had yesterday, but still holding above that 52,500 mark. So that's an important one because a lot of put writers are active at that level itself. And we have the Nifty Bank monthly expiry playing out today as well. What's doing well for the markets are all these FMCG stocks which have been back in action. They saw some traction yesterday as well, and today we have right off the bat HUL nearly at the high point of trade, ITC doing well, Britannia has done well. So the FMCG index in itself, as you can see on your screen, would tell you that there has been some support coming in from that end of the market. So good time to get in Soni Patnaik, who joins in from JM Financial Services for a quick technical check on the market. Soni, we broke out yesterday, we're sustaining, we recovered from lows today. Do you think the second half of trade may see a flourish?
Hey, good morning, Mangalam Hormas. Thank you for having me on the show. If we talk about Nifty, then Nifty, we can see that 23,600, 650 was the resistance zone above which it broke out yesterday. It is defending that level very well today. Heading into tomorrow's monthly expiry, the range for Nifty is somewhere around 23,600 to 23,800, 850. So maybe there's still some more upside left in Nifty. As you can see, a lot of non-movements stocks are giving the support, such as we can see from FMCG counter, Reliance, IT space, which is supporting Nifty. Coming to Bank Nifty, I think Bank Nifty being my final expiry today, it may remain in a sideways range. But heading into the next series, Bank Nifty has started with very strong, aggressive rollovers on the longer side. So there's a possibility that Bank Nifty can even head towards 53,500, 54,000 in July series. And the crucial support for Bank Nifty still remains at 51,000 for now.
Another 1,000 points on the Nifty Bank. Now that is after a 6,500 points recovery from the lows that it made on the 4th of June. Soni, good morning. Thank you for joining in. What about specific stocks then? Are there some banks on your radar as well?
I think, Hamas, yes, definitely banks, you can see a lot of strong rally can be seen. But for now, two picks would come in large cap stocks itself. The first would be from the IT space, Tech Mahindra, which has actually given a very strong breakout yesterday above 1400 level in option chain and is also heading for a chart breakout above 1440. So Tech Mahindra looking very strong at current levels, keeping a stop loss of 1395 and a target of 1500, 1520 can be seen for July series. The second stock is again in large cap, it is L&T. So we can see that it is also showing good rollovers. A very strong support of 3,500 in LT can be seen, and a target of 3,750, 3,800 for July series can be seen.
Right, Soni, just hang in there because the broader markets are seeing a fair amount of traction right now. The building materials pack is doing extremely well. We're looking at all these cement stocks which are surging since morning, we have India Cements, which is now up 14%. Some other group stocks as well, or rather other stocks of that sector doing well. But home improvement too. Pick up something like a Somani Ceramics, which has suddenly spiked, and it's up 9%. And this on the back of a big move that we've seen in a lot of these tile companies already. Prospects of improvement in demand are doing well for them. But speaking about the cement space itself, do you have any picks out there? India Cements is up, JK Lakshmi Cement, among the top gainers on the Nifty today is Ultratech Cement as well, which is up around 3.5%.
Definitely, Mangalam. Cement space has also seen good rollovers and the entire sector is in good momentum. But the stock which has not moved much would be Grasim. So that would be the stock to watch out for. It has also given a fresh breakout above 2,500. It has been sustaining above this level for the last 2 days. It is important to hold that as a support. And as long as 2,500 is getting defended, the stock can head towards 2,650 for July series. So I think that's the stock one can definitely watch out for at current levels.
Finally, before we let you go, do you have a word on Reliance?
Definitely. Reliance stock for intraday is looking quite strong. It has given a good intraday breakout above 2,920, you can see. So for intraday, there's another 2,960, 2,970 level can get tested. But positionally, definitely a good stock to accumulate and hold. The stock can head towards 3050 for July series.
All right, Soni, thanks a lot for joining in, sharing with us your views on the index and specific stocks as well. Soni Patnaik there from JM Financial. Let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Madhu Chandra Dey of moneycontrol.com joins us now to talk about a stock that she is tracking closely.
We are talking about Mars Financial that has recently concluded its 500 crore QIP as it steers at its next level of growth, having achieved a key milestone of over rupees 10,000 crore in assets under management. Mars Financial is present in 7 states and lends predominantly to livelihood activities at the bottom of the pyramid. In FY24, it saw assets under management growth of 25%, and the company is guiding to growth anywhere between 20 to 25% in the medium term. While its core markets would continue to grow, Mars is also expanding into newer markets of southern and northern India. The company is making a change to its distribution model as well by relying more on its own distribution, and this should be positive for its lending yield. The company has recently seen a credit rating upgrade, and both these factors should be supportive for its net interest margin. The company has a very impressive track record of pristine asset quality, and this remains an area of focus. In the next leg of growth, there's going to be a lot of thrust on growing its affordable housing finance business. We see a great earnings story in Mars, and given the high ROA, we see comfort in the valuation as well.
All right, we had the management of MAS Financial join us a couple of days ago as well. The recent fundraising doing well for them. Thank you for joining in. Take a short break, come back on the other side. We focus on the markets and a bunch of stocks that are moving around. Stay with us.
Getting exempt. The measure of relief for students and working professionals. Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build the market. Umesh, let's talk about what is faster, leaner, better now at Unifor, since we're talking about what generative AI can potentially do.
Welcome back. You're watching Chartbusters. The Nifty is now moving towards 23,750 as we speak. Reliance is putting its hand up as the top contributor to the index upside, but it is the cement stocks that are shining bright in today's trading session. Ultratech being the top gainer on the Nifty, now 3.5% higher as we speak. But let's get you some stock-specific action. Then Goldman Sachs has written a note on the rising concerns around the health of rural lending. Abhishek is joining in with more details. Abhishek.
Well, Homas, as you said, Goldman Sachs has written a note on Indian lenders with respect to the rising stress in the rural economy that we are seeing, especially with farm loans and microfinance loans in the financial system. So one MFI player, that is Ujjivan Small Finance Bank, which we already know, has lowered their FY25 guidance with respect to loan growth, as well as increased the credit cost guidance for FY25. So NPLs in Maharashtra are elevated. PSU banks have an NPA of around 14 to 27% in these segments. If farm loan waiver is implemented, earnings will come under pressure for SBI, ICICI Bank, Kotak Mahindra Bank, MMFSL, and as well as L&T Finance. If the exposure with respect to microfinance comes in as a concern, then it will impact portfolios of the banks like Bandhan Bank, IndusInd Bank, Credit Access Grameen, as well as L&T Finance. They maintain their preference with respect to stock pick being SDFC Bank, Kotak Bank, Axis Bank, and IndusInd Bank among private banks, and Credit Access Grameen, L&T Finance, and Shriram Finance amongst the NBFCs. With respect to bureau data that has come in and management commentary that they have got, it suggests that there is a deterioration in asset quality that's taking place and over leveraging across microfinance players that's happening. So with respect to state share, where it is higher than the average of 14% on a national basis with respect to over leveraging, we are seeing it high for Tamil Nadu at 23%, Odisha at 20%, Bihar at 19%, Kerala at 18%, Karnataka at 17%, and Rajasthan and UP at 14%. Now, they also say that bureau data does suggest a sharp increase in delinquencies where lender density increases. That is, you have more lenders, 2, 3, 4, etc. That is where delinquencies are happening higher now. For example, 31 to 180-day overdue, 2.5% for lenders wherein 2 or less lenders are available, 5.9% for 3 lenders, 8.3% for 4 lenders, and 12.7% for more than or equal to 5 lenders are there in that segment. Back to you.
All right, Abhishek, thanks a lot for that. So those are a bunch of, financiers which are in focus, MFI financiers. In the meanwhile, a lot of stocks are doing well. In fact, the breadth of the market is now picking up as well. So on your screen, you would see the advanced decline ratios, and you would understand that, in just the very recent up move that we saw in the market, yes, there you have it. The green line has outpaced the red line, and now the distance is widening. So if that were to happen, then maybe the second half we could brace ourselves for a bit of an up move, just the way we're seeing in the frontline indices. The Nifty banked 2 of the lows of the morning. In fact, if we stick around for a little more, Hormaz, we can see the Nifty bank going into the green as well, because now it's just about 13 points in the red.
In 30 points in the red, and it's doing very well for itself as the Nifty bank, as it has been all through of last week. As you can see on your screen, they're almost turning into the green. And with that, it's a wrap on this edition of Chartbusters. From Mangalam, me and the team that put this show together, thank you so much for watching. Trading Hour comes up next.
How has life changed for you at Unifor?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application.
Right.
Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with Nvidia becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it was Cisco for the internet, then about 4.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar, with me Sonia Shenoy, and after a quiet, flat start, things appear to be picking up for our markets now. The Nifty's up 50 points, the Sensex is inched up 250 points, and even the banks, which had dipped into the red, is now back in the green. And as you can see, new records continue to be made.
Absolutely. I mean, the market is true to its nature, right? Continues to hit record highs. And today, every other day, you have some new leader in the market. Yesterday, day before, it was the banks. Today, Reliance is actually participating and making its presence felt. So as we speak, Reliance is one of the top contributors. In the last 1 month, it has done nothing. So now, while the market is getting to new highs and looking for new leaders, perhaps Reliance could participate as well. At least that's what you can see on the screen, 1.5% higher. The HUL is the other one. HDFC Life is one stock that has not performed at all. If you look at a multi-year move on HDFC Life, right? But today, the stock is up about 1%. So it's good for the market, not bad at all. In fact, in the broader markets as well, there's a lot of participation coming through. The important bit is this, that every dip in the market has gotten bought, and there's large buying from FIs as well. So the going has been pretty good for the market. But let's kickstart the show and get you some individual stocks in focus. Before that, in fact, let's also get you a quick handle on a couple of these names that are hitting fresh 52-week highs. ICICI Bank is one of them. Banks really have been the star of the show in the last many weeks and months. In fact, the Bank Nifty is now comfortably perched around that 52,600 mark, inching towards 53,000. So much traction is what you've seen in the banking names. This morning, Amara Raja Batteries is also at a fresh 52-week high. It's been a stock with high momentum over the last many days. Samvardhan Motherson is at a fresh 52-week high. City Union Bank as well, and a couple of other names that are looking pretty good. But CE Info Systems is on our radar on the back of a large trade. Reema, you're tracking that one?
Yes, so there has been a large trade of about 1.1% equity, which has changed hands today, amounting to close to about 150 crore rupees, and that's put pressure on the stock. In the morning, we have picked up from our sources that the promoter, Mr. Rakesh Verma, is looking to sell about a 0.9% stake in the company, and that appears to have played out. In fact, we reached out to the company as well, because, once the promoter sells, there's always fear there is more coming. To which this is the response that we got from the company. He said that, this is the first time I have sold my stake in the company since it got listed, since it became a public company. In fact, even during the IPO, I did not sell. Though other promoter entities, have sold, but he is, very much involved in many philanthropic efforts, including Atmanirbhar. This sale represents less than 1% of his shares, and he's categorically said that he has no plans to further bring his stake down. So that should quell any fear in the market. But today, of course, 4.5% down because of the large block deal. And also bear in mind, this is a stock which till yesterday was up 25% this month after Goldman Sachs had initiated coverage with a buy rating, and they put the target price at 2,800. This, initiation by, Goldman took place last week. The stock was on fire. So there is also a bit of profit booking after that kind of an up move. But that's about CE Info Systems, MapMyIndia as it's called, the Indian equivalent of Google Maps, a big B2B player in automotive and consumer tech, etc. But moving on to textiles, because we've learned from sources the government is looking to extend the 10,000 crore rupee PLI scheme to the garment sector. Mamakshi joins in with the details.
Well, absolutely. A whole host of textile stocks in focus today. Look at the likes of Gokuldas Exports, even Urban Fashion, SP Apparels, just to name a few. All of these counters are surging in the trading session today. And that is because reports are suggesting that Textile Minister Giriraj Singh yesterday said that they are now considering extending the PLI scheme to the garment sector. And this is being done to boost manufacturing and exports. Now, keep in mind that government had launched the PLI scheme for textiles in 2021. And they had approved an outlay of around 10,683 crores. The PLI scheme currently covers man-made fibers, that is MMF apparel, MMF fabrics and products of technical textiles. The industry for a very long time had been demanding that garments made of all fiber be included in this scheme in order to give a boost to the sector. And there are indications from the government that this could likely go through. The textile minister also added going forward, saying that market size of Indian textiles, which is currently at $165 billion, is expected to expand to nearly $350 billion. The ministry is also reportedly framing a roadmap to move ahead of China in this particular sector. They also see a huge opportunity in exports. Industry is expected to target nearly $50 billion of shipments in the coming years. So all of these commentaries that came through from the government is boosting all of these stocks higher in the trading session today.
Okay, thanks a lot, Vamakshi, for that. Well, that's, a couple of these textile stocks and why they've been buzzing. But let's now focus on a couple of block deals that have happened today. Vedanta is down 4.5%. Vedanta is actually down after 4.6% equity has changed hands in a block deal. If you're wondering about more details, Nimesh is here with all of that. Nimesh, over to you.
Hi, Sonia. So in terms of details, it's very clear now that the promoter entity has sold 2.5% stake via block deal in today's market. In fact, they've made an official comment as well that Vedanta Resources, one of the arms, have sold this particular stake to some large institutional investors. Now, the deal was done at an average price of 425, which means that the total size of the deal was upwards of 4,000 crores. So that's the money that the promoter entity will get, and that will largely be used to pay off the lenders. So that's been an overhang on the stock. If you look at the chart for the last few days, the stock actually has corrected from 480 to 425, 430, and now we are seeing a bit of a recovery as well. So it's a done deal. Promoter entity has in fact sold 2.5% stake. Some large investors have bought as well. As I said, this was largely to do settlement to the lenders. So the debt will at a promoter level, the debt will come down, and that will be a bit of an ease for the investors as well. But I think that's been the key details, that promoter entity is sold and some large investors bought into today's block.
Okay, well, let's now focus on Borosil. The company has raised 150 crore rupees via the QIP route. The company will become debt-free post this fundraising, says Shrivar Kheruka, who's the managing director of Borosil. He also spoke about the company's revenue targets and the capex plan going ahead. Listen in.
We've done a fair bit of expansion for a company our size in the last 2 or 3 years. We've invested more than 600 crores in the business altogether, and we raised about 150. Now the business itself has been growing, well. Last year, we closed the year about 950 crores of revenue. This is up roughly 4 times in the last 6 years. So we see a future capex as well coming up, for which again we will raise some debt. So those are the main reasons for the QIP. And we have now with this we'll be back to almost zero debt. So in terms of view, given that we have more expansion plans coming up and we have a internal metric that will not go beyond a certain level of debt, we wanted to come back down to zero, and then we don't mind again going back up when the expansion does work out. I would say that we would stick to our 15 to 20% medium-term CAGR growth kind of numbers. Obviously, that's not specific to any quarter, but general yearly trends. I can't give you any specific timelines, but I do believe that probably sometime by the end of this year we will announce something. We will announce the new capex cycle.
Okay, we'll announce a new capex cycle. By the way, just wanted to mention that Kotak Mahindra Bank is really surging now, and that's adding to the market's glory at the moment. Big moves coming in on Kotak Mahindra Bank, 1.5% higher. Just in the last 5-10 minutes, we've seen a big rally there. So banks continue to pack in a great punch for the market. Let's slip into a quick break. On the other side, we will discuss what's buzzing in the commodity space with Manisha Gupta. Stay with us.
Cloud, and now Nvidia is clearly leading in terms of AI, and they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast Nvidia is growing, and it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy, well, implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today? As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India. The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court.
Testing.
Welcome back. As promised, let's talk commodities. Manisha Gupta is now joining in, and she's got her eye on soft commodities. Manisha, how have they performed in the month of June?
Well, not very well. If you look at the month of June, Rima, it hasn't been very kind to commodity bulls, really. While April and May were stellar months, and we saw almost all commodities trade at multi-year, multi-month highs and all-time highs for some of them as well, June has seen some consolidation, even some profit-taking for that matter. Well, to call it the strength in US dollar index has been one of the reasons for that as well. So we've seen profit-taking actually come in for the edible oil space. So whether it has been about soybean, palm oil, sunflower, all of these commodities are ending into the negative. Soybean is down by almost 6% at the same time. The international wheat prices also have continued to decline because you're looking at stronger wheat production coming in from the major producers. Is the reason there has been conversation in India that if there is a wheat shortage, this perhaps is a good time to start importing because the international market prices have continued to decline. Rubber is another industrial commodity where the month of May was quite strong, but June we've seen 2% of a cut coming in. Cotton prices have declined by 15% as well. For cocoa as well, which was hitting all-time highs in the month of April, May was a month of consolidation, but June clearly has seen a very sharp decline coming in. For the month, it is 10% on the weaker side. Rice has been flat, but gains have come back in case of sugar prices, 2.5% until now for this month right now. And corn is the other one which has seen very sharp declines. This is again because the international markets have seen better production estimates coming in. So as I said, hard commodities, soft commodities, most of them headed for a weak June.
Okay, Manisha, thanks a lot for that. Let's slip into a quick break. When we return, we will discuss market technicals with Mitesh Thakkar and also discuss their top trading bets. Stay tuned.
Back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. We have open and flexible policies where some people can pay for it up front and get a discount and others pay for it on a month-to-month. So having flexibility makes sense. But, you know, it's something that we will address, but we certainly believe that we have been flexible. You know, we offer customer choice and we're completely transparent about this. You know, when you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the Content Authenticity Initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, you know, that I wouldn't call it a trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that, you know, the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, you know, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, you know, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, you know, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time.
Welcome back. Well, NDA's candidate Om Birla has been elected as the Speaker of the Lok Sabha for the second time. Remember, he's a third-term MP. Birla is also a three-term former Rajasthan MLA and has risen through the ranks in the BJP. And finally, now Om Birla has been elected as the Lok Sabha Speaker. It was a historic election, actually, for the the candidate as the Lok Sabha Speaker. And finally, Om Birla, he was a former Lok Sabha Speaker as well, but he was picked again by the ruling BJP-led NDA, maintaining its streak of continuity in its third term by fielding him for the crucial parliamentary position again. All right, well, that's Prime Minister Narendra Modi as well, speaking at the Lok Sabha. The Lok Sabha has adopted the motion moved for the Speaker and NDA's candidate Om Birla elected as the Speaker of the Lok Sabha. All right, we'll get back to more on that in a bit, but moving on back to what we track best, which is the markets. The telecom spectrum auction saw a muted bidding on day one. Reema, how did it look?
Well, just to put some numbers first, there were 8 bands which were up for grabs. 3 of them saw bidding. So they were the 900, 1800, 2100. The balance 5 did not see bids on day one. Now, out of a total 96,000 crore, which was an offer, we saw bids worth about 11,000 crore rupees. Most of the bidding in those 3 bands was, concentrated in 900 megahertz, which out of 11,000 accounted for 7,000 crore worth of bids. And most of the, spectrum has been won at the reserve price. In very few circles in 1800 have we seen bids above the reserve price. Now, telco-wise bidding details are not known. So you don't know how much Bharti has bid, how much Jio has bid, or Vodafone Idea. So those details are not known. But I spoke to a few analysts, and given, the spectrum-wise details, circle-wise details, here is what they have gleaned out on what the day one performance looked like. For Bharti Airtel, they've largely focused on renewal of spectrum, particularly in 900 megahertz. They may have gone for some top-up. Vodafone Idea also largely appears to be bidding for renewal of spectrum, and Jio's participation appears to be limited, though this time they have the ones who have put in the maximum earnest money deposited. But again, this is what analysts have picked up. So largely, you would say, muted action on day one, but the activity continues even today, day two. Mitesh is now with us for a quick technical check on the markets. Mitesh, today is the day of Reliance Industries to put its hand up and move the markets. First, how have you made, what have you made of the morning? We are consolidating with a positive bias, pushing the boundaries, a bit further on, and then on Reliance Industries.
Actually, Reema, I'll start with Reliance. It's on my radar. I have it as one of my recommendations right now. Looking at a target of 3020, last 2 times the stock has here, it's made an important high and failed to clear the segment. So we'll start with a trading target of 3020 and a stop at 2924. But my sense is that after about a few months of consolidation, if the stock starts getting past 3020, 3030, then I think we are looking at a 10-12% kind of another trading move happening over here. So the bigger setup is very bullish, and in the short term as well, for the next few days, I think it should at least test the earlier highs. So that's the first buy call. The Nifty IT is doing well, apart from the fact that the Nifty Bank has turned positive. So I think in that sense, that will keep the Nifty strong. I have a buy on TCS with a day's lowest stop loss, which is about 3842. Look for targets of 3920. And broadly, this all, overall, the way the Nifty Bank and the Nifty IT is shaping up, we could see the Nifty in the next few days head towards 23,950, which is what I've kept as a trading target for last few days.
Okay, Mitesh, thanks a lot for that. Well, what about individual stocks? What are we looking at this morning?
I just fired those buy calls, Reliance and TCS.
Okay, Reliance and TCS. Got that. Thanks a lot for giving us all of those cues. Let's do one thing. Let's take a short break. When we come back, we'll get you more on the market on the other side. Stay tuned.
A whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least supporting a friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans, like we have passionate fans in cricket, But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League cricket here, and I'm part of the San Francisco Unicorn team, and so it's fun.
So the Hyderabad mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this.
Welcome back. Well, let's get a quick word on the market. In case you missed out on it, we're back at record highs. There was a little bit of consolidation, but that didn't even last for 1 hour. The market sort of took off in the last half an hour, and there we are, fresh record highs over there. But let's shift focus to the hospital space now. In a recent note by Macquarie, they say cracks in the armor are starting to show. The report suggests that Indian hospitals' top-line growth has been primarily driven by rate hikes as volume growth continues to moderate. To discuss more on this report, Kunal Dhamesha, who is a senior research analyst at Macquarie Capital, joins in. Kunal, hi, good morning and thanks for being with us on the show. Tell us a little bit about your report. Why do you feel that there is a slowdown that we're seeing in the Indian hospital space, and what are the primary concerns?
So I wouldn't say it is a slowdown. I think we are just catching up with the historical mean. If you look at the long-term trend in terms of the inpatient admission growth, it has always been around mid-single digit for the industry. Now, COVID was a bit of a disruption. In FY21, the inpatient admission went down, and then they kind of started catching up, and hence FY22 and FY23 showed significant growth for the hospitals, and then FY24 again is normalization. So there was a pent-up demand due to COVID, and the international patients were also almost went to zero during the COVID time. Both these things kind of came back in FY22 and 23, which kind of gave the hospitals the above normal kind of demand. But that has been kind of normalizing now. And FY24, if we see the industry-wide inpatient admission growth is only around 5%.
Okay. So that's factor number one. The inpatient admission growth has narrowed down, has come down to 5% last year versus about 25% in FY22 and 23, which was driven largely due to pent-up demand related to
Sorry.
What about the industry average revenue per occupied bed per day, which we call as RBOB? That too had seen a substantial increase in the past couple of years. Can you give us some numbers on the kind of increase we've seen on the RBOB, during the COVID period and its aftermath, and what can we expect going forward on that metric?
Sure. So I think if we remove the last 5 years, I believe the ARPOB growth in the industry was somewhere around high single digit. Now, if we add the COVID period, the last 5-year ARPOB CAGR is around 13%, around 11%. And if we just look at the last 3 years, the ARPOB CAGR is even been more pronounced at around 13%. So what we have done is we have tried to break it down to various drivers. And, there are 4 key drivers of the ARPOB. One is procedure rate hikes. Another is payer mix refinement. Specialty mix changes, and average length of stay reduction. Now, average length of stay reduction is more or less very mathematical. If you look at all the large companies, ALOS has come down by around 1% CAGR. So out of these 11% CAGR, 1% is driven by ALOS. And then specialty mix has been driving low single digit ARPOB CAGR. And if we also look at the payer mix, again, 2.5 to 3% would have been driven by the payer mix refinement. So we are left with roughly around 6-7% of the ARPOB CAGR in the last 5 years, driven by the rate hikes.
Okay, but why do you think the RBOB growth rate will moderate? Why is it not possible to assume that we will continue to see an increase in the procedural rates?
So my sense is, the ARPOB, the procedure rate hikes are again linked to the insurance rate hike cycle. And insurance rate hike cycles are typically 2 to 3 years. The contract mentions 2 years, but the final rate hikes take around 3 years to take the impact. And we have just passed a big rate hike cycle by the insurance companies. And hence, I think from here on, it would be much more moderate. If you look at So we have also provided data for the largest health insurance company, Star Health. If you look at their medical loss ratio in the last 5-6 years, it has sustainably gone up from 62 to 63% range to around 65 to 67% range, which directly means that there has been substantial rate hike which has happened. And in response to that, insurance companies have started taking premium hikes. But since we are, the rate hike cycle is behind us, I believe that from here on it would be much more moderate in terms of rate hikes. Second, the sector itself is looking at significant capacity expansion. And when they open new facilities, they will be open to all kinds of patient, be it a CGHS patient or be it a cash paying patient. And CGHS or institutional patients are typically a low ASP patient. So that could lead to payer mix dilution, and hence the 2.5% CAGR through payer mix dilution that we have seen in the last 5 years could be much lower going forward. And then on a specialty mix, again, because the capacity is expanding, hospitals will not be able to choose which kind of patient they want to do, which kind of surgeries they want to do. They would be welcoming everyone into the new hospital, and hence the specialty mix portion can also be lower. So combination of all this, in my view, would lead to lower ARPOB growth, and hence I expect the ARPOB growth to be more like 8-9%.
Okay, that's on competition, but there's also a lot of capacity addition, right, that's happening in the sector. Do you think that could affect profitability? And if yes, which companies or which stocks could it hit the most?
Sure. So I think we have highlighted that the next 3-year bed capacity addition within the sector is almost around 14,000 beds by the top 8 hospital companies which are listed in India. And this compares to only around 3,200 organic bed capacity addition which has happened in the last 5 years. So the capacity addition that we are going to have in next 3 years is 4 times what we have seen in the last 5 years. And typically, whenever a new hospital is opened, we have seen that it's a high fixed cost business, and hence it leads to negative operating leverage. A new hospital becomes EBITDA break-even at roughly anywhere between 40 to 50% occupancy level. So till that time, it continues to remain EBITDA drag. And within our coverage, within Apollo and Max Healthcare, Max Healthcare is going to expand the capacity by almost around 80% in the next 3 to 5 years. So I think the larger impact would be seen there on Max Healthcare profitability. Versus Apollo is expanding their capacity by around 25%.
Max's capacity goes up by 80% in the next 3 years.
Yes. Yes.
And Apollo's is 25%.
22 to 25%.
Around that number. Okay, got it. You've also said in your report that you are meaningfully lower than consensus expectations. You've laid out the reasons for that, but just lead us through what the valuation picture is. What is consensus right now in terms of a PE? Where do you stand? And what has been the historical valuation multiple that has been ascribed to Apollo Hospitals and Max Healthcare?
So I think historical valuations is completely out of picture right now. I think both this stock would be trading way above mean plus 2 SD level of EV by EBITDA or PE, whatever valuation metric you choose. With respect to peers, the way I look at it is I look at more from a region perspective, wherein we include the Indonesian, Malaysian, Thai hospitals as well. And the entire region right now would be trading at around 20 times EV by EBITDA on FY26 number. Versus that, Apollo on our EBITDA estimate is trading at around 27 times, and Max is trading at around 36 times EV EBITDA on our FY26 EBITDA.
Okay. We will thank you on that note, Kunal. Thanks for joining in and speaking to us on CNBC-TV18. That's Macquarie Capital with their view on the Indian hospital space and how it's going to shape up. By the way, let's just move on and talk about Prince Pipes, which is surging in trade after a Nuvama note where the brokerage house sees a 22% upside for the stock. Vamakshi is here to tell us why Nuvama is so bullish on the counter. Vamakshi, over to you.
Well, absolutely. Nuvama has come out with a report. They met up with the management of Prince Pipes recently, and here are some of the important takeaways from that meeting. The piping sector demand continues to stay very strong from both the infrastructure perspective and plumbing. Management is confident of nearly 15% volume growth along with nearly 12 to 14% margins in FY25, and they believe that there is upside to this guidance if the PVC price rally continues. That could lead to restocking and inventory gains. They're expecting to break even in the bathware division within the next 4 to 5 quarters, so that bodes well for this company as well. With recent expansion at Jaipur, Telangana and now Bihar, they're moving towards having a pan-India capacity. Debottlenecking at various locations could also drive growth further for this counter. They're on track to reduce receivable days from mid-80s to almost 65 to 70 days in the near term, and they are also on track to reduce this further to 60 days by the first half or quarter 3 of FY25. They believe that India's real estate revival along with infrastructure push have paved the way for plastic pipe players, and as a result, given all of these factors, they've retained their buy rating on this counter with an unchanged target price of 830 rupees per share.
Okay, stock is excited. What about CG Power? UBS has come out with a note. There has been a target price increase. Did they meet the management? What transpired?
Well, absolutely. UBS met the management of CG Power, and largely the takeaways are as follows. Industrial product business is on a stable track. They are directing their efforts to upscale revenue from i3 and Ford Motors. The company also wants to consolidate its presence in the drive segment as well. The railway segment too is seeing very good demand. They say that Indian Railways locomotive demand has now risen to from 1,000 to 1,500 annually. The company is looking to plug product gaps for semi-high-speed rail as well in Vande Bharat segment. And in the medium term, they're looking at Vande Bharat metro rail as well as exports to markets such as the US. Additionally, India's target of nearly 500 gigawatts for renewable power is expected to drive demand for transformers and switchgears over the next 4 to 5 years. Transformer slots in Western markets, in fact, are booked out until FY28 to 29, and they're looking to explore more markets beyond the existing ones such as US as well as Canada, given that there is limited Chinese competition out there. They expect to retain focus in the medium to high voltage segment in the electrification portfolio is what they stated. Now, additionally, what they are also highlighting is that despite investments in OSAT, motors and power system expansion, the company will still have additional cash to expand their total addressable market. Recent capex across categories, which includes switchgears, transformers and motors, will also enable the company to ramp up their export revenue, which is generally considered to be a high margin business. All of this bodes well for the company. Given all of these factors, UBS has gone ahead and maintained its buy rating but has increased its target price from 350 per share to 370 per share.
Okay, thanks a lot for that. Just look at the market zoom now, almost 100 points higher. The Nifty has hit 23,800 for the first time ever. The Sensex cruising above that 78,000 mark. It's turning out to be a very, very good day of trade. In fact, good time for us to get Tridip Bhattacharya of Edelweiss AMC on the other side of the break to chat more about the markets and where it's headed. Stay tuned.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son, to watch a World Cup cricket in New York. And, you know, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or
Yeah.
at least supporting a friend's team.
And so it's a passion, and, you know, I don't know that we have enough of a farm system here, Shireen. I mean, you know, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, you know, whether it's Satya or me, you know, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League, you know, cricket here. And, you know, I'm part of the San Francisco Unicorn team. And so it's fun.
So the Hyderabad mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, you know, I mean, rather than, you know, in this case, the mafia, this is all about a passion, you know, and cricket's a global sport. And actually the funny thing about sport just brings together people like no other activity. And, you know, just the amount of excitement but now we have to go win it all, right? I mean, we've just got to the, you know, Super 8s. And unfortunately, the India-Australia match, I have a board meeting on that day. So it's going to be...
Big conflict.
No, the board meeting is going to take priority. But, you know, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally.
Okay, fresh records for the market. The Nifty now well above the 23,800 mark, flying away as we speak. The Bank Nifty is just surging. There's no stopping this market. Large buying from FIIs as well. Tridib Bhattacharya, the CIO equities at Edelweiss AMC, joins in now to discuss market fundamentals, his top sectoral picks. Tridib, this is really great tidings for the market. I mean, you know, it's in its full glory at the moment. I mean, you know, overcoming every wall of worry. How are you feeling about it now? Do you think this trend is something that can continue, and how do investors approach it?
Yeah. Hi, how are you doing? Thanks for inviting me to your show. I would say that overall, I think the markets, the underlying current of the market is changing over from macro to micro, which is something which we are closely watching. With the elections out of the way, and with the budget right in front of us and the earnings season of for the June quarter, we think that forthcoming data points would be more about more dominant on earnings rather than kind of, you know, of course, after the budget, once we know the key policy details, the second half of the year would be mostly earnings dominated, and that's where we have our focus on. In that context, whether the government balances the historical areas of growth like industrials along with a bit of populism, that needs to be kept in mind. But net-net, I think the headlines would be a lot more about earnings in the second half of this year rather than macro announcements that we have seen so far.
Tridib, morning. You manage a lot of funds, the mid-cap fund, small-cap fund, and that's where all the interest and activity is. Have you made any changes in your portfolio or the way you're approaching it now?
Yeah, I think one of the fundamental tenets that the market is likely to change over the next 12 months versus last 12 months is moving from basically a margin-led growth to a top-line-led growth. Basically, coming out of COVID, a lot of operating leverage has flown into higher earnings growth than top-line growth, which I think from fiscal year 25 onwards will get into more balanced, and hence companies would have to generate top-line growth to generate superior earnings growth. So with that background, I think two of the areas where we find top-line opportunity to be fairly strong are the areas that we've added. The first in that context is basically, I would point to the data center exposed companies. I think what we have figured out based on research over the last few months is that this is one area where, in terms of capacity, is likely to double every 2 years over the next 5 years. And hence, the companies which provide nuts and bolts to these sort of companies, the data centers and whatnot, will clearly have superlative earnings growth. And exposure to this area is something that we have added on to, particularly in the mid and small cap domain. The second area that we have added on to are the component companies. These are the companies where, with a lot of capacity coming in from Apple, from Micron and other global companies, the supply chain of these companies would see a major benefit over the next 2 or 3 years. Again, we can't get into stocks, but companies exposed to these two supply chains is something that we have taken particular liking to over the last 2 or 3 months in our portfolios.
So Trildeep, I understand you can't name the company that you have bought, say in the data center business, but at least can you tell us the 5-6 companies which are present in this particular sector, and then our viewers can do their own due diligence? And how do the valuations stack up? Because right now the concern is that, all the stocks are expensive. So, first just tell us all the listed companies where, the exposure is there for data centers, and how are the valuations?
Yes, I think basically, rather than, again, getting into specific names, I would point out to two parts to the data center opportunity. One is the asset owners, the companies which provide the land, and they are the real estate companies which are exposed in there. And second are the companies which kind of, provide some nuts and bolts to data centers, which could be gensets, which could be power supply or some specific type of maybe transformers and areas like that. So these are the few parts of the supply chain of the data center business, which taking exposure to, particularly over the next 3-5 years, could add to good amount of maybe kind of growth or earnings momentum to the portfolios, and that's something that we have taken a good look at.
Got it. So you said data centers, the companies that provide infrastructure to data centers, and of course the ones that you just spoke about. Any other areas where you see a lot more traction? I mean, the government has a thrust on several areas, right? Whether it's defense, whether it's railways, whether it is new energy, anything in those spaces that you still like despite the rally?
So I think, what we have also, so the other area is the component companies, the component companies which supply on to the ultimate supplier being TSMC or Apple or those Micron. Those would see a material benefit over the next 3-5 years as well, driven by PLI. And I think we would expect some sort of a component-related PLI scheme to be announced alongside budget, or maybe over the next 3 to 6 months. So that's one area where we have taken meaningful exposure to. The third is we've gone in a little deeper in the context of railways, where while historically, of course, demand in real estate or in railways has gone up. But if you look at the electronics component in the context of railways, is likely to increase manifold, because the incremental spend is likely to be in areas, whether it's Vande Bharat or various different wagons. The electronic component is likely to go up materially. So companies that benefit from the same would see strong earnings come through, lot of ordering that will come about in that area as well. Defense continues to be our favorite, so there is nothing new in there. I think there we have taken a particular kind look at the PSUs, because we find the valuations of some of the private sector defense exposed companies versus what they bring to the table very high. And our exposure in that context is more exposed to kind of the PSUs, and we think they bring certain expertise over the last 20-30 years, which at the moment, if you ask me, are better than what we see in the private sector companies as of now. So that's how we are looking at defense as well.
How are the valuations of the PSU defense companies, Trildeep?
Clearly higher than what we used to deal with a couple of years ago.
Yeah.
But I think what we particularly analyze with a keen eye is the size and the duration of the order book. What we find is that while these companies were historically neglected with kind of no focus coming in from the government or otherwise, the order books for the next for these companies for the next 5 to 10 years look particularly robust. So the longevity of growth is what makes us positive. And because kind of I'm making a statement on defense, let me also calibrate saying that we are looking at obviously the PSUs where valuations are relatively lower, as opposed to some of the private sector ones where valuations have really kind of crossed over to stratospheric heights. So we're mindful of valuations, but at the same time we realize that with about 5-10 year order books full, I think the operating leverage that some of these companies could see could be interesting to sort of participate in over that time frame.
Okay, well, we'll leave it at that. Thanks a lot for joining in and speaking to us. We'll take a quick commercial break. We'll get you more on the markets on the other side. Stay tuned.
Well, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1000 to Nifty.
Welcome back to Trading Hour on CNBC TV18. We learned from sources that Bank of Maharashtra and Central Bank are looking at raising funds through the QIP route. Sapna joins in on the phone line with details. Sapna, over to you.
Yeah, that's absolutely right. And this has been a plan that has been in the works for quite some time. So we are given to understand, I think, 5,000 odd crores as far as Bank of Maharashtra is concerned, 2,000 crores as far as Central Bank is concerned. In fact, if you can recall, some time back, UCO Bank had also got an approval from the AGM. We are given to understand, as far as UCO Bank is concerned, maybe around 2,000 crores of IPO is what they are targeting for the current financial. Now, of course, this is going to be in tranches because it depends on the on the capital raising appetite of investors as well as the requirement of banks. But safe to say that this is also helping the banks to bring the government shareholding down, dilution of government equity. Bank of Maharashtra, of course, is the closest to that 75% benchmark, or rather 25% public float that they have to meet. So apart from raising growth capital, this is also serving the purpose of dilution of government equity in these banks. I think all of this is going to unfold over the next year and a half, maybe about 2 years. At least 3 out of the 5 banks should be safely meeting the SEBI norm of 25% public shareholding. This is what we are given to understand as of now.
Thank you very much for that. Staying with the story, one bank which has been a market favorite for the past year is Bank of Maharashtra. The stock has seen a gain of 138% year on year, and that's due to its improvement in the quality. The bank's ROA at 1.73% compares with quality private sector banks. And today, as Sapna was telling us, we also broke the story about the bank looking at a 5,000 crore QIP. Earlier, we chatted with Nidhu Saxena, MD and CEO of Bank of Maharashtra, to get more insights on the fundraising plans and the outlook. Listen in.
There is no urgent, emergent need on me to raise the capital for growth. But yes, I am currently maintaining a CRAR of around 17%. I think in mind, we have actually taken a board approval, and board has permitted us for this year for a capital raise. But what will be the deal size and what opportune time And as we go along the year, we will take a call at opportune time and do the capital raise. So maybe we can improve this number also and go up to between 0.5 to 0.75 because the way PCR is already there, high PCR, I think that should not be a challenge. So we plan to do that. CASA, our guidance for this year, if you look at, that number is, we will maintain our CASA above 50. There is no big issue on that. I'm keeping a guidance because I'm going for expansion also. I'll be recruiting also. So 1,000 officers and other recruitments of specialized vertical officers we are planned. And that part of the exercise is already completed. So I'm keeping a guidance of less than 40 cost to income to be maintained. Accumulated losses still allow me this current year. My estimate tells me that we may not be requiring. We still have a accumulated loss of more than 6,000, around 6,000 crores. Within the segments, the two segments, yes, the agri segment that you pointed out, one, and even in the retail segment, what we have seen is the SMA 0 part of it is quite high. So if my retail is 10%, within which SMA 0 is almost 6%. So if, but that is more of a technical reason. Part 50% of that is home loans. I know they will not slip. So maybe there are some technical reasons around that. But yes, MSME and agri stress will continue to remain our concerns.
Okay, well, moving on, the RBI is confident of achieving 7.2% growth for the current year, says the RBI Governor Shaktikanta Das, addressing the 188th annual general meeting of the Bombay Chamber of Commerce and Industry in Mumbai. He spoke about India's growth trajectory and the central bank's main focus moving forward. Listen in.
We are confident about the 7.2% growth for the current year. Of course, in any projection, in any forecast, there would be always risks to the upside and risks to the downside. What is for real today is that global growth is improving, but at a slower pace. Rural consumption, which was lagging behind for a long time, has picked up. The sales of FMCG goods in the FMCG sales volumes have increased in the rural sector. What India has been experiencing and what India needs in the future is a growth that is driven by multiple sectors. A country of 140 crores, a country which is now the 5th largest economy, aspiring to become the 3rd largest economy, a country which has aspirations of becoming an advanced economy when we reach 100 years since our independence. A large country like this cannot depend on a single sector, whether manufacturing or services or export-led growth or whatever. It has to be a multiple sector driven growth story for India. We are completely focused on, as a central bank, we focus on price stability, we focus on controlling inflation because it is in the interest of long-term growth.
Okay, it's climbing higher and higher for the markets, 23,800 plus. It's a century on the Nifty, while the Sensex has raced away to a 400-point gain. Fertilizer names are seeing some buying. So NFL is up close to about 5%. RCF is up 2.5%. So that's a pocket with high interest. IREDA is also seeing some buying interest. The stock has moved up close to about 3.5%. India Cements is a big mover today. India Cements has seen a gain of close to about 18% Garden Reach Builders, I think for the 3rd day in a row, it's seen some solid buying, 27% up so far this week. Z Media, where there is a board meeting where they will consider a fundraise, is up close to about 7%. And Bandhan Bank was under pressure yesterday because of the RBI appointing an additional director on the board. But today, Bandhan Bank has recovered and has gained close to about 2%. Well, with that, it's a wrap on trading hour from the entire team that put this show together. Thank you very much for watching.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain.
documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insight.
Stocks see broad-based gains. Cement and FMCG are prominent gainers, while metals and realty are the big drags.
Vedanta sees a large trade of nearly 2.5% equity after parent Vedanta Resources allows its bank to sell the shares, Vedanta Resources shares. This will help deleverage its balance sheet.
Sources tell CNBC-TV18 that Bank of Maharashtra and Central Bank of India are likely to take the QIP route to dilute equity to meet SEBI's minimum public shareholding norms.
MapMyIndia promoters sell under 1% equity to fund philanthropy and venture investing, while Tega Industries promoters take the OFS route to offload 3.5% equity to meet minimum shareholding norms. Good afternoon, and it's a very good afternoon if you're a bull. It's a wonderful recovery that we've seen from the lows. Another day, another record high for the frontline indices. It's led by the Nifty, which after conquering the 23,700 mark yesterday, has gone past the 23,800 mark today. A 100-point uptick as we speak from yesterday's close, but a lot more from today's low as well. And what's leading the recovery is Nifty Bank. Was a late starter in day and now has gone past very close to that 53,000 mark. 52,935 is where the Nifty Bank is at. So all guns blazing for the markets. Hormuz looks extremely good so far. We had the mid-cap index underperform, while at an index level it's still underperforming. You know, the advanced decline ratio will tell you that we've seen more stocks gaining in the last 2 hours than there were in the first 2 hours of trade.
It's a good afternoon indeed, and you can call it a wonderful Wednesday if you would like that for the market. The Nifty now heading towards that 24,000 level now. But the Nifty Bank, as you just mentioned, it's been the star of the show all through last week. It's continuing from where it left off from last Friday. Now it's heading towards that mark of 53,000 as we speak. The banking stocks leading the charge on the Nifty in today's session. But other than banking stocks, actually, there are a lot of index heavyweights that are putting their hand up as well. Reliance is one of them. The second second best performer on the Nifty this afternoon, almost 2% higher now, is Reliance, now heading towards the mark of 3,000 once again. There's to a 29.70 there on Reliance. But the sector of the day, if you would like to call it that, is cement. And every cement stock today, almost every cement stock as you would speak, is trading with substantial gains in today's session. Ultratech is the top gainer on the Nifty, continues to remain so, 3.5% higher there on Ultratech. India Cements was at one point trading with double-digit gains. That is also seeing a very good day in today's trading session. So good going there for cement stocks, but there is some pressure points as well in the market. The realty index was under pressure yesterday, was down almost 2%. That continues. It's almost down 0.7% in today's session as well. So some bit of profit booking continuing at the realty index level, and the Nifty metal stocks are the ones that are also continuing to see some bit of profit booking, and that is predominantly led by Vedanta. We'll speak more about that as the show goes on. But overall, a good day for the market.
It's a good day so far. I'm looking at a couple of these media stocks which are doing extremely well as well. So Z is picking up pace. A lot of people, it keeps moving around here or there. But one of the stocks which, is moving higher right now is Sun TV. So Sun TV did extremely well all of last week, and thereafter now it's moving higher as well. There are a couple of triggers for Sun TV. The most important one, of course, will be whether they decide to demerge their IPL team or not. And the second thing is the cash that they have on their books. So X, the cash and the valuation one ascribes to the IPL team, the remainder of the business would be available at around 6 to 7 times EB to EBITDA, which a lot of investors believe, would be an interesting bet. So let's see how that goes about from here on as well. So that's about Sun TV. But one of the stocks which we are watching out for today is Borosil. The company's raised about 150 crores via QIP. This is our special segment, Insight Edge. And the insight out here is that the stock, while it has seen a bit of a decline from the highs, it's seen a decent move also earlier. And this morning we had the management who joined us as well. The big question we asked them that, why is it that you raised funds just to pay that 150 crore debt that you have on your books? There was an interesting answer to that. They said that, they increased their debt beyond their comfort levels. So being conservative, they wanted to get rid of that debt immediately. And also they have some expansion plans ahead. So they may want to, go ahead and take some more debt going forward. So as a result of which, they were erring on the side of conservatism more than anything else. They will tell us what those expansion plans are at a later date, but these are expansion plans that they have for the end of this year. Apart from that, they've also said that in this first quarter, while business has been slow in the general trade side of things because of heat, modern trade and e-commerce have picked up. So they continue to stick to the 15 to 20% revenue CAGR for their consumer business going ahead, as they are playing tableware as well as kitchenware, the tiffins, etc. we hear from Borosil as well. So that's a big macro trend that they are playing. And importantly, they have also plans for some sort of inorganic expansion which they're looking at in this space. So let's see how that pans out for Borosil itself. Very recently, they demerged the scientific wear business as well, which too is listed on the bourses as Borosil Scientific. Let's see how that pans out too. But for now, the consumer business is something that we're talking about. We spoke with Srivar Kheruka, who's the managing director of Borosil, and let's hear out what he had to say.
We've done a fair bit of expansion for a company our size in the last 2 or 3 years. We've invested more than 600 crores in the business altogether, and we raised about 150. Now the business itself has been growing, well. Last year we closed the year at about 950 crores of revenue. This is up roughly 4 times in the last 6 years. So we see a future capex as well coming up, for which again we will raise some debt. So those are the main reasons for the QIP. And we have now with this we'll be back to almost zero debt. So in terms of view, given that we have more expansion plans coming up and we have a internal metric that will not go beyond a certain level of debt, we wanted to come back down to zero, and then we don't mind again going back up when the expansion does work out. I would say that we would stick to our 15 to 20% medium-term CAGR growth kind of numbers. Obviously, that's not specific to any quarter, but general yearly trends. I can't give you any specific timelines, but I do believe that probably sometime by the end of this year we will announce something. We will announce some, the new capex cycle.
The management of Borosil, they're speaking to CNBC-TV18. Some interesting names as well in the QIP. The DSP Small Cap Fund was issued almost 40% of the shares of the QIP. Morgan Stanley was issued shares. Societe Generale was issued shares. So big names there buying shares of Borosil in the QIP. But the stock off the highs of the day, currently trading with a negative bias.
150 crore QIP, 40% of that would not be too much. And given the sort of paper that is available for supply out here and the demand that there is for funds, etc., it was only a matter of a few minutes that this would have been subscribed, I guess.
Indeed. That's right. Borosil for you. And moving on from Borosil to focus on financials now, Goldman Sachs has written a note on the rising concerns around the health of rural lending. Abhishek is here with those details. Abhishek.
Well, Goldman Sachs has written a note on Indian banks and lenders, rising concerns with respect to health of rural lending, that is farm loans as well as MFI in the financial space is a key area of concern. One MFI player, that is Ujjivan Small Finance Bank, that we all know, gave a guidance of lowering the loan growth as well as the rise in credit costs that they foresee for FY25. So NPLs in Maharashtra are very high. PSU banks have a gross NPA anywhere between 14% to 27% to these loans, small ticket size loans. So now if a farm loan waiver is implemented, earnings will come under pressure for banks like SBI, ICICI Bank, Kotak Bank, MMFSL as well as L&T Finance with respect to farm loan waivers, and they will impact the exposure in MFI segment as well. So Bandhan Bank, IndusInd Bank, Credit Access Grameen as well as L&T Finance. So they maintain their preference with respect to top pick being HDFC Bank, which is followed by Kotak Bank, Axis Bank, IndusInd Bank. Among the private lenders and amongst NBFCs, they prefer Shriram Finance, L&T Finance as well as Credit Access Grameen. So they have done some bureau analysis with respect to bureau data management that has come in, and that commentary does suggest that there is deteriorating asset quality environment and over leveraging across states. So we had highlighted in FinStreet as well as that 6 to 7 loans are given to a single customer of one of the key companies in MFI lending. So select states where share of borrowings have more than 3 lenders is higher than the national average of 14%, includes Tamil Nadu at 23%, Odisha at 20%, Bihar at 19%, Kerala at 18%, Karnataka 17%, and Uttar Pradesh and Rajasthan, where you have 14% of the customers which are over leveraged to more than 3 lenders. And now bureau data also suggests that there is sharp increase in delinquencies where lenders have density as and when it increases for them. So if you take a look at 31 day to 180 days, in that bucket, if you have less than 2 lenders, the delinquency is about 2.5%, 5.9% where there are 3 lenders, 8.3% where there are 4 lenders, and about 12.7% where there are at least 5 or more lenders. Back to you.
All right, Abhishek, thanks a lot for that. Meanwhile, an interesting move that is underway in the fertilizer pack. Remember, the last couple of days, we saw some bit of profit taking in the fertilizer stocks, and that after there was no relief that came in from the GST Council meet. Ahead of that, there was a bit of a run-up. But look at something like a fact which has recovered from the lows. RCF has done well. Chambal Fertilizers actually came out of F&O ban. So that's a stock that we'll be watching out for if there is any move ahead of expiry on that one. Yes, that too is off about 3% from the lows. So all these stocks are now, bouncing back from the lows that we saw in the last couple of trading sessions. We'll keep an eye out on that. Take a short break, come back, get you more on the markets. A lot of stock-specific action for you. On the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube.
आतिशी जी 5 दिनों से अन्न त्याग करके बैठी हुई थी, अनशन पर बैठी हुई थी। उनकी तबीयत बिगड़ रही थी। डॉक्टर उनको बार बार कह रहे थे कि आप अपना अनशन तोड़िए। लेकिन कल रात में अचानक उनकी हालत बिगड़ना शुरू हो गई। पहले LNJP के डॉक्टरों की टीम ने शाम को देखा, फिर अपोलो में उनका ब्लड सैंपल चेक कराया गया, LNJP में ब्लड सैंपल चेक कराया गया और उनका जो शुगर लेवल आया वो 43 आया। उनको LNJP में एडमिट कराया गया और ICU में उनको भर्ती किया गया। आतिशी जी अभी भी LNJP के ICU में भर्ती हैं। इन सब परिस्थितियों को देखते हुए अब इस लड़ाई का जो अनशन की लड़ाई थी, जो अनिश्चितकालीन अनशन की लड़ाई थी, उसको विराम दिया जा रहा है। लेकिन सारी विपक्षी पार्टियों को लामबंद करके संसद के अंदर पानी की आवाज को बुलंद करने का काम हम लोग करेंगे।
GST had certain advantages of avoiding multiplicity of taxes or tax on tax on the various transactions, the various purchase and sales transactions. GST, I think, has been one of India's, independent India's biggest structural reform since 1947. When GST was introduced in 2017, it was expected that once the system stabilizes, and I'm happy to mention and happy to see that in India, the GST has stabilized much faster than many other countries.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics...
Back with us here on Halftime Report. The broader markets are also doing well for themselves in today's session, underperforming the index, but the Nifty Bank in particular, but still trading with gains. The small cap index trading 0.4% higher. Pull up a CESC. That is the stock that is the top gainer on the small cap index, trading 9% higher now as we speak. So good going there for CESC, 164 now on the stock. And with that move today, it has extended its gains for 2024 to well over 20%. So that is one of the movers in the broader markets. So speaking of movers, the other pocket that is moving well today is the textile stocks, and they are buzzing after Textile Minister Giriraj Singh indicated that the government is considering to extend the 10,000 crore rupee PLI scheme to the garment sector. Vamakshi is joining in with more details. Vamakshi, tell us more.
Well, absolutely, Hormaz. All of these textile counters are in focus today. Yesterday, Textile Minister Giriraj Singh, like you rightly pointed out, said that they are now considering extending the PLI scheme to the garment sector to boost manufacturing and exports. Now, keep in mind that the government had launched the PLI scheme for textiles back in 2021 and that they had approved an outlay of around 10,600 crores. The PLI scheme currently covers man-made fibers, that is MMF apparels, MMF fibers and products of technical textiles. The industry had been demanding that garments made of all fibers to be included in this scheme in order to give the overall sector a boost, and this has finally come through, with the minister now suggesting that this could be on the anvil. He further added that the market size of Indian textiles is expected to grow from $165 billion to almost $350 billion. The ministry is also framing a roadmap to move ahead of China in this particular sector. They also see huge opportunity in the export market. In fact, he highlighted that the industry should ideally target $50 billion worth of shipments in the coming years. So his commentary boding well for all of these counters, and as a result, is surging in trade today.
All right, let's talk about CE Infosystems as well, Vamakshi. Thanks a lot for that. Rima joins in with all the details of the large trade. Rima.
Thanks so much for that. So CE Info Systems, a MapMy India, has cracked today because a large trade took place of 1.1% equity amounting to nearly 150 crore rupees. In fact, in the morning, we'd also picked up that the promoter, Mr. Rakesh Verma, is looking to sell about 0.9% of his equity. We chatted with the company. We tried to find out, because once there is a promoter stake sale, the fear is always that is more coming. So here's what the company had to say, that this is the first instance of Mr. Rakesh Verma selling stake in the company ever since it became a publicly listed company. Even in the offer for sale during the IPO time, other promoter, entities sold, but not Mr. Rakesh Verma. He has philanthropic, ventures, which he's focusing on. So he's raising money for that. But he also categorically in that statement says that he doesn't have plans to sell any more stake. And this stake sale is limited to less than 1%. So that should allay any kind of fear. Also, another reason, why the stock is under pressure, beyond the fact that there was this large, supply which hit us today, is the stock had run up. Last week, Goldman Sachs had initiated coverage on the stock with a buy rating, target price of 2,800, and that had got the stock excited. This month had seen a rally of more than 20%. So some of that got unwound. Back to you.
Indeed, 4.5% lower is a MapMy India, and also a bit of profit booking, as Rima was highlighting, after the stock saw a very sharp surge after the Goldman Sachs initiation. But moving on from an underperformer to an outperformer in today's session, and that is Prince Pipes, and that is surging in today's session after a Nuvama note where the brokerage is seeing a 22% upside for the stock. Vamakshi is still with us to tell us why Nuvama is so bullish on the stock.
Well, Hormaz, the Nuvama met up with the management of Prince Pipes, and here are some of the important takeaways from that meeting. First of all, they're seeing very strong piping sector demand from both the infrastructure as well as the plumbing business. The management is confident of 15% volume growth along with nearly 12 to 14% margins in FY25. Further, they believe that there could be some upside if the PVC price rally continues, which could lead to restocking and inventory gains. As far as the bathware segment is concerned, they're expecting to break even here in the next 4 to 5 quarters. Their recent expansions at Jaipur, Telangana and now Bihar enables the company to have a pan-India capacity. Debottlenecking is also underway at various locations, and this in turn could drive growth for the company. They're on track to reduce receivables from mid-80s to 65 to 70 days in the near term and approximately 60 days by the first half or quarter 3 of FY25. Overall, Nuvama believes that India's real estate revival along with the infrastructure push has paved way for plastic pipe manufacturers, and given all of these factors along with the positive commentary that came through from the management, they've reiterated a buy rating on this counter with an unchanged target price of 830 per share.
Actually, you're also looking at CG Power. UBS has maintained the stock as its top industrial pick.
Well, absolutely. The stock is in focus. Again, the management met up with UBS, and here are some important takeaways from that. Industrial product business is on a stable track is what they've highlighted. They're directing their efforts to upscale revenue from i3 for motors, and the company, in fact, wants to consolidate its presence further in the drive segment as well. The rail segment is also seeing good demand. In fact, Indian Railway locomotive demand has risen from 1,000 to 1,500 annually. The company is also looking to plug some of the product gaps that are present in the market. In the medium term, they will be focusing on Vande Bharat orders, metro rail as well as exports to markets such as the US. India's target of 500 gigawatt for renewable power is also expected to drive demand for both transformers and switchgears over the next 4 to 5 years. So it's a long runway for growth that CG Power already has. In fact, they're also looking to explore market beyond the existing one that they're present in, such as US and Canada, given that there is limited Chinese competition out there, and CG Power has a very competitive offering out there as well. Despite investments in OSAT, motors and power system expansion, the company still has extra cash to expand its total addressable market. In fact, recent capex across categories will be also ramping up its export revenue. So overall, this bodes well for the company. CG Power is the top industrial pick for UBS. They've reiterated a buy, raised the target price from 850 to 870 per share.
Vamakshi, thanks a lot for that. CG Power, one of the top industrial picks among the broking firms there. But the stock not doing too well today, 0.5% lower. But then that's also because the stock has already risen around 50% so far in 2024. But time for a short break here on Halftime Report. Up next, we get you more on the markets and on specific stocks. Stay tuned. Back on the other side.
Dr. Sunil, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today?
Welcome back. You're watching us here on Halftime Report. 115 points higher on the Nifty. The Nifty bank's doing extremely well, up around 300 points as well. Now, we learned from sources that the Bank of Maharashtra and Central Bank are looking at raising funds through QIP. Sapna joins us on the phone line with the details. Sapna, what are you gathering? Right, we'll try to repatch that connection with Sapna. In the meanwhile, just keep an eye on a bunch of stocks that are surging right now. We have India Cements, which is up 16%. The open interest activity in the F&O space does suggest that it may enter F&O ban. So that's something we'll keep an eye out on. Apart from that, we have AU Small Finance Bank, which is spiking as well. But I do believe we have Sapna back with us. Sapna, yes, you were talking about Bank of Maharashtra and the Central Bank, them planning to raise funds via QIP.
Yes, absolutely. We are given to understand broadly that around 5,000 odd crores is what possibly Bank of Maharashtra may be looking at in terms of their fundraising. Around 2,000 odd crores for Central Bank. We are also given to understand that probably in the current financial year, UCO Bank may also be doing a QIP of around 2,000 odd crores. Though the earlier AGM had proposed a 4,000 odd crore fundraise plan, if I'm not mistaken. So basically, it's a two-pronged strategy. One, wherever growth capital is required, it will help the banks. And second, this could also help in, these among these 5 CSBs to meet the 25% public float norm. That's what has been under discussion, and that's what it seems like. And looking at the situation, a calibrated fundraise plan is what finds a lot of support among stakeholders and probably within the government circles as well. So this is what the plan is going to be. But in all likelihood, going forward, a further exemption in terms of meeting this public float norm is, I think, on the cards. We'll have to just wait for the notification sometime in the month of August, or maybe even before that, sometime July.
Sapna, thanks a lot for that update. And interestingly, the PSU banks, the 5 PSU banks where the government has more than 75% stake, if you combine that excess stake, the value of that excess stake, which is above 75%, that comes up to a cool 63,000 crore rupees. So, some stake sales on the annual there for the government. But sticking to banks, the one bank that has been a market favorite for the past year is Bank of Maharashtra. The stock has seen a 138% rise in the last 12 months, and that is due to a quality performance. Now, the bank's ROA at 1.73 compares with quality private sector banks. And finally, today, CNBC-TV18 has broke this story which Sapna just spoke about. And in fact, earlier, we spoke to Nidhu Saxena, the MD and CEO of Bank of Maharashtra, to get more insights on the fundraising plans and the road ahead for the bank. Listen.
There is no urgent, emergent need on me to raise the capital for growth. But yes, I am currently maintaining a CRAR of around 17%. I think in mind, we have actually taken a board approval, and board has permitted us for this year for a capital raise. But what will be the deal size and what opportune time, and that as we go along the year, we will take a call at opportune time and do the capital raise. So maybe we can improve this number also and go up to between 0.5 to 0.75 because the way PCR is already there, high PCR, I think that should not be a challenge. So we plan to do that. CASA, our guidance for this year, if you look at, that number is, we will maintain our CASA above 50. There is no big issue on that. I'm keeping a guidance because I'm going for expansion also. I'll be recruiting also. So 1,000 officers and other recruitments of specialized vertical officers we are planned. And that part of the exercise is already completed. So I'm keeping a guidance of less than 40 cost to income to be maintained. Accumulated losses still allow me this current year. My estimate tells me that we may not be requiring. We still have a accumulated loss of more than 6,000, around 6,000 crores. Within the segments, the two segments, yes, the agri segment that you pointed out, one, and even in the retail segment, what we have seen is the SMA zero part of it is quite high. So if my retail is 10%, within which SMA zero is almost 6%. So if, but that is more of a technical reason. Part 50% of that is home loans. I know they will not slip. So maybe there are some technical reasons around that. But yes, MSME and agri stress will continue to remain our concerns.
All right. Thanks a lot for that. With that, we'll take a short break. Come back. On the other side, we have Pritesh Mehta joining in with some trading strategies. Stay tuned.
That you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand. But there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. we are going to see spending, but there's going to be a dislocation of spend. And it's going to be, in certain ways, self-funding, at least for now.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions.
Welcome back. Let's take a look at the markets from the F&O standpoint. Now, what we're looking at is, a big recovery that we're seeing from the lows on the frontline index today, and as a result of which, all the indices are at record highs. So you have the Nifty, the mid-cap index, and the Nifty Bank doing well too. The top contributors today, from from a point-to-point basis, we'll have the FMCG stocks doing extremely well, and alongside that, we have Reliance as well. Big Boy has moved higher and closer to 3,000 as we speak, 29.82 on that stock. And then the Nifty Bank, of course, was led higher by ICICI Bank and Kotak Bank as well. The one thing I'll be looking out for today is what happens to HDFC Bank, because yesterday HDFC Bank did extremely well, and from the morning lows as well, it's seen a big recovery, though struggled to stay in the green, just beneath the red line. So that is something we'll watch out for in the second half of trade. If FII flows were to return, do they return to some of their erstwhile favorites like HDFC Bank, etc. Nifty Bank expiry today, so that's something we'll have to watch out for, because at the 52,500 put, there has been a fair amount of open interest, so that's a support, and that's actually the level closer to which from where we bounced today. On the way up though, the 53,000 call has been extremely active as well, and that tells you that there could be a bit of congestion as we cross past that 53,000 mark on the Nifty Bank, if at all we do, because today as well the highs were very close to that 53,000 mark on the Nifty Bank itself. For the Nifty itself, we are seeing the base move higher from earlier levels of 23,350 to 23,400. Now it's moved higher, closer to 23,650 itself, which was an erstwhile congestion zone. Now that's become a support for the market. On the way up, I'd be looking at what happens to the 23,800 call writers, because there has been a fair amount of call writing out there. Will they go ahead and cover their positions once the Nifty continues to move higher or not? In terms of stocks which will be in focus today, India Cements definitely stands out. The open interest jump that we're seeing with the stock price move tells you that it will get into F&O ban in today's trading session. Also, stocks which are likely to get into F&O ban would be Piramal Enterprises as well as GMR Airports. But one of the stocks which will be extremely interesting to watch out for, not just today, but even tomorrow, would be Z. There's been a big up move that we've seen in the stock. Now, why is that? Because tomorrow is the last day for the shares to be trading in F&O for Z. Come July series, Z will be excluded from F&O trading. So post-June series, Z, you won't be able to trade derivatives on Z itself. Is this new news? No. NSE had issued the circular in April itself. But, as of yesterday's close, you look at the Bhav copy, futures and options Bhav copy that is uploaded on the exchanges, there were nearly 10.5 crore contracts which were outstanding on Z itself. So between today and tomorrow, these contracts will have to be squared off or unwound. That may cause some volatility and move in the stock price itself. So those are a couple of things that we'll keep an eye out on. Those who are perhaps not looking to roll over their existing contracts right now, the ones who are probably on the long side, will have to cover it and buy it in cash market, or the ones who are on the short side will have to cover the short contract itself. Either way, there would be a price move that we're seeing on Z, so which is why I thought we'll highlight that.
Thanks for the highlight as well, Mangalam, because there was an important bit of update. The last day for trading for Z Entertainment in the F&O space. You can't be trading futures and options from the July series for that stock. But time for a technical check on the markets. Then Pritesh Mehta, Senior Vice President Research at Yes Securities, is joining in on the show. Pritesh, good afternoon. Thank you for joining in. It's a bank-led rally on the Nifty, but the other pockets, barring cement, seem to be sulking today as well. Do you think that the Nifty ex-banks has enough strength to sustain at these levels, or maybe even cross 24,000 and go beyond that?
Good afternoon. For a while now, banks were underperformer. They did not participate. Financial did not participate, and Nifty was doing well on its own. So I think now market is getting into momentum. Market is driven momentum. We are into a space where banks, financials, today even Reliance is participating. So I think we should not be talking about market will struggle without a participation broader markets, because we did well so far this year. So I think there is strength in the market. And with readers coming back, I think there could be an extension move coming in. So I won't be surprised if Nifty goes towards 24,200 levels also from here on.
All right. What are the stocks that you're backing for the Nifty to go higher then?
So as we mentioned earlier, that financials is a theme to play on, and a couple of stocks that we like from the same space. ICICI Bank is one stock that we like. This stock has gone up by has gone up recently, has surpassed the peak of the month of April. Thereafter, it's making a bullish pattern. It has given already a bullish breakout. We can expect a move towards at least 1400 levels from here on. Another stock that we like is Bajaj Finserv. So basically, this stock is an underperformer, has not done anything in last few months now, but it has created a base. Now we have seen a bullish anchor column follow-through moves coming in. So move towards 1800 is possible in this stock.
All right, Pritesh, thanks a lot for joining in, sharing with us your updates on the index and on specific stocks as well. Pritesh Mehta there of Yes Securities. Let's hear out now some important market opinion coming in from Nilesh Shah, the Managing Director of Kotak Mahindra AMC. He also discusses his key expectations from the upcoming budget and the road ahead for the market.
So markets will be looking forward to the budget in terms of policy making for next 5 years. And as you very correctly mentioned, now for Indian equity market, margin expansion story is over. Valuations, we are already trading at a premium to other countries, other peers. And hence it will be all about governance and earnings growth. In market, we will require earnings growth of 15 to 20%. And comfort on the governance side, where we are managing fiscal prudence along with investments and taking care of coalition dharma. If we can achieve that trinity, I think market is still in good shape. The market is discounting low double-digit earnings growth. As long as it comes through, corrections are unlikely to happen. And even if it happens, it will be shallow. But what if earnings growth trajectory comes down? Margin expansion story, as Prashant mentioned, is over. If volume growth doesn't come through, then certainly earnings growth could be in trouble, and then there could be correction in the market. So we have been bullish on private banks for a while. That growth can only happen if finance is provided for. So there is reasonable surety about growth in banking business going forward. Valuations are in your favor. Businesses are doing well. NPA worries are not there. It was just waiting to happen, and now fortunately market is looking at valuation and adding to private bank portfolio. So today fundamentals and flows both are staked in favor of private sector banks.
Nilesh Shah there of Kotak Mahindra AMC. Time for a short break on Halftime Report. On the other side, Manisha Gupta joins in with Suvankar Sen, the MD and CEO of Senco Gold and Diamonds. Stay tuned, back on the other side.
Getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with investing.
Welcome back. You're watching us here on Halftime Report. We're talking about the commodities arena. Manisha has joined us in the studio as well. And joining us is Suvankar Sen, who is the MD and CEO of Senco Gold and Diamonds. While we'll be talking about gold prices and demand, etc., you know, I was interested, Suvankar, largely because recently there was a note that came in from the brokerage Motilal Oswal, which said that, you know, the jewelry market will see a lot more formalization. They've initiated coverage on Senco Gold as well. You know, I just wanted to know what kind of growth opportunity do you foresee in the next year or so with the kind of store openings that you have? And are you looking at opening franchise stores as well?
So see, if you look at our last year's performance, you will see that, you know, we've grown by almost 29% and the profit has grown by about 14 to 15%. So in terms of the coming year and the year ahead, we are looking at a growth of anywhere between 18 to 20%. That's the endeavor that we are all going to make in terms of the top line growth, as well as with the drive that we will all be taking to increase our, you know, diamond jewelry sales and the other initiatives in terms of opening new stores, new franchisees. So we are all expecting that we will have about 18 to 20 new stores, about 10 to 12 company-owned, company-operated, about 8 to 10 franchisees. So it is with that plan in mind that we're all moving forward. And, you know, the last 2-3 years, the growth that we all have seen, and in terms of the acquisition of new customers, the old gold that is coming into our, you know, for customers are coming to exchange, which is mostly the non-Senco old gold coming to us, which is just showing that there is this shift happening from the unorganized to organized sector. So this is what has been the trend based on which, you know, we are all being very optimistic. This quarter of April, May, June, if you really look at it, this quarter has been a quarter of kind of, you know, more of planning, because at one end we had the elections, we had the heat waves going through the various markets, which was a detrimental factor to the retail sector, as well as the gold price that kind of really shot up in the month of April and May, for which we are seeing that this quarter might not be the best quarter to judge what we are going to see in the coming year, because the wedding seasons also is all, you know, for Q3 mostly. Q2 would have a few, in the second half, it's Q3 and Q4. So we are all expecting now that the prices have more or less stabilized. We are, you know, we've kind of gone over the uncertainties of elections, and the prices are now something that consumers are all willing to accept mentally. So the buying will start happening in a proper way in Q2. Yeah. So this is how we are looking at a optimistic future.
I also wanted to understand on what kind of or what quantity of non-Senco old gold seems to be coming to you, because we've seen those scrap numbers for sure increase, but is there an average number that you have at hand?
Yes, we've seen that about 60 to 70% of the gold that is coming for exchange is about the non-Senco gold. And also, Manisha, the exchange gold itself, because of the prices that have gone up so much, so around 2-3 years back, it was 22% of the total sales that was the old gold coming in. But now we are seeing that it is touching about 30%. So in terms of the transactions of business that is happening because of the old gold exchange is almost gone up by 25-30% in the last 2 years. So that's the, you know, because people also have lesser money in their hands. We all have to accept that, you know, the prices have gone up by 15-20%. So how are they going to kind of sustain and keep on buying? I think that old gold is helping in terms of not only recycling, but also in terms of business.
Oh, yes, and we have seen prices hit all-time highs, so I'm assuming that cashing in actually was profitable for many of those. Suvankar, also, I mean, as you said, the previous quarter, or the current quarter for that matter, has been all about planning. Motilal Oswal initiation and sense of coverage has been positive. We've seen Saif Partners also sell stake. How are you basically talking to your partners, to your promoters at this point in time? Are there any changes on that you would want to share?
No, there is no, you know, in terms of talking to partners and promoters, we have to understand that the country is in a 10-15-year growth journey. So these are just like, you know, certain situations in terms of having a base and then growing on top of that base. So I think this April, May, June has been one in which you're setting the plan for the coming year, and not just 1 year, but the coming 4-5 years. We have our multiple formats of stores. We've launched our Cines lab-grown diamond a brand. We have doing Everlight, which is a daily wear business. So we have seen that the average ticket size, because of the prices of gold going up, has moved up from around 60,000 to close to 70,000. So there are these good signs that are happening. But yes, just looking at Q1, if you look at it, we are looking at footfalls that have gone down because of having less of wedding season, or the gold prices being high. But that's about it. That is what.
Okay. I also want to talk about Dubai, because that is where you forayed now. What is the progress there? Are any numbers that have started coming out of that as well? And are you looking at more other countries too?
So as of now, it's just been one store that we've opened in Dubai, and the plan is that we will be trying to reach out not only to the Indian diaspora, the subcontinental diaspora, but also taking the Calcutta handcrafted jewelry to various other countries that have always been appreciating and buying handmade jewelry of India, and especially made by the Calcutta Karigars. So that's how we are looking at it, to promote handcrafted, because with the prices going up, we have to look at expanding our markets and protecting and preserving our our art and craft of the country. So that is with which we are planning. So the numbers are still to come out, something that we can talk about, but it's a good initiative and a good effort from our end, and to get the international customers will be the success.
Oh, well, absolutely. And congratulations on that. And as you said, we're looking at more countries and more foraying out here. But Subankar, also, what really caught my eye onto the last comment was the lab-grown diamond. And you have positioned yourself into this space as well. One, what is the kind of market that you see for LGDs? And how are the natural diamond penetration within India also doing, if you could share those numbers?
So see, natural diamond prices that we have seen, especially for the bigger size diamonds in the last, I would say 2-3 months or 4 months or so, have been under pressure. It could be because of the slowdown that we have seen across the world. It could be that there has been gradual more awareness of the lab-grown diamond, while the lab-grown diamond prices itself has also been under pressure. Because of the productions that have happened and the demand that is not happening to the extent that the productions have happened. But I guess that these are all short-term situations. What we as a jewelry organization and the sector needs to do is build on the trust factor, build on the awareness factor amongst consumers. Because while there will be a market for the real diamonds, and last financial year our diamond jewelry sales have gone up by almost 25-30%, and the stud ratio went up from 10% of the total sales to 11% of the total sales. So the trend for the last 2-3 years have been on a growth. But yes, this quarter again, I think it's all linked to your the consumer sentiments and the liquidity in the market, the wedding dates that are there. So this quarter, we have all seen a muted kind of a demand across. But then again, that doesn't stop from the future plan. Yes, yes.
What is the plan going forward on lab-grown diamonds from here? You've launched a brand here, a new identity. Is it going to be shop-in-shops? Are you promoting it in some sense? And would you say that natural and lab-grown perhaps would run parallel, have a market of its own?
Yes, it will run parallelly. See, the diamond jewelry sector is about 15 to 20% of the overall jewelry sector. And with the gold prices going up and the young generation's demand and the trend that we see, that 14 karat and 18 karat jewelry is what will be on a growth and upward trajectory. So I think diamonds or anything which will be leading to stones that we add to the gold, 14 karat or 18 karat, will have a more positive and optimistic growth trend compared to the normal plain gold jewelry. So, there will be a segment of natural diamond buyers when it comes to certain sleek designs or a special occasion of wedding where you would want to buy, natural diamond to make it memorable. But for fashion and for, multiple options of jewelry to go with your clothes and to get various shapes of diamond, I think that, lab-grown diamond will play for the bigger size diamonds. So that will fulfill the aspiration of many of the middle class, upper middle class Indians.
We're all waiting for appraisals, right?
We're all waiting for appraisals. I'm not sure though, with those appraisals we'll buy lab-grown diamonds or natural diamonds or nothing actually.
But Suvankar has an option for all of us there.
But Suvankar, just one question before we let you go. I remember during the IPO you said that you will stick to your core market of West Bengal, East India, market that you understand, customers that you understand. But now we see some stores outside of West Bengal as well. I see a couple in Mumbai. Now, Manisha, just told us that there's one in Dubai, etc. as well. So are you looking to diversify from your core market? That's one. And as you do that, could there be a risk of making charges coming down on gold jewelry?
No. So while the focus will remain on East India, North India, and that's what we've been telling. So suppose if we plan to open 20 stores, we will ensure that 14 to 15 stores are going to be on eastern or northern part of the country, which is our core. So east, not only Bengal, it could be Bihar, Orissa, Assam, Jharkhand, all the eastern India states, that will be 50 to 60% of our new stores. Delhi, NCR, UP, Punjab, MP, that will be around 20% of our new stores. And the remaining 20% will be these, Western India, Southern India, or outside India, as we say. So there will be an 80-20 ratio with which we will continue to open to hedge all our risk and ensure that we focus on our core, but we also sow the seeds for the future as well. So that's how we will want. And yes, as you said on the making charge part, it is not only about east, north, south, or west, or anywhere, but making charges are something with the increase in gold price. Offers, discounts have become a part of the whole process of attracting consumers. So even if we look at it, in the jewelry industry, there has been a downward pressure on the margins. So it is because of the gold price that has gone up, and you need to make sure that the consumers are interested in buying in spite of the high gold price. That's how it is.
All right, Suvankar, always a pleasure speaking. Thanks, Manisha, for the conversation as well. We don't know about our appraisals, etc., but his shareholders definitely can afford a few more diamonds. Just as he was speaking, you pull up the intraday chart of Senco Gold. The stock has been a big mover already. And currently, just as he was talking about, the second quarter onwards, business looking good, and the lab-grown diamonds business that he's talking about, we've seen a bit of a spike in the stock price as well. So the intraday chart comes up for you. There you have it, up around 5% as we speak.
Must appreciate you for the timely reminder as well for the appraisals.
All right, take a short break, come back, and on the other side, we get you more on the stock markets and a lot of stock-specific action.
All of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Unifor, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Unifor?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPT moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company. Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And
Back with us here on Halftime Report, and the mid-cap index is continuing to trade completely flat, but the focus is on the benchmark indices, as is the case. Almost 23,850 now on the Nifty. The Nifty Bank moving towards 53,000 actually, and so good going for the banks. They're continuing to move higher, and from the lows of the 4th of June, they have moved almost 6,500 points. That's quite a move in just 15 trading sessions, isn't it?
Incredible, you know. And just as we speak, we were talking about the way, you know, Reliance has been powering the market ahead. Nifty banks recovered all of that. Add Bharti Airtel to that list as well. You know, has been doing well, decently well. The street is hoping for some sort of tariff increases to come by, and as a result of which Bharti Airtel has moved to the high point of trade. And also, as we speak, you know, at the bottom of the screen, there's news on Vodafone Idea. That stock too, ever since its FPO at 11 rupees, has continued to move higher, and new business developments keep taking place in that counter.
There was ever a competition on the most talked about stocks of the year, Vodafone Idea topping the charts for sure. But with that, it's a wrap on this edition of Halftime Report. From Manglam, me and the team that put this show together, thank you so much for watching. Business Lunch up next.
Internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, you know, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with Nvidia becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now Nvidia is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast Nvidia is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy well in implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
You know, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
Stocks see broad-based gains. Cement as well as FMCG are the prominent gainers, while metals and real estate are the big drags. Vedanta sees a large trade of 2.6% of its equity after parent Vedanta Resources allows its banks to sell the shares. Vedanta Resources says this will help deleverage its balance sheet. Sources tell CNBC-TV18 that Bank of Maharashtra and Central Bank are likely to take the QIP route to dilute equity to meet SEBI's minimum public shareholding norms. MapMyIndia promoters sell under 1% equity to fund philanthropy and venture investing.
while Sanghi Industries promoters take the OFS route to offload 3.5% equity to meet minimum shareholding norms.
Hello and welcome. You tuned into Business Lunch. I'm Nisha Podar and with me as always is Sonia Shenoy. So Sonia, what a recovery we have seen in the markets, and it's a higher high for the market with each passing day. Let's take stock of markets at lunch hour then. Nifty 50 comfortably with over 100 points gain at the moment. Almost 0.5% gain and closer to the high point of the trading session. Also important to note 23,827 levels. So a higher high record levels for Nifty 50. When we talk about Sensex, it's closer to 450 points gain at the moment. Bank Nifty is underperforming slightly to the key indices today, but definitely there in the mix in terms of participation. But mid caps are the ones which are on the flat line with a negative bias at lunch hour. But advanced decline ratio is fairly stable despite the mid caps being on the flat line. And on my screen, some of the big boys, especially the telecom companies in anticipation of the tariff hike, are really roaring in trade. Bharti Airtel, Reliance Industries, those are the ones, big gainers. Ultratech is also gaining in trade today. And on the flip side, Apollo Hospitals, Bajaj Auto and some of the metal counters, they have lost their sheen today. Sonia.
Absolutely, but I think overall this is a really good looking screen that we have on our hands. No two ways about that. This market has climbed every single wall of worry. The market continues to move with traction. Yes, the Nifty has given up a little bit of its gains today, but by and large, this has been so bullish, the kind of screen that we have, that we're looking at. And every other day, some or the other contributor comes in from the large cap. So a couple of days ago, it was banks. Today as well, names like ICICI Bank are contributing. But today, particularly Reliance has made its presence felt as well. If you look at the contribution plate, almost 65 points is coming in from Reliance today, followed by ICICI Bank, Bharti Airtel, Ultratech Cement. So it is across the board, but today the presence is, felt from Reliance Industries. So some or the other heavyweight always contributing to the up move in the market. But let's do one thing. Let's kickstart the show with some national news updates. The BJP MP Om Birla has been re-elected as the Lok Sabha Speaker for the second time. Prime Minister Narendra Modi moved a motion in favour of Birla, which was adopted by a voice vote. In a historic first, the Lok Sabha saw a contest for the Speaker's position, with the opposition backing veteran Congress MP K. Suresh. After his re-election, Prime Minister Modi and Rahul Gandhi, the newly appointed leader of the opposition, accompanied Om Birla to the Speaker's chair. Let's go across to Parikshit for more on the Parliament proceedings. Parikshit, over to you.
Over the last few days, we've seen heated exchanges between the opposition and the government over the election of the Lok Sabha Speaker. Now, Om Birla, the three-time BJP MP from Kota, has been elected as Lok Sabha Speaker for a second time after defeating the Congress MP and India Bloc candidate K. Suresh. Now, traditionally, the Speaker is chosen by the party in majority in the Lok Sabha, and he is elected unopposed. There have been at least 3 to 4 times in the Lok Sabha history when there has been a contest posed by the opposition. This time, Rahul Gandhi and other Congress leaders and those in the opposition also said that the reason why we are putting up a candidate to challenge the NDA nominee and not letting him get elected unopposed is because the government is not willing to listen to our conditions and our demands. The opposition and the Congress had demanded that the pro tem speaker should be from the opposition. They had also said that the BJP and the NDA must guarantee that the deputy speaker will be from the opposition. The NDA, which had fielded Rajnath Singh to hold talks with the opposition, did not give much attention to those demands and did not give in to those demands. And that's why the opposition said, we're not going to let you have a cakewalk. Om Birla will not be elected unopposed, and we will make this a contest. There have been at least 3 to 4 times in history when there has been a contest for the election of the Lok Sabha Speaker. So the NDA was able to prove majority with 293 MPs. This was a simple majority they needed, and they got it via a voice vote. They had 293 MPs in the 543-member Lok Sabha versus India Bloc's 236 MPs. The NDA also saw support from the YSR Congress in the election of the Speaker. The TMC has gone on to say that they had asked for a division of votes, and there were many within the India bloc who wanted a division, but the BJP bulldozed its way through. So what is the significance of this election? One, the opposition demanding the Speaker to be absolutely impartial when it comes to the proceedings of the House. They have raised questions about the Speaker's position earlier as well. And secondly, a message to the NDA that we are ready to fight you in Parliament from day one. And this is not going to be an easy Lok Sabha session for you.
Thanks so much, Parikshit, for putting all that into perspective. And yes, that's a big one for the Lok Sabha proceedings, and opposition playing a critical role as was expected post the election results this time. But more on politics related to that, well, Delhi Chief Minister Arvind Kejriwal has withdrawn his application from the Supreme Court against the High Court's order staying his bail in the ED case. Now, this comes shortly after the CBI arrested the Delhi Chief Minister in connection with a corruption case related to the alleged excise policy scam. Kejriwal has informed the Supreme Court that he will file a fresh plea challenging the arrest by the CBI.
Okay, let's take a short break then. When we return, we put focus on Vedanta and today's large deal that took place. Do stay tuned in for that.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
Well, let's now focus on the big movers of the day. Vedanta slumped nearly 4.5%. equity changed hands in a block deal. Nimesh is here with the details. Nimesh, over to you.
In terms of details, it's very clear now that the promoter entity has sold 2.5% stake via block deal in today's market. In fact, they've made an official comment as well that Vedanta Resources, one of the arms, have sold this particular stake to some large institutional investors. Now, the deal was done at an average price of 425, which means that the total size of the deal was upwards of 4,000 crores. So that's the money that the promoter entity will get, and that will largely be used to pay off the lenders. So that's been an overhang on the stock. If you look at the chart for the last few days, the stock actually has corrected from 480 to 425, 430, and now we are seeing a bit of a recovery as well. So it's a done deal. Promoter entity has in fact sold 2.5% stake. Some large investors have bought as well. As I said, this was largely to do settlement to the lenders. So the debt will at a promoter level, the debt will come down, and that will be a bit of an ease for the investors as well. But I think that's been the key details, that promoter entity is sold and some large investors bought in today's block.
All right, so that's a large block trade. Thanks so much, Nimesh, for all those details. Never a dull moment in the history of Vedanta. That has been full of transactions. In fact, Hormaz is now joining us to tell us more about the Vedanta promoter stake sale timeline. Hormaz, tell us.
Well, will he, won't he? Well, he eventually did today. The street has been abuzz with Vedanta's promoters looking to sell some stake, and that did happen this morning. Now, Vedanta Resources confirmed that they did sell 2.5% stake in the company today, and this was done to deleverage the balance sheet and to fund strategic growth initiatives. But that was not the entire deal. It was much larger. The 4.8% equity had changed hands in multiple blocks valued at close to 8,000 crore rupees. The average selling price was 440 rupees a share, and based on that, if the promoters have sold a 2.6% stake, they could have pocketed a cool 4,400 crore rupees. Now, interestingly, this comes just a week after Vedanta Group Chairman Anil Agarwal told CNBC-TV18 that there is no such plan to bring the stake down from the then current levels of 61.95%. Of course, he left a caveat in that statement, and he stated that if an investment banker comes and gives an idea, they'll work on it, and so they did. Now, this isn't the first time that promoters of Vedanta have sold their stake. Over the last 18 months, they've sold nearly 10% of their overall equity. Now, starting December of 2022, when the promoter holding in Vedanta was just under 70%, now if we take today's sale into account, that figure will now drop to sub 60%. Now, in August of last year, the promoter Twinstar had sold a 4.1% stake and pocketed nearly 4,000 crore rupees. And just earlier this year, Finsider International, the same entity that sold stake today, had sold close to 2% stake for just over 1,700 crore rupees. Now, based on these three stake sales in the last 18 months, promoters of Vedanta have raised over 10,000 crore rupees from the Indian entity, and that is excluding the generous dividend payouts. Now, for some throwback, just to jog your memory back to October of 2020, Vedanta's promoters wanted to delist the stock. Now, the proposal was to acquire majority stake from public shareholders at a price of 87.5 rupees a share. But on the 9th of October 2020, the delisting failed. Why? Because it could not get the required number of shares needed for the delisting to be successful. Now, interestingly, while the delisting price was 87.5 rupees, majority of the bids were placed at 320 rupees a share for that delisting. Now, even from those levels of 320, the stock is up almost 40%. Now, how has the stock done since that failed delisting? Now, between October to December itself, the stock rose 18%. I'm talking about October to December of 2020. Now, benefiting from the commodity upcycle, the stock doubled in 2021, rising over 111%. And after 2 years of negative returns in 22 and 23, the stock is already up 70% so far this year. Analysts too have started to warm up to the stock. Now, in just 9 months, the number of sell recommendations on the stock have come down from 42% in September of last year to just 7% currently. So that's Vedanta for you. From a failed delisting attempt at 87 rupees to selling shares at 5x that price, it's been quite a journey so far.
Okay, thanks a lot for that. Well, that's on Vedanta, but let's try and move on now and get you some more details on the PSU banking space. This is an exclusive. We learned from sources that Bank of Maharashtra and Central Bank are looking at raising funds through the QIP route. Sapna joins in with more details on that. Sapna, over to you.
Yes, that's absolutely right. What we're given to understand is that probably Bank of Maharashtra would be looking at a QIP size of around 5,000 odd crores, and Central Bank may be looking at a size of around 2,000 odd crores in terms of a QIP issuance. Having said that, what does it really entail apart from the growth capital that may or may not be required by these PSB entities? It will also help them to dilute the government equity, try and meet the 25% public float norm that is there in terms of statutory requirement of SEBI. Having said that, the banks, however, will have to do their QIPs in tranches. It's not that in one go this entire capital is going to be raised. So, for instance, if around 5,000 crores is what Bank of Maharashtra is able to achieve in the current financial year and maybe spilling over to the next financial year, this will help them dilute government equity by around 10 to 11%. Of course, these are back of the envelope estimates. Similarly, we also given to understand that UCO Bank had announced some plans in their AGM, but given to understand that for the current financial year, they will be looking at a 2,000 crore odd QIP. Obviously to be done in tranches. So all of this is going to help banks bring down government equity in a very calibrated manner. I think government is also favoring that the fundraising should be in a calibrated manner, and growth capital plus the equity dilution can also happen. So maybe over the next year or 2 odd years, these 5 PSBs that everybody has been talking about, they should be able to meet this 25% public float norm. We are also given to understand that separately government may be already seeking a 2-year extension also in terms of the exemption given to these banks.
All right, Sapna, important story at that for PSU banks. Thanks so much for all the details. Also, wider institutional participation in some of these PSU banks will be a welcome sign. Now, in fact, earlier today, we spoke to Nidhi Saxena, who's the MD and CEO of Bank of Maharashtra, to get more insights on the fundraising and also the outlook of the bank. Listen in.
There is no urgent, emergent need on me to raise the capital for growth. But yes, I am currently maintaining a CRAR of around 17%. I think in mind, we have actually taken a board approval, and board has permitted us for this year for a capital raise. But what will be the deal size and what opportune time, and that as we go along the year, we will take a call at opportune time and do the capital raise. So maybe we can improve this number also and go up to between 0.5 to 0.75 because the way PCR is already there, high PCR, I think that should not be a challenge. So we plan to do that. CASA, our guidance for this year, if you look at, that number is, we will maintain our CASA above 50. There is no big issue on that. I'm keeping a guidance because I'm going for expansion also. I will be recruiting also. So 1,000 officers and other recruitments of specialized vertical officers we have planned. And that part of the exercise is already completed. So I'm keeping a guidance of less than 40 cost to income to be maintained. Accumulated losses still allow me, this current year, my estimate tells me that we may not be requiring. We still have a accumulated loss of more than 6,000, around 6,000 crores. Within the segments, the 2 segments, yes, the agri segment that you pointed out, one, and even in the retail segment, what we have seen is the SMA 0 part of it is quite high. So if my retail is 10%, within which SMA 0 is almost 6%. So if, but that is more of a technical reason. Part 50% of that is home loans. I know they will not slip. So maybe there are some technical reasons around that. But yes, MSME and agri stress will continue to remain our concerns.
Okay, that's the word coming in from Bank of Maharashtra. But the telecom spectrum auction has concluded after 6 rounds of bidding, with the government receiving bids of over 11,000 crores. Ashmit is here with the details. Ashmit, over to you.
Well, this was the second round of 5G spectrum auction that took place. The first, of course, was in 2022. At that time, we had seen bids of about 1.5 lakh crore rupees. This time, the action was a lot more muted. We had about 10.2 gigahertz of spectrum going up for auction. The total reserve price of the cumulative spectrum being put up for auction was in the neighborhood of 96,000 crore rupees. The total bids that have come in from the 3 telecom players is about 11,300 crore rupees. We saw about 6 to 7 rounds of auctioning take place place between yesterday as well as earlier the first half of this morning, and we understand the spectrum auctions have concluded. As to which are the bands which attracted the most amount of attention, well, 900 megahertz was the key band here. That is what saw nearly 70% of the bids coming in for. The second favorite was the 1800 megahertz band. The bands outside of these two and 2100 megahertz, these three are the only bands that saw action. All the other bands saw absolutely no bids. We have been speaking to various sectoral experts. What they do tell us is that this was expected to be muted. This does not come as a big shocker. This was expected to be muted. There were only gaps that the telcos were looking to fill in terms of their spectrum portfolio. So this is something that was anticipated, something in the neighborhood of 10 to 12,000 crores. So this figure is along those expected lines. As far the payment schedule is concerned, of course, they'll be spread out over a period of 20 years. There is no SUC, there is no bank guarantee component, and of course there'll be an interest component of about 8.65% charge, so that the net present value of these dues are maintained. So that's as far as the spectrum auctions are concerned. We're of course awaiting more details, specific inputs from the DoT on individual companies and which bands they've invested in. That's of course a critical piece of information that is awaited from the DoT. Back to you.
All right, Ashmit, thanks so much for all the details. Of course, spectrum auctions are slightly muted, but what's really roaring are the telecom counters today, outperforming the markets. When we talk about Vodafone Idea as well as Airtel, RIL, not a pure play, but still buoyed by the expectation of tariff hike. Over 2.5% hike in both big boys, Airtel as well as Reliance today, and almost 3% on Vodafone Idea. So those telecom tariff, now remember, the last tariff hike in telecom space happened in November 2021, 2.5 years, and it's a breakthrough moment and a turnaround moment for the telecom sector. On that note, we'll slip into a short breather on Business Lunch, but we'll get you more news and updates on the other side. Stay tuned to Business Lunch.
GST had certain advantages of avoiding multiplicity of taxes or tax on the various transactions, the various purchase and sales transactions. GST, I think, has been one of independent India's biggest structural reform since 1947. When GST was introduced in 2017, it was expected that once the system stabilizes, and I'm happy to mention and happy to see that in India, the GST has stabilized much faster than many other countries.
Dr. Saneen, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. And of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth.
Welcome back. You're watching Business Lunch, and huge amount of buoyancy seen in the market. In fact, gaining at this point, Nifty 50 above 0.5, 0.5% up, and a lot of lead is being taken by the Bank Nifty, 0.6% up on that. So don't lose track of that. Kotak Mahindra Bank, ICICI Bank are some of the big movers, apart from Reliance Industries and Bharti Airtel, especially because of the telecom play, really buoyed in market. All right, on to the news developments. The Maharashtra government has warned nationalized banks that they will face FIRs if CIBIL scores are made mandatory for issuing loans to farmers for the Kharif season. Now, the decision was announced at a state-level bankers' meet in Mumbai, which was attended by the Chief Minister Eknath Shinde, Deputy Chief Minister Devendra Fadnavis, as well as Ajit Pawar. And they were representatives from the RBI as well as NABARD. Devendra Fadnavis said that they have told the state bankers that they have been denying loans to the farmers, citing CIBIL score, and if this continues, the state government will lodge an FIR against them. Now, the government has instructed that this message be communicated to all the state bank branches. So, government really coming in support of the farmers.
Okay, well, the Federal Reserve will closely watch for the monthly inflation data this week, as well as the May's PCE data for its policy outlook. Will it be able to hit 2% inflation target? Steve Leesman has more on that.
Math is hard, and inflation math for the Fed trying to hit a 2% target may prove harder still. An analysis of possible inflation paths over the next year shows the economy has to be lousy or just exactly perfect to hit the target. With even a slight permanent rise of monthly inflation from its pre-pandemic level, the Fed may never hit the target, creating a series of hard choices for the central bank. Average monthly core PCE inflation before the pandemic ran about 0.13 to 0.14, or 1.5% to 2% annually. The pandemic and the aftermath saw monthly inflation more than double to 0.34. By contrast, in the period of the Great Financial Crisis, it was 0.09% monthly. We modeled recession-like core PCE inflation and found it would drop inflation to around the 2% year-over-year target at the end of this year. At the pre-pandemic average of 0.15, it would take until the spring of 2025. Both numbers suggest the Fed could start cutting towards the end of this year because it has said it would cut rates before it hit the 2% target. But at a 0.2% month-over-month rate, the Fed never gets there. Annual inflation settles at 2.4%. And there are those who say we are not going back to the pre-pandemic inflation world because of things like deglobalization, tariff wars, government spending, and continued high labor costs that may have permanently raised the inflation rate. The Fed's choices, if it doesn't hit 2%, are to keep rates high, even hiking, possibly causing a recession, only modest cuts but remaining well above neutral, and maybe eating crow and accepting a higher inflation target or going to a range. Mike England from Action Economics, who helped crunch these numbers, says the Fed could also change its metric. The Fed notes, he says, that it only needs confidence that inflation is moving towards 2%, but it will likely need to cite declining headline inflation rather than core inflation if it's going to make that case. The Fed keeps insisting it will get inflation back to 2% and can do so without a recession, but it may need to choose one or the other unless the U.S. economy finds its pre-pandemic inflation mojo.
All right, that was from the US. With that, it's a wrap on this edition of Business Lunch. It's a thank you note from the entire team of Business Lunch, but Midcap Radar comes up next. Stay tuned for that.
Remove that biofilm, then the bacteria will remain there and they will act on the gums and, of course, on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
it's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of
Good afternoon, welcome to Midcap Radar. I'm Sonal Putra. With me is Hurmaz Patakia, and it is a day. Usually talk about midcaps, but it's all about large caps today. The way Nifty has gone above that 23,800 mark. Midcaps are in the red right now, 42 points lower, but banks continue to surprise again on the upside. So looking like a good day again for the frontline indices.
It's been almost a week or 10 days and everything has been about the large caps. So almost that the mid caps have been relegated to the background. But yes, indeed. And it's been about the large caps all along, particularly the banks. The Nifty Bank is what is leading the gains. But starting off the show with the top headlines as well. Stocks are trading in the green this afternoon with the Nifty hitting fresh highs at 23,800. The Sensex is also gaining over 400 points. The Nifty Bank, private banks and FMCG are leading the gains while auto, realty and consumer durables are dragging. Mid-caps are relatively underperforming.
CE Infosystem slumps after MapMy India promoter Rakesh Kumar Verma sells under 1% equity to fund philanthropy and venture investing.
Vedanta sees a large trade of 2.6% of its equity after parent Vedanta Resources allowed its banks to sell the shares. Vedanta Resources says that this will help deleverage its balance sheet.
Prince Pipe surges after Nuvama retains the buy rating and maintains the target price unchanged at 830 rupees a share. Says the piping sector demand continues to stay robust from both infrastructure and plumbing.
And textile stocks gain after Textile Minister Giriraj Singh indicated that the government is considering to extend the 10,000 crore rupee PLI scheme to the garment sector.
Okay, all right. As we have been talking about ad nauseum since morning and last couple of days, as Hurmaz pointed out, it is all about the large caps. The Nifty is up 117 points right now and at the day's high. We do have the Bank Nifty, which is supporting most of the gains that we are seeing today. But the big boy Reliance too has come forth and is closer to that 3,000 mark. So Reliance Industries is one big weight, which is up around 2.5% in trade right now. Mid caps under pressure, absolutely flat, but there is some negative bias. The advanced decline ratio, well, it is again balancing right now. It has seen some recovery from the lows, the mid-cap index, after going into the red. But there are a lot of movers, a lot of news flow which we're expecting. And QIP's block deals, promoter selling, that continues.
That continues, and not the first, definitely not the last for sure. The advanced decline ratio, as you can see on your screen, is converging for the umpteenth time actually today. And usually when you would see that, you'd see a yawning gap between the advances and the declines, but that is not the case in today's trading session. But there are some gainers within the mid-cap space as well. Z Entertainment is one of them, is up 5%. Remember, tomorrow is the last day for the stock to trade in the F&O segment, so that is another there. The defense stocks are doing well today. Masgaon Dock is up 4.5%, as is GMR Infra. That is also trading with good amount of gains in today's session. CESC, that is a stock that is up 9% in today's session. That is a top gainer on the small cap index. And Raymond also continues to grow from strength to strength, 7% higher there as well on the stock is Raymond. So good going there for some of the stocks in the broader markets. There are some stocks on the losing end as well, and we would highlight some of those. And some of them on the losing end include the likes of Swan Energy. MCX is another stock that is down 3%. That is the top loser on the small cap index. Piramal Pharma is down 2.7% as well. So that is among the top losers on the small cap index. And within the broader markets, Ujjivan Small Finance Bank continues to see some pressure as well. But time for a technical check then on the markets. Ruchit Jain of 5paisa.com is joining in. Ruchit, good afternoon. Thanks a lot for joining in. Well, the banks are leading the Nifty higher, but do you think that these up moves closer to 24,000 can sustain on the index? What's your call there?
Yes, hi, very good afternoon, Harmaz. Very good afternoon, Sonal. I think as the leadership has been taken by the heavyweights, so with the help of these heavyweights, we think that the index would head higher towards that 24,000 mark, maybe in a day or two itself. Even if you look at the options data, then we have seen that the put writing base has been shifting higher, and especially the FIs have turned net buyers. Just on the day of the election results, their long short ratio was around 17% only, where 17% positions were on the even not even 17, only 13% positions were on the long side, but that has improved significantly to over 60% now. So this clearly indicates the change of biasness in the FIIs, where from net shorts they have gone to net long positions in the index future segment, plus buying figures are there in the cash segment also. And the heavyweights have been the stocks where a good up move has been seen in this period. So I think the signs are that although we might see some sort of profit booking, stock specific profit booking in the mid cap and the small cap space, but that does not change the trend, right? The stocks which have rallied significantly, some sector rotations could happen where mid caps, small caps can stay a bit range bound from a near term perspective, but the broader trend definitely remains positive, and I think the heavyweights would lead the higher indices out higher towards 24,000 first and then towards 24,250.
Okay, all right. That is about the benchmarks. Tell us, what are some of the individual names that you'll be watching out for?
So the telecom space is looking quite positive. Whether you say Reliance, Bharti, both the stocks have been forming, have been witnessing an up move supported by very good volume. So I think Bharti Airtel would be one stock which I would recommend at current levels. The previous swing highs have been broken, rising volume, even derivative segment shows long formations. So this is one stock where short-term traders can go along with stock below 1420, expecting targets somewhere around 1600 in the somewhere around 1600 in the near term. And my second pick on the from the mid cap space would be Ramco Cements. So entire cement space is buzzing since morning today. And good is that some of the cement stocks have witnessed a very high volumes compared to the daily average volume that they have been witnessing. So Ramco Cements, the chart structure shows that the corrective phase is somewhere over. Price up move supported by good volumes, consolidations or minor corrections last couple of weeks. We have not seen any kind of volume-based selling in that correction. So these are all signs of a sustained uptrend. So Ramco Cement, I think there's a good risk-reward ratio to form longs at current levels with stock below 830 for potential targets around 950.
All right, Richard, thanks a lot for that, and joining us with your index views and your specific stocks as well, Richard Jain there of 5paisa.com. But time for our special segment, Midcap Movers. Mangalam is joining us today to take us through the stocks that are buzzing around in today's session. Mangalam, good afternoon.
Good afternoon. A lot of stocks are buzzing around. Even as the advanced decline says that just a few stocks are gaining more than the number of stocks which are declining. The quantum of gains are a lot more, and some of those stocks have been gaining for a while now. So case in point, something like a Garden Reach Shipbuilders, that's seeing a big move. We're also seeing a big move in something like Hindustan Foods. This morning there was a large trade in the block series, the BL series, and as a result of which that stock has been buzzing around with good volumes. Somani Ceramics perked up sometime at the start of the trade and now is holding on to the gains. Raymond has been a big mover for the last few trading sessions. We pointed out in the Momentumizer segment as well. Ireda, Hitachi Energy up around 6.5%, ITD Cementation, and Senco. We spoke with the management this afternoon itself, and they said that they will see 18 to 20% growth in this year. Alongside that, we are also seeing other stocks continue to gain, something like a Mazagon Dock as well, which has been on a tear. Among the losers, there are far and few in between, but again, see, look at the quantum of losses. Lemon Tree Hotels down about 2%. A mild profit taking is what we've seen. Ujjivan Small Finance Bank for the second day continues to see some bit of sell-off. On RailTel as well. All the railway stocks saw a bit of profit taking as well, and as did a couple of these real estate names like Signature Global. So we are seeing more gainers than the number of stocks which are losing, but the quantum of gains are a lot more, whereas the losers are limited between 3 to 4%, 5% at best, and the others about 2% on the obverse side today.
Okay, all right. So that's what the broader market picture is looking like. We'll slip into a break. When we come back, we'll connect with Rakesh Arora, founder of GoIndiaStocks.com, to put spotlight on cement stocks which are buzzing in trade. Stay tuned.
Tailwinds that we have from good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be in certain ways self-funding, at least for now.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So investing.
Welcome back. You're still tuned into Midcap Radar. Well, one space which is buzzing in trade today is definitely cement. There have been an OFS announcement as well by Tega Industries. We have India Cements, which is up 15%. What's really happening here? Let's try and understand. Rakesh Arora, founder of GoIndiaStocks.com, is joining us now to take a few questions. Rakesh, good afternoon. Thank you so much for joining us. But I just want to understand, what is the street factoring in right now? Individual names like India Cements up 15%. There's an OFS. Is fundamentally something changing in the sector? Because there were price cuts, which was taken negatively earlier. But do you think that is a trend which has reversed now and better demand is something that the street is expecting?
So I think the stocks are buzzing largely because of expectation of acquisition. There has been recently some acquisitions which have been announced. Ambuja Cement has taken over Penna Cement. And there's a little bit of stress in the southern Indian cement players. So people are expecting that maybe further consolidation might happen, and that is the reason why you're seeing India Cement also go up. So cement prices remain very weak, and the demand is average. So I don't think that is the driver. It's just the acquisition buzz which is actually pushing stocks up.
Rakesh, good afternoon. Thank you for joining in. You mentioned that there is some stress in the southern part of the country. You also mentioned that pricing is under pressure now, considering we are heading into the peak monsoon season. One can assume that the demand lull may persist till the season is over. So do you foresee some more pricing pressure going forward? Because channel checks are suggesting that prices have fallen by almost 5 to 7 rupees a bag already.
So I think, monsoon is yet to, spread out in the country, and cement companies will make an effort to increase prices before that. So you will see some announcements coming through. There was an announcement a few days back also, though prices are not sticking. Maybe there might be a few more attempts to increase the price before monsoon really sets in. And but I don't really expect that, prices will stick, because the top two players are in a little bit of a fight over market share, and till the time they settle their with each other, I don't think cement prices are going up in a hurry.
And what about demand? Is there any expectation for FY25 numbers in terms of the volume growth that the industry could see, and who could be an outperformer here? Of course, barring first half where we have seen elections, then monsoons.
So demand has held up reasonably well even during elections, apart from April, which was a little bit of a washout month. May we saw industry grow at around 10%. And June also is turning out to be reasonably okay at around 4-5%. So for the first quarter, I'm expecting around 6% demand growth. And for the year, probably things might pick up later on. So probably we should end up at around 7 to 8% demand growth for the FY25, which is in line with, I think, most people, what most people are expecting. So demand, there's no major surprise. And but as I said, the pricing is weak, and that is where, the re-rating for companies from the current level looks difficult. And we are looking at Q1 and Q2 to be reasonably weak in terms of profitability. So that is not the factor which is going to drive the stocks. And probably we should see that after 8 to 10% move that we are seeing in the stock prices, maybe some consolidation might happen.
So what are you expecting for this quarter in particular, Rakesh, the April to June period, because earnings starts next month, almost next week now. What are you expecting in terms of commentary to come in from these cement companies on the road ahead, possibly further consolidation coming in from the big players? What is your thoughts on that?
So I think commentary would be reasonably okay because, as I said, demand growth is, expecting around 7-8%. So cement companies are going to highlight that. But when it comes to margin, there should be an contraction of between 100 to 200 rupees per ton QOQ in terms of EBITDA per ton that they will report. And in terms of consolidation, I don't think anybody is going to say explicitly. But we know that Ambuja has a war chest of 20,000 crore. So, and they've recently announced Penna. So probably they might look for 1 or 2 more acquisition later on. And I don't think UltraTech will be left behind. So whenever there's an opportunity, maybe they will also look if there's a good fit. So we might get some more news flow on consolidation later this year. But, will it happen the way stocks are buzzing? I'm not sure.
Okay, so, that is something which is happening in the cement sector so often now, the consolidation, these small players getting bought in by the bigger ones. Last question before we let you go, I wanted to understand what are your top picks or maybe the top sells in the sector, considering the current environment valuation picture as well?
So I've been mentioning that, the top 2 players are the one where, they have the best margin and they are growing the fastest. So investors are better off sticking up with, industry leaders. If you're trying to play the acquisition theme, then, there are smaller companies are there, but just be sure that you're not buying them at an overboard valuation. I don't think, acquisitions will happen at more than around $85 per ton level for most of the companies. And then you can do plus minus $10 for the quality of the company. So one needs to be really sure that they're not going overboard and buying, smaller companies at high valuation. There's a good chance that you can get stuck. So stick to industry leaders is what I would say, and be very opportunistic with these acquisition, theme.
Rakesh, since you are here, can't not ask you a question on metals. I'll slip in a question on Vedanta. There's the large deal that took place in the stock today. Promoters have said that they have sold some more stake. Does this promoter selling stake become an overhang on the stock? Because last week we just had the group chairman saying that there was no such plan. Now we've already seen a stake sale that has taken place just within a week. What's your call on Vedanta going forward? Because there is a demerger that is taking place as well. What's your view there?
So I think, the stock has already run up quite a bit. And the promoters are a smart set of people who understand commodities for ages now. If they are selling, I think investors should get a clue out of, what's happening. Number 2, the pricing for base metals has already gone up decently, both aluminium, which is one of the main thing, and zinc. And but we are seeing that consumption is slowing down in China and inventory levels are starting to rise for aluminium in China. So I would think that, maybe this rally has already, come to a little bit of a, I would say, peak level, and it has to consolidate before it can move up. So I think, for the time being, this up move is kind of done.
Okay, all right. Thank you so much for joining us, Rakesh, today and giving us your perspective on the cement space and Vedanta stock as well. We'll slip into a break. When we come back, we'll put focus on Textile Industries and Shivalik Bimetal Controls. These two stocks are surging in trade. Why is that? We'll tell you after this short break.
AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Unifor, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Unifor?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPT moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application.
Right.
Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the
Back with us here on Midcap Radar, on to some movers in the broader markets. Then Stylum is the stock that has surged over 8% after Investec initiated coverage on the stock with a buy recommendation. In our segment Midcap Spotlight, Mangalam will focus on Stylum Industries.
Well, it's been a big mover, and if you look at what Investec is saying, that in the past, it's grown faster than the industry. So they've initiated coverage with a buy rating and a target at 2362, which indicates a near 40% upside from current levels as well. So let's go back to the past. FY19 to FY24, the company's export revenue grew at 15%, domestic revenue grew at around 15% as well, and they forecasted 17% volume and 19% revenue CAGR over the next couple of years. So not only has the company grown faster than the industry, they're poised to grow fast as well from here on. Additionally, the big optionality for them would be the total addressable market that they are increasing with the investment in the wood panel market, a 50 crore investment which the management believes could yield a revenue of almost 400 to 500 crores by FY27 itself. And on the back of all of this, the EPS, the earnings per share, compounds at over 11% for the next couple of years. Add to that, if there is any potential strategic MNC investor that comes into the company, it could aid tech, distribution, branding, and further aid to the earnings or multiples as of now, but that's not been baked into their current estimate. So that's something we'll watch out for. They valued the company at 25 times FY26 price to earnings, which is a 40% discount to the market leader, still implying a target price of 23.62.
Okay, 11% higher on that stock. Telecom Industries on our radar. But I'm watching out for Shivalik Bimetal Controls. That is also higher in trade. JM Financial has initiated coverage on the stock. They say the company is predominantly a bimetal electric contacts manufacturer, and it has also ventured into the shunt resistor business from 2014-2015. Company has gained dominance in the domestic markets and is now ready to further the export opportunity as well. With their expanded capacity, the capex for the export opportunity has already been done. It is also a play in 3 different segments: switchgear industry, smart metering and EVs. And now remember, these 3 are seeing momentous growth, and these are 3 industries that everyone has been talking about. It also aims to increase its revenue contribution from electric current to current 10 to 11% by inorganic expansion and opening up to global opportunities as well. So export continues to be a big focus for them. Additionally, they have PLI scheme in shunts, and they are considering exploring newer industries for applications as well. So of course, there'll be tax benefits, there'll be benefits in terms of financing as well here. So they expect revenue growth of 25% and EBITDA and PAT growth of 29% over FY24 to FY26. They have a buy rating with a target price of 730 rupees on the share. So already 7% higher from yesterday's market price.
And as a result of this move, the stock has turned positive for 2024. So good going for Shivalik Bimetals there. But the other stock in focus is Senco Gold, and the company is aiming for an 18 to 20% growth in FY25 and aims to open 18 to 20 stores this financial year. Earlier today, we spoke to Suvankar Sen, the MD and CEO of the company, and of their business momentum and the gold price outlook. Listening to snippets of that conversation.
If you look at our last year's performance, you will see that we've grown by almost 29%, and the profit has grown by about 14 to 15%. So in terms of the coming year and the year ahead, we are looking at a growth of anywhere between 18 to 20%. That's the endeavor that we are all going to make in terms of the top line growth, as well as with the drive that we will all be taking to increase our diamond jewelry sales and the other initiatives in terms of opening new stores, new franchisees. So we're all expecting that we will have about 18 to 20 new stores, about 10 to 12 company-owned, company-operated, about 8 to 10 franchisees. So it is with that plan in mind that we're all moving forward.
Okay, all right, that's the word from Senco Gold. But with that, we've run out of time on this edition of Mid Cap Radar. Your stocks when we return.
How do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with Nvidia becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in 93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now Nvidia is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast Nvidia is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy and well implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you've been a big champion and a big believer in the India story. But there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about it.
Hello and welcome to Your Stocks in the Mumbai studio. I'm Sonal Bhutra and this is a show where we answer all your individual stock queries. But before we go across to our guests who will be answering your queries, let's just quickly take a look at the markets because it's surging further. 131 points on the Nifty right now. It's at the day's high and the mid-cap index too has turned into green after seeing that bit of a red in the earlier trade. So it was down around 40 points. It has recovered from those levels and it's been a volatile trade for the mid-caps today. Banks are doing well. That is one space which is supporting the Nifty today. Bank Nifty is up around 282 points right now. We have the other names which are supporting the Nifty, the likes of Reliance Industries. That stock is up 2% right now. We have the other names like Ultratech Cement, which is higher in trade today. There's ICICI Bank, Maruti Suzuki. So most of the Nifty components as well supporting the moves that we are seeing on the Nifty today. So let's get going. Joining us today is Rajat Bose of rajatkbose.com and Sharad Avasthi, head PCG research at SMIFS, to answer all your queries. Gentlemen, good afternoon. Thank you so much for joining us today. And as always, a lot of interest, a lot of queries that we have received via text, via social media. So let's get started. KS Rao is on the line from Andhra Pradesh. He has made investments in Gujarat Industries Power. Please go ahead, sir. What's your query about the stock? Mr. KS Rao, can you hear us? Okay, all right. Looks like we don't have the line right now, but he has bought 100 shares at 60 rupees. He's making a profit of around 18,000 rupees on Gujarat Industries right now, Gujarat Industries Power right now. Wants to know whether to hold or sell. Sharad, let me come to you first up. A stock which is flat right now but has given decent gains to the viewer. What do you suggest here?
Yeah, I think he should continue to hold, considering the prices at which he has bought, and he's still continuing. I'm assuming he's a good long-term investor. The current capacities are around 1200 megawatt, roughly 50% is on renewable power and 50% from thermal and lignite-based power. As far as lignite-based raw material sourcing is concerned, they already have their mines in place. Most of the power produced has long-term power purchase agreement, so that's not an issue. In addition to that, they are developing some big projects. One 2400 roughly megawatt renewable energy park in Khavda in Gujarat. So I think in addition to that, another 1200 megawatt kind of renewable power is also on the stream, which should start somewhere around December 24. So I think there's a material changes from a 1200 megawatt company to somewhere around, 3 times the current size. The capex is around 6,000 crores on a balance sheet of around 3,500, 4,000 crores. So I think this is a company that could be poised for very handsome growth. The only thing could be that if the capex does get delayed and there could be some hit on the numbers for some time. But since it's a government-owned entity, I don't think there would be much of a problem on that front. Even if there are some delays. And renewable power, particularly solar, usually is very efficient in terms of the time required to put in the project. So I think most of it would go very easy. So I think this is a good long-term bet. At least I think if you are very conservatively looking at it over the next 2-3 years, it should double from here. So continue to hold. Very conservatively also, it trades at 10-11 times. I think with 6,000 crore capex, it is very easily possible that the earnings would more or less double or even be better than that. And if you place a 10 kind of multiple, I think you could be looking at somewhere around 400, 450 on the stock. So I think the long-term investors have very decent upside on the stock.
Okay, decent upside on the stock could double as well from these levels. Rajat, what's your take?
Well, 4th of June, it posted a low of 170, and after that, it clocked a high of 269.40 or something. That is a 100-point rise. But I'm pretty encouraged to give a long-term view because the person is actually sitting on quite a bit of profit. I mean, one can think of booking part profits now. Otherwise, one can continue to hold on. Please put a stop loss below 210 and continue to carry on. Otherwise, at current levels or on a bounce, you can book part profits because this kind of a huge rise is generally followed in the stock for a long consolidation. So that way, some profit booking may be in order. But otherwise, one can continue. But keep a stop loss below 210.
Okay, all right. Stop loss below 210 on Gujarat Industries Power. Let's move on to the next sector, which is buzzing in trade of late. Nimish Lekar writes to us from Mumbai, holds 200 shares of IndusInd Bank at 1,600 rupees a share. He's willing to hold the stocks for this year and wants to know whether to hold or sell. Sharad, let me come to you because, of course, private banking names, they are back in focus. Large cap banks, they are doing well. Do you think IndusInd is the right choice amongst all of them? If not, what are the other stocks that the viewer can look at?
No, I don't think IndusInd is a bad choice because if you look at the price to book multiples, it's roughly trading at somewhere around 1.8, 1.9 times price to book. Most of the private sector banks are roughly trading at somewhere around 3 times price to book, whether it's an ICICI or an Axis. Axis might be a bit lesser. But I think at 1.8, 1.9 times, most of the risk seems to be factored in. The GNPA numbers have more or less been steady at around 1.9%. The net NPA is at 0.57, 0.6%. And the retail book has been expanding. The MSME book has been expanding. The bank is thinking about expanding into the other areas also from where growth would be there. So conservatively, you can expect 17-18% kind of advances growth easily happening for these banks. The same would happen for IndusInd, 2-3% here and there. And I don't think there is any credit side risk on this bank's book. So that's another advantage. So even if there is some pullback in terms of the new segments that they are growing and they can grow at a substantially higher rate, and maybe the price to book oscillates to 3.3, around 3 times price to book. But even if you don't consider that, I think what he's saying is he wants to hold for a year. So considering next year's addition, you could expect the book value addition of around 120, 130. If you can extend your horizon, I think you could be looking at 2,000, 2,100. But considering next year, I think you would have another 200 rupee to 250 rupee kind of upside from current levels. So roughly 1750, 1 year target.
Okay, all right. So can hold on to IndusInd Bank from the current space as well. What's your take, Rajat, here? Is this stock looking good chartically, or do you think there are other names that the investor can look at?
Well, first of all, this stock is range bound between 1575 and on the upside and say roughly about 1440. Although it did go down to about 1400 or even lower in the recent past, but generally within that range of 1400 to about 1575, it is oscillating. So when a breakout will happen on the upside, I really don't know because there are no technical signals to that end. Regarding choosing an alternative, I would say that other stocks have actually moved up so much. Say you don't buy HDFC Bank above 1700 or ICICI Bank say above 1100 or 1150. These stocks have already moved up. Had it been those stocks, I would have said at least book part profits. Here, stay put with the stop below 1440.
Okay, all right. That's on IndusInd Bank and the other names possible here as well. Moving on, Ramesh Jain writes to us from Chandigarh. He holds 10 shares of Nykaa at 140. He wants to know whether to hold or sell. So the quantity is really small here, just 10 shares. So there's a profit of around 340 rupees here. Sharad, new age companies, even the next query is on that one. What do you suggest here?
Yeah, I think it's a good bet if you want to hold very long term. but the next 2-3 years, I think roughly is very well discounted. I think the USP for this could be that these Nykaa is a good idea if you want to hold on to something where you have very good confidence in terms of the products and the type of growth they are looking at growing the fashion business substantially. The retail part also they are looking to grow. But in terms of numbers, we are looking at what 25-30% kind of CAGR in the bottom line, in the top line. And the EPS for FY26 is expected to be 1.5. But these things can change very fast. Like 1.5 years ago, we were talking about a 5 rupee kind of earning. So I think even if optimistically I look at it, say they would report 3-4 rupee kind of earning in FY26, I think still the valuations are a bit on the higher side. Someone would be better off betting on a better stock where the valuations are much more comfortable. Within the new age companies, I think maybe Honasa makes the cut better. But I think Nykaa is good if you can extend your horizon to 4 to 5 years. Maybe 1 or 2 years you'd not get much. And since the quantity is less, I don't know if he's willing to buy more or what is his approach. But unless and until you have a 4 to 5 year horizon, I think the Nykaa would not make much sense at current prices. Comparatively, maybe if within the same basket you want to look at something, Honasa could be a better idea according to me.
Okay, Honasa is a better option than Nykaa in the same basket. Rajat, what would you suggest in terms of charts right now? What is Nykaa indicating?
If you look at the monthly chart, it will appear that it is about 50% higher than its all-time low of around 120. But other than that, what I would say is that when you look at the daily chart, it is again range bound, and it is bouncing back every time it tests its 200-day, or rather most of the time it tests its 200-day moving average, which is around say 165 or so at the moment. So you should continue to hold on, and I suppose even here, if I'm not mistaken, the person is holding only 10 shares. So nothing much will happen.
I know. The quantity is really small. So unless there are massive moves, or even then, it's just a small quantity to see those massive swings as well. Nimish Kumar is writing to us from New Delhi. He holds 8 shares of Delivery at 350 rupees a share. He wants to know whether he should hold or exit at current levels. Well, Rajat, again, it's a small quantity here. I know big swings, small swings, not a big matter. But Delivery, how is it looking on the charts?
Which stock it is?
Delivery.
Oh, Delivery. Delivery, it has bounced back from critical support around 360. But again, it is unable to get past the critical resistance around 420 and currently around 400. So I would say that one should get out of this. And if I have to suggest, I would suggest Idea. Idea can actually give a better return given the kind of investment that this man has made. Probably over a period of 6 months to 1 year, Idea in percentage terms will give better results than this one.
So you're saying the investor should look at Idea instead of Delivery?
Yeah, Idea instead of Delivery, yes.
Oh, okay, all right. So that's I just wanted to confirm again from absolutely different sectors as well. But take that point, Rajat. How do you look at this stock, Sharat?
I think in the long term, it could be a good story. But if you look at the numbers, I think whatever is conceivable over the next, 2.5 years, roughly you could be looking at very strong growth in the bottom line, basically optimization of resource utilization. That is a prospect that can substantially boost most logistic companies. And most of them are trading at more or less similar sizes. Delivery has a larger fleet, maybe a bit better on the technology side and the type of arrangement that they've done with the partial loads and their own trailers, etc., and how they utilize it. So that could result in a lot of optimization in terms of the numbers they post. And there is a lot of scope in terms of optimizing the fleet, in terms of utilizing it better. That is across the logistics sector. But if you look at most companies, most of them are growing at a very handsome rate. Delivery most probably would have one of the best growth rates in terms of bottom line. But when I look at valuations, even if I consider very optimistic numbers, FY 26, 27, we report somewhere around 8 to 9 rupee kind of earnings. Even then, it's trading at around 40, 45 times, 50 times roughly. So it doesn't really leave much on the table. I think compared to this, I would be happy buying a TVS services. I think there the valuations look much more appealing rather than this, or even a Mahindra Logistic. But in a similar size and a partially new age kind of arrangement, I think TVS does look better than this one comparatively.
Okay, all right. Okay, all right, gentlemen, thank you for that take on these names, but we have to slip into a quick break. When we come back, we have a whole host of stock queries, so we'll answer that on the other side. Stay tuned.
Where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that.
Welcome back. You're still tuned into your stocks on CNBC-TV18. Markets continue to do well. Nifty Bank actually has surged further, and that is supporting Nifty a lot more now. So 0.6% higher there. We're very close to the 23,900 mark now, and that surge is led by Nifty Bank, which is up around 330 points as we speak. And we do have a lot of stock-specific queries as well. So still have with us to answer all your queries, Rajat and Sharad joining us back again. Rajat, let me come to you on this one. Thippeswamy writes to us from Tamil Nadu. He holds 60 shares of Adani Wilmar at 404.65 rupees a share. He's a long-term investor and wants to know whether to hold or sell and what are the long-term prospects of the stock. First, let me come to you, Rajat, and then Sharad, you can give us a sense of the long-term prospects.
Well, Adani Wilmar being an FMCG kind of a stock, you can actually continue to hold on, but as such, it is not showing any kind of signs that would tell us that it will move up immediately. If you allow me, I would like to say something about this small holdings like 10 shares or few shares. These people can actually select, yes, FMCG or those kind of stocks that are regularly in use by people. These kind of stocks actually, even in advanced markets like United States, have given 100 baggers in 30 years. So buying 5 stocks, 10 stocks in companies like Nestle, Hindustan Lever, Britannia and all. And if you can stay put for a long time, you will gain much. But Adani Wilmar, though, belongs to the same category, but this does not have the same pedigree. That's why I would suggest switching into those kind of stocks. By the way, since I've taken Nestle's name, I personally hold some shares in it.
Okay, thank you for the disclaimer. Thank you for the advice there as well, because that is something that would help the investor as well, for sure. Sharad, your take on this one?
Yeah, I think there were a lot of surplus capacity post the issue. They had a lot of surplus capacity on the oil part, basically. There have been some abnormal movements in terms of palm oil prices globally in the past, post-COVID, because of logistic issues and then some issues here and there. But I think gradually now it is settling. They're also looking at diversifying into new products, expanding their reach into more rural and semi-urban areas, even urban areas. So I think all that should play out very well over the next, 3-4 years. In terms of numbers, what are we expecting? We are expecting FY26 an EPS of somewhere around 9 to 10 rupees. And currently, I think it should easily command, with a top line growth of 8 to 10% and a bottom line growth of somewhere around 25 to 30%. I think anything between 30 to 40 times is very easily possible. And I think long term, the underutilized capacity and the expanding distribution reach, new products being launched, all that should add up very well for the company. Yeah, they do not have an established pedigree in the space, but in terms of particularly the oil side of the business, they have a pretty large capacity in place. And I think over the next 3 to 4 years, this would be a very good idea. So initially, what you can look at is a target of around 400, 450 on the stock. But I think this is an idea worth holding because the capacities are in place. It is only the distribution reach enhancement that should substantially aid sales over the next, for a long period of time. I think over the next 3 to 4 years, they would hardly need new capacities. The existing capacity should be enough to support very rapid growth for the company.
Okay, all right. Take that point, Sharad. Let's move on to the next one. Sarvana Kumar writes to us from New Delhi. Holds 1,100 shares of JK Paper at 450 rupees a share. He's a short-term investor and wants to know the next 1 month target of the stock. This is one stock which has done really well and has been buzzing off late as well. Rajat, 1 month target on the stock?
JK Paper, you said, right?
Yes, that's right.
It has already gone ballistic in a parabolic manner over the last 21 days, I suppose. It posted a low around, say, 346. And I think today itself, it has shown a high of 561. Should one wait, or prudence calls for a profit booking? If I were in his shoes, I would have booked profits.
Oh yes, it has seen a massive move. 3 months already up 66%. So if the suggestion here is that the investors should look at some profit booking. But on the paper sector and JK Paper in general, Sharad, what are the suggestions? Paper pricing rising now? Is the sector seeing an uptick?
Yeah, I think the best part for the sector is the normal valuations that across the board these companies are trading at. Even if you look at JK Paper, next 26, most probably the EPS would be somewhere around 76. Even if you are taking a very conservative approach, I think these companies should trade at 9 to 10 times. The initial hiccup around 7-8 years ago, or even before that, was that maybe the advent of electronic media and electronic studies will totally remove paper from the scheme of things. But actually that has not happened, and paper continues to be an important part. They have a 30% market share in the copier segment as well. And I think they have expanded capacities. They are continuously expanding capacities. The balance sheet is robust. I think they should easily get 9 to 10 times. So I'm working with a long-term target of 750, but obviously 1 month is a short span of time. Rajat is a better equipped person to talk about that.
Okay, all right. We take that point. Rajat, one more query, and if I request you to take it up quickly. It is Nikhil Srivastav writing to us from Bangalore, holds 30 shares of ONGC at 150 rupees a share. Wants to know the future prospects of his holdings. This is one stock which has done well. What are you suggesting? Chartically, how is it looking?
See, if the future is actually 5 years or 10 years, then definitely do hold on to it. Otherwise, it has had a very good run from 180 to about 280 over a period of few months. Early this year, it touched that high, and after that, just like SRF doesn't cross 2800, This one doesn't cross 290. So if I were to give a suggestion, I would say book part profits or full profits if you want.
Okay, book part profits or full profits on ONGC. Gentlemen, thank you so much for joining us today and taking us through those queries so patiently. That's all we have on the show today, but do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.
That, the content belongs to them. We're not training our models based on that. But I think perhaps in English, we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand. Certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
Either owning a team or at least supporting a friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our 2nd season of Major League, cricket here. And, I'm part of the San Francisco Unicorn team. And so it's fun.
So the Hyderabad Mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this case, the mafia. This is all about a passion, and cricket's a global sport. And actually, the funny thing about sport just brings together people like no other activity. And, just the amount of excitement. But now we have to go win it all, right? I mean, we've just got to the, Super 8s. And unfortunately, the India-Australia match, I have a board meeting on that day. So it's going to be...
Big conflict.
No, the board meeting is going to take priority. But, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
While the Hang Seng is in the red right now, 42 points lower there. The Taiwanese index is up 135 points.
Bollinger Band for the Nifty is 24,067.
A 5,000 crore QFE issue is likely by Bank of Maharashtra.
JP Morgan has put out a note on Tata Motors, very interesting one there. They have an overweight on the stock. They have a target price of 1115, so that's a big upside to the current market price. It's absolutely flat on the opening bell, but holding on to the 23,700 mark.
Today, market is pricing in continuity of government and continuity of reforms.
Nearly 2.5% equity got changed hands at an average price of 425, which works. The deal size works out to over 4,000 crores.
There is no urgent, emergent need on me to raise the capital for growth.
Strategies are in place, our order book is in place, and our future order book also looks good.
50 points. The Sensex is inched up 250 points.
NDA's candidate Om Birla has been elected as the Speaker of the Lok Sabha.
They are now considering extending the PLI scheme to the garment sector to boost manufacturing and exports.
The 4.8% equity had changed hands in multiple blocks valued at close to 8,000 crore rupees.
The Nifty is up 117 points right now and at the day's high.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, it's a good-looking screen once again, almost deja vu, not as powerful, as strong, as sharp as yesterday, but it is a good day, and it's led by banks once again, so that's the deja vu part of it, actually. Reliance, of course, is helping a lot. We'll talk about all of that and more in a bit. This is, of course, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Rima and Mangalam. Guys, hi, good afternoon.
Good afternoon.
Hi, afternoon. And once again, mid-caps have taken a bit of a backseat. Right, this week, the mid-cap index has underperformed the benchmarks by nearly 1.5%.
But maybe not as severe as yesterday, right? Yesterday was looking a lot more. I mean, I think you're making the point, portfolios perhaps are not feeling a little down and out. Today, you know, a little better, I think,
and,
on an overall basis.
What's interesting is that between yesterday and today as well, while there are as many stocks which are declining versus the stocks which are advancing, the ones which are gaining are actually seeing big gains. We have, stocks which are gaining in double digits, the ones which have been gaining already. Whereas the stocks which are losing, the maximum loss is closer to 5%, 3, 4, 5%. So if you have the stocks which are gaining today, you would obviously feel a lot better in your portfolio than, the quantum of losses are a lot lower.
No, you just have to take a quick look at, the screen, and it's very clear that volumes are on the side of gainers. Big volumes across a long list of sort of gains. Yeah. And some very interesting ones as well, which we'll discuss in a bit. But anyway, just a quick couple of points before we sort of take this conversation forward. Banks and Reliance. Actually, Reliance is about 50% of the 140, 150 point gain. So Reliance is contributing about 75 index points to the Nifty. That's 50% of this move that we are seeing. So that's the difference. I think the others, of course, are ICICI Bank and some of the other large banking stocks which are also sort of contributing. So it's not one-way banks. It's a little more even. Metals are down, real estate is down, and autos are seeing a bit of a pullback as well. And mid-caps and small-caps, the last I checked, they were absolutely flat. So they're not down sharply 0.5% like yesterday. And market breadth is also more evenly matched as opposed to what we saw in trade. But yeah, I mean, on the gaining side, there is a lot of stuff to discuss and lots of stuff really popping up 10, 15% and more. And we'll get to some of that in just a bit. Rima.
In fact, I think the contribution plate should come up because it's fairly instructive. Reliance Industries single-handedly is contributing 50 points to the Nifty up move. The Nifty is up close to about 150 points. Off that, about almost 77, 80 points, is courtesy one stock, Reliance Industries. There you have it, 81 points coming through on account of Reliance Industries. Even in banks, HDFC Bank is in the red, but it's recovered from the day's low. At one point of time, HDFC Bank had a cut of close to about 1%, and now it's managed to trim its losses, so just down close to about 0.2%, while ICICI Bank and Kotak Mahindra Bank are doing the heavy lifting when it comes to banks. And another pocket which we'll talk about is Telecom. And Telecom's, firing away today.
Absolutely, it is. Bharti Airtel is one of the big contributors on the Nifty today, if not the biggest gainer. Yes, it is the biggest gainer by a mile. We have 4% gains on Bharti Airtel, about 4% on Reliance as well. What's interesting, however, that even as the Nifty Bank is recovered from the lows in the morning, it seems like someone's keeping the big boy at bay right now. And that someone or something is the Nifty Bank options expiry that is going to play out in the next 1 hour. So if you just take a look at all the other banks, and if you look at HDFC Bank, the intraday chart of HDFC Bank comes up for you. It has recovered a strong bit from the lows in today's trading session, but still not broken into the green so far. So it's just under the flat line. If HDFC Bank moves higher, only then can we see the Nifty Bank move higher as well. But is the Nifty Bank going to move higher? Perhaps not. Why is that? Because we have seen a fair amount of writing at the 53,000 call. At the lower level, the 52,500 put had seen a fair amount of writing in the morning itself. So even as the Nifty Bank broke below the 52,500 mark once, it recovered swiftly from there, recovered all the way up to very close to 53,000. And from there, it's seen some supply. So that's the range that we're looking at for the Nifty Bank today. And the Nifty is going to be a lot more interesting because it's the Nifty monthly expiry tomorrow. 23,700 put, very active, telling you that the base has moved higher to 23,650, which is basically the earlier resistance congestion zone that we had on the market. So we broke out of that yesterday, and now that has become a support. On the way up, though, 23,900 thereabouts is where you can see some sort of congestion, or that's what the option writers are positioning themselves for. Because who's to say the Nifty, doesn't cross about 100 points in tomorrow's trading session? I'm just watching out for one stock as of now. That's India Cements. The big move that's taken place 1 day ahead of expiry, the stock may enter F&O ban. Given the open interest activity that there is, it's crossed way past the 95% market-wide position limit that there is for the stock to go into an F&O ban.
Well, absolutely. As of yesterday's close, what was the long position in index futures? Do we have that?
As of yesterday, the long positions were 1,40,000 contracts. Okay. The long exposure was 61%.
1.4 lakh is I mean, we are now
70,000.
We're actually getting to not there, but getting to an extreme.
Getting to an extreme. I mean, at the start of the series, the number was minus 3.11 lakh on the short side, and now that has turned into 1.4 lakh on the long side.
That was before the election, going into the election.
That was going into the election.
And right now, we've completely swung the other way, and so we're getting to the other extreme. So that is another sort of broad indicator. It doesn't tell you exactly, but it does. It's something which works. So we're not there yet. But we're sort of getting to a bit of an extreme on the other side in terms of long positions. Well, how should you position here and now, though, is the question. Mitesh Thakkar is with us with exactly that answer to that question. Mitesh, good to have you here. So, by the time we get to you at 2:30, Mitesh, market makes sure it is up at least 100, if not 150 like today. What should one do?
So, I was talking about this fact that the banks have been doing well. IT was catching up and banks are coming to play, and Reliance joined the rally sometime in the news. So we were looking at 23,950. I think we are well on our way to hit that trading target. But that apart, I think the breadth still remains impressive, and that suggests that we are not looking at any kind of a big declining move happening on the indices. So stay long. Not a good time to enter afresh if somebody wants to buy the index, but that can be kind of compensated by buying into stocks. And that is the idea. I think we saw last few days, we saw that the FMCG stocks were giving a pullback. Now they are coming back into some kind of a trend. So I have a buy on Britannia. There's a buy with the stop below levels of 53.70, sorry. And look for a target of 55.20 here. And Indus Tower also, after consolidation or pullback, is now again moving out the upside. So buy here with the stop at about 345 and look for a target of 370.
Okay, that's some individual stock ideas. Let's get to Stylem because that surged close to about 8%. Remember, Yash had reported on 9th of May, I think, the Japanese major Aika Kogyo is looking to acquire a 40% stake in the company. Now, following this report, today we've got Investec, who's released a report, and they say this is a positive trigger for the stock. Yash joins in with the details. Yash.
Laminates major Tata Industries is in focus in today's trading session, and that is on the back of a very interesting report which has come from Investec. Investec has initiated coverage on Tata Industries with a buy rating and a target price of 2362 rupees per share, which is an upside potential of as much as 40%. At the target price, Tata Industries will trade at 25 times FY26 estimated price to earnings. Now, as far as Investec's view is concerned, they say that a different approach on marketing as well as distribution versus market leader has helped Tata Industries drive its earnings at about 30% CAGR between FY 2004 to FY 24. Also, the per unit revenue for Tata Industries has lagged peers, but the company has better operating margins. Looking into the future, Investec says that incremental expansion offers attractive ROCE profile for Tata Industries, and they forecast a 17% and a 19% volume and revenue CAGR from the laminates business between FY 24 to FY 26. They expect EBITDA and PAT CAGR of 19% and 11% in the same period. Also, 11% EPS CAGR between FY 24 to FY 26. Interestingly, Investec says that a potential strategic investment could enhance Thailand's technology, distribution, brand placement capability. Remember, on May 9th, CNBC-TV18 had reported that Japanese major Aika Kogyo is looking to acquire about 40% stake in Tata Industries, which will be done through acquiring promoter stake as well as through an open offer in the share purchase agreement.
Right, that's about an up move that we're seeing in Stylem. Meanwhile, I'm just also looking at a bunch of stocks which are, buzzing around right now. Raymond, for instance, is up around 6%. Senco is one of them. Senco, we had the management join us, in the afternoon itself, and they did say that they are looking at 18 to 20% growth this year as well, and looking to also expand beyond their core markets while maintaining their market share in core markets. The most important thing they said was that lab-grown diamonds is a business that they are starting out in. They're starting a lab-grown diamonds brand itself. So were that to happen, we would see a fair amount of customers getting attracted to that, because so far we haven't heard much on the lab-grown diamond foray as a business opportunity from a lot of the larger players. So let's see whether that brings them a lot more growth than the other players in the diamond business itself. Prakash Diwan joins us now on the show. Prakash, a lot of stocks buzzing around in today's trading session. Top of the table is the telecom space. What are your thoughts? What do you like right now?
I think, good afternoon, Mangalam. I think very clearly there seems to be the outcome of the spectrum auction and the imminent price hike that seems to be getting baked in is probably the biggest trigger. And this is the trigger that's been much awaited. Now you have a semblance of normalizing or some sort of an equilibrium in terms of market play, with all the three players wanting to kind of look at expanding after a fairly long gap of almost about 12 months. So good times rolling in. Price hike, of course, not as a consumer, but as a stakeholder, as a shareholder, things could probably be very different. My sense is Bharti Hexacom, of course, post the IPO, it's kind of done so well. If you get this at a lower level, it's probably a good stock to look at. Otherwise, I think Bharti will also continue to kind of march ahead, given the fact that it's poised for some sort of a re-rating once the price hike is announced and the quantum is understood. So very clearly, that's the trigger. But I would believe there's so much that's already happened that you should kind of expect fireworks once once the price hike happens, as and when I don't know whether it's first week of July or it's middle of July, but as and when that happens, that would probably be the interim peaking out for most of these players.
In fact, as Prakash pointed out, the big trigger that the street is latching on to is now that the spectrum auction is concluded, maybe, the path is set for a tariff increase, right? The elections are done, the spectrum auction is concluded. These were the two things the street was the companies were waiting for before going ahead with a tariff increase. And now that path is clear. The street is expecting a 15 to 20% tariff hike this year, and some are saying it could come very soon. The last tariff hike had taken place 2.5 years ago in December of 2021. So it's been a long time coming. Since last year, we've been waiting for a tariff increase. Ambit expects a 20% tariff hike this year, followed by a 12% tariff hike once in every 2 years, and this will sustain till 2030. IFL is talking about a 20% hike in FY25, followed by another 15% hike in FY27. Year to date, Bharti is up close to about 40%. Reliance Industries is moving now 15% gain on that. And the good part about a tariff increase is most of it flows directly into the EBITDA because the costs are fixed. So any tariff hike largely flows into the EBITDA minus little bit which you lose on account of down trading, which means some people may opt out of the expensive plans and they may give up their SIM card. But 70-80% of a tariff increase, the benefit from that flows through into the EBITDA. So it's very, very EBITDA accretive for the telecom companies. And Bharti Hexacom, you can't give a year-to-date listing, a year-to-date gain because it's a recent listing, but what a return. 570 was the issue price. It's straight away listed at a price above 800 rupees, and from there, it's up close to about 50%. So that's, the Indus Stars is not moving too much, but I think it's already moved.
Waiting for the tariff increase, right?
Waiting.
First, it should come. I think before budget, after budget, I don't know if that is a consideration, but we'll see, right? And the big move in Reliance today, I don't know if that is an indication of the market picking up. One doesn't know because it's an important trigger even for Reliance because of the geo business there. I just want to make a quick point. Look at VATech Vabag. I mean, as I was walking in, I looked at the gains on this one. It's up another 10%, 1330 on VATech Vabag. It was flat in the morning. Take a look at that. It really took off post-afternoon and now is up. So for the year, it is up 100. It's up 110, 115% now. So big gains, Prakash. We've discussed this with you. At 800, 900, I think maybe even lower. Absolutely what a move. It's interesting. You had a rating agency, I think it was Moody's, right, yesterday? Coming out with a report essentially talking about, the water crisis, specifically with regards to India. What a scarcity and how that has broader implications for industry, etc. as well. I mean, obviously it has an implication. It's just that we don't hear this kind of stuff or talk at all. But now I think it's getting into the mainstream. Just your thoughts here, Prakash.
No, absolutely, Prashant, you nailed it. And in fact, Rima had a tweet around that water report that you mentioned. This is a crisis which is going to start getting much more broader. It will probably be sporadic at this point in time. Certain geographies where there's this acute water shortage. But then, if the monsoon comes as anticipated, probably we'll forget about it and then start talking about it only next March, April. So that's the opportunity for you to understand that water, whether it's industrial use, whether it's potable water in terms of household use, all of that is going to be a big, big theme. The number of companies that are into this business are fairly few. And VATech Vabag, the call was very interesting where they actually gave some very good data in terms of what desalinated water costs in terms of, and they compared it with the transportation costs involved in tankers supplying waters to a lot of the urban household needs. So, and they've given examples from the Middle East where they're fairly active. So they have empirical data, they have the experience, they have the vision to be able to do this. And if municipal bodies actually get on to that, I think it's going to turn into a very promising area. So, and as far as VATech Vabag is concerned, I think it's a fairly long-term secular story, Prashant. So you will see these kind of rises because the float is fairly limited now. It's moved into strong hands in the last 6 months. So every time there is some sort of an accelerated buying, you'll see that price behavior. But I'm sure the same way, on the way down, things are available at lower valuations. So you could wait for that. But I believe it's a great story to keep a watch on, if not in your portfolio yet.
All right. Speaking about great stories, one of the most, I don't know whether it's great or not, is definitely the most, entertaining, thrilling, what do you call it, adventurous, that's Z that we're talking about, the whole Z saga that's been playing out for years right now. And, the stock, while it was in FNO, while it still is in FNO, was for a large part also in FNO ban, with price moving either way. Now, it is the last couple of days that the stock will be in FNO itself. Why is that? Because, come July series, which is day after tomorrow, there will be an exclusion of Z from the FNO trading itself. Tomorrow's the last day of trading. NSE, remember, had issued a circular way back in April saying that post June 28, there won't be further contracts of Z in FNO. Why is it that the stock is then moving? Well, there are a couple of reasons. Because as of yesterday, we had about 10.5 crore shares outstanding. This is as of yesterday's Bhav copy. So what happens to these 10.5 crore shares? In case this open interest is on the long side, those guys, if they wish to continue holding this, then they will have to, you know, buy it in the cash market, leading to an up move in the stock price. If they're on the short side, then they still have to buy it in FNO to square that short position, leading to an up move that we're seeing in Z. So until these 10.5 contracts which were outstanding as of yesterday's close are taken care of, you know, we won't, we will continue to see a move on that stock itself, but thereafter what happens is something that we'll keep an eye out on. Prakash, you did speak about some attractive valuations in some sectors. Z, perennially, you know, people look at it, multiple news pieces, all of that, and now it's finally going out of FNO. What are your thoughts here?
So I think you'll have to give it some time, Mangalam, to kind of settle down and see the price behavior without it being available for any kind of speculative build-up on the FNO side. If you largely see the debate on Z was always, you know, there was a hope trade. Most people wanted to go long on Z in the FNO side, expecting that some revival would happen. It would get acquired by somebody stronger. And, you know, this entire Sony Z merger saga would probably be behind us. But that's not going to be so easy. There are lots of, you know, issues that would need to kind of get understood by any potential acquirer in terms of why the deal hasn't gone through. And I think that will take some time. So once it's out of the FNO, in fact, the acquisition, potential acquisition, as and when it happens, will also start fructifying much more easily from a transaction ease perspective. So my sense is you'll have to give it a couple of months and then probably, you know, once the news flow abates around this technicality of it getting out of FNO, that's when you review it from a more fundamental basis. As of now, I'm not in a hurry to look at.
Okay, all right. Prakash, good conversation. Great speaking with you as always. Thank you very much for joining us here on this edition of Closing Bell. Well, 160 points higher, so maybe a little bit more from the time that we started at 2:30, 23,876. We're going to take a quick commercial break here. There's going to be more stocks we discuss on the other side. We'll also have Aman Chauhan of Abacus Asset Managers on the other side to talk about what they're making of things. Stay tuned.
Three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting.
Welcome back. So things are looking up and up, and it's a combination, as we've been saying, of Reliance Industries, which is really starting to fire, and of course the banking pack. It's more broad-based. Yesterday was pure financials. Today it's more broad-based. Our alpha manager today is with us. Aman Chauhan of Abacus Asset Managers is joining us. Aman, good to see you back. It's been a while. Thanks for joining us. Good afternoon. Prashant this side. You know, we were just having a word on what else but telecom before we took that break in the previous segment. You know, just your thoughts on it's widespread consensus expectation, tariff hikes, and then, I mean, a fair bit of repair for the sector is likely. I just wanted your thoughts on your thinking on the space.
No, we have a similar thought. It's a consensus view now that there's going to be tariff hikes, and now this is a three-player industry, and the government wants it that way. And there will be enough scope for everyone to make a decent margin. So right now, even say Bharti and Reliance margins and ROEs are depressed. Post the rate hike or with a normalized tariff, I believe they will also have enough profitability to justify the kind of investments they have done in the sector. So nothing different than what the street is thinking about in the sector.
What's changed for the private sector banks to see this kind of an up move? All the triggers, you know, the valuations being reasonable relative to the rest of the markets, you know, the ROEs, ROAs looking up, margins were stable, growth was strong. Everything was there for the last many quarters, and yet we didn't see money plowing into the banking sector. What changed in the last fortnight for this kind of a sudden catch-up to take place?
You also answered it's more of a catch-up. We have seen other sectors doing well, and banking has been a laggard, and it's more of a catch-up than in bank. As you said, nothing much has changed in the banking side. I believe as there's always a sector rotation which keeps on happening. Today it's banking's turn. Maybe this week banks can do well. Overall, from a fundamental perspective, we are also pretty positive on banks, both private as well as the large PSU banks, and the outlook of that remains strong. So if you're building a consensus that the GDP growth from here is going to accelerate, GDP can't grow without the banking sector participating. And within that, the private banks as well as the PSU banks both look attractive to us.
All right. So nothing fundamentally has changed, but it's just sector rotation. So what, according to you, have been some of the underlying fundamental changes in some sectors which are making it a little interesting from an investment standpoint?
Over the last few months, we have gone positive on pharma. We have now got selectively positive on chemicals. Both these sectors are either bottoming out or started to recover from the recent lows. We are still neutral on IT. So that's where I can say our views have changed over the past few months. Besides that, continue to stay bullish on infra, cap goods. Financials was always being an overweight for us. So these three sectors are something where fundamentally our view has now turned constructive than what it was, say, 6 months back or a year back.
On pharma, what about hospitals? You know, earlier today we were having a chat with, you know, Macquarie, and he was indicating, the analyst there, that one, you know, the volumes, the inpatient admission was very strong in FY22 and FY23, closer to 25% because of pent-up demand due to COVID. But that is moderating. In FY24, it came down to just 5%. And that's been the long-term trend, single-digit inpatient volumes. Secondly, even the RBOB was unusually high in the last 2 years, but that will go back, mean revert to, you know, high single digits kind of. So therefore, and plus capacity is being added at a very rapid scale for companies like a Max Healthcare, for Apollo Hospitals, for Max in particular. He told us the capacity goes up by 80% in the next 3 years. So where do you stand on hospitals? Because you spoke about being incrementally more positive on pharma.
So we like pharma more than hospitals. Right now, we don't have any hospital exposure. For us, hospital is something which has to be looked on a case-to-case basis, not as a sectoral view, because the companies here have a longer gestation. So they have a large capex for any new expansion that comes in or a new property which comes in. And then it takes time to break even. Till the time there's a continuous drag on the P&L from depreciation and interest costs. And once the hospital normalizes, starts to make money, you announce another hospital, right? So there is very little window where the financial numbers justify the kind of valuation most of these hospitals are trading. So for us, it's more of a case-to-case basis. For now, I think our preference is to stay with the pharma companies than the hospitals.
You know, another theme we were talking about is sort of water, right? One name, of course, Viatech Vabag is up 10%. But I mean, it's a It's a theme which is, I think it's underserved by the number of listed players in that sense, right? Because it's a big one. Your thoughts from an investor perspective, Aman? Are there opportunities here, and what sectors? Because you can look at pumps, you can look at water purification, desalination kind of companies, or other areas as well. Just your thoughts.
We are pretty positive on this segment, and we have been owners of some water treatment companies for the last 2-3 years now, and continue to remain positive because the kind of government spend that we are going to see in this segment is humongous, and there are not many companies that have good experience. Like, we have lots of companies in the EPC space for building a road or a highway, but when it comes to civil or urban infra, there are not many companies here, and that's the reason we are pretty much excited in this space. So the macro looks good. The government spending is going to be good. Within that, as you said, we have a choice. We are more invested into water treatment companies, but there is opportunity even for the pipe guys who make water pipes for transportation of water. And pumps are also an indirect beneficiary of what's going to happen in this space. For the next 2-3 years, at least, the segment looks pretty strong.
On consumption, there are a lot of people who believe that we're way past investing in the staples business for growth, etc. You rather back the new age consumer stocks or new age ways of consumption, either through Telecom or the Zomatos, etc. of the world. So, what are your thoughts on this theme? How do you play the great Indian consumer story?
It's always exciting to be invested in the great Indian consumption story, but we being value-conscious investors, we find most of the stocks great companies, but not at a great valuation or where the risk-reward equation is favorable for us to invest into them. So, on one side, it's a great company, but is that great company a great investment? Maybe not, because we are shy to pay excessive premium. So, the sector is good. Obviously, last 2 years, there has been a slowdown, the volume growth slipped. People are now expecting that to pick up. But even if the volume growth picks up, the kind of valuation most of these companies trade, there is not much of, you can say, positive risk reward for investors like us to invest into this segment. So while the outlook is good, from a valuation standpoint, not very excited.
What about travel as a theme? That's a big part of the great Indian consumer story. Travel is booming. What's the best way to play it? Hotels, airlines? Will it be B2B travel platforms like TBO Tech? Will it be B2C like the recently listed Ixigo or Ease My Trip? Which one makes a sound investment at current levels?
Our preference will be the service providers. So travel agents, even say tour operators, event management companies, this would be the natural beneficiaries, and preference will be to them rather than getting into an airline or a asset heavy business like a hotels. The hotels in the near term will continue to do well because both ARR as well as occupancies are up, and it's a fixed cost model for most of them. But over a 3 to 4 year period, I believe the service providers in the hospitality industry will do much better.
You said event management companies. We have these companies listed?
Few of them, they are mid-cap companies or small-cap companies, not in the broader market, but very few of them.
Got that. By the way, Aman, just to last word, the budget is going to be the first big thing, right? From here, the next big thing, rather. Yeah. Directionally, you think just to go back to what we were discussing when the election results were coming, because of the changed numbers, etc., will it be very much capex oriented, or will we see something new on the consumption side? Even from a market, how it reflects on the market, because everything capex is done very, very well, and there are maybe some ignored sectors, subsectors on the consumption side which remain maybe a little, they've remained cooled off for a while now. So just your thoughts, Aman, with the budget.
Frankly, with the budget, your guess is as good as mine. Absolutely no idea where it is. Only thing which I can add is that it's the same team and the same FM. So not having any major expectations from the budget, because if something that they wanted to do, they would have already done it, or they can do even off budget also. So what is the trend in the last few budgets is that it's been more of a non-event kind of thing. Something similar can happen this year, maybe some tweaks here and there, but frankly, no clue as to which segment is headed towards, in which direction as far as the budget is concerned.
Okay. Of course, the last budget speech was also very short. Maybe not this one. I think is going to be, it's a full-fledged budget. So we'll, in any case, we'll watch it closely. Thanks very much, Aman, for joining us. Great speaking with you. Appreciate your time here on CNBC TV18. So that's the quick sort of a bit on markets. Let's move forward, put the focus on the sort of big block deal that happened today. Vedanta, the stock slumped, it recovered, I think, but still continues to be under pressure. Some 5% equity has changed hands. Hormuz is here with, just to put this in context, finally now, what is the, because the issue, of course, has been earnings are being upstreamed to Vedanta Resources and, the stake being sold here to take care of the debt at Vedanta Resources Limited. So with this done now, what is the situation? Hormuz, take it away.
Well, won't he? Well, he eventually did this morning, and the street was abuzz with Vedanta's promoters looking to sell some stake, and that did happen this morning, and it was the statement that came in from Vedanta Resources as well that they did sell 2.6%. It was the banks that sold the 2.6% stake in today's session, and this was done to deleverage the balance sheet and to fund strategic growth initiatives. But that's not the entire deal. It was much larger. It was 4.8% that changed hands, multiple blocks that took place. The value was close to around 8,000 crores. The average selling price was around 440 rupees a share, and based on that, if the promoters have sold 2.6%, they could have pocketed around 4,400 crores from that sale. Now, interestingly, this comes just a week after Vedanta Group Chairman Anil Agarwal told CNBC TV18 that there is no such plan to bring the stake down from the then current levels of 61.9%. Of course, he left a caveat in that statement. He said that if an investment banker comes and gives an idea, they'll work on it. And so they did. Now, this isn't the first time that the promoters of Vedanta have sold stake. Over the last 18 months, they've sold almost 10%. Now, starting December of 22, when the promoter holding was almost 70%. Now, if we take today's sale into account, that figure will drop to sub 60%. Now, in August of last year, Twinstar was one of the promoter entities. They sold 4.1% stake. They pocketed nearly 4,000 crores from that sale. Now, just earlier this year also, Finside International, the same entity that sold the stake today, had sold close to 2% stake for just over 1,700 crores. Now, based on these three stake sales in the last 18 months, the promoters of Vedanta have raised over 10,000 crore rupees from the Indian entity, and that is excluding the generous dividend payouts. Now, for some throwback. Now, just to jog your memory back to October of 2020, Vedanta's promoters wanted to delist the stock. The proposal was to acquire majority stake from public shareholders at a price of 87.5 rupees a share. But on the 9th of October 2020, the delisting failed. Why? Because it could not get the required number of shares needed for the delisting to be successful. Now, interestingly, while the delisting price was 87.5 rupees, majority of the bids then were placed at 320 rupees a share. Now, even from those levels of 320 rupees, the stock is up almost 40%. Now, how has the stock done since that failed delisting? Now, between October to December itself, that is, I'm talking of 2020, after the delisting failed, the stock was up 18%. Now, taking advantage of the commodity upcycle in 2021, the stock doubled. Now, after 2 years of negative returns in 22 and 23, the stock is up 70% so far this year. Now, analysts are also starting to warm up to the stock. Now, in just 9 months, the number of sell recommendations on the stock have come down from 42% in September last year to just 7% currently. So that's Vedanta for you. From a failed delisting attempt at 87 bucks to selling shares at 5x that price, it's been quite a journey so far.
Indeed, it is. That's about Vedanta. Very interesting though. What we'll do is actually, Hormaz, we'll take a short break, come back on the other side. We'll, pose the same question to our technical experts as well. And as always, we'll get you a check on what dealing rooms are saying in our special T Street chat.
An unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour. drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
आतिशी जी 5 दिनों से अन्न
Welcome back. A bunch of smaller names are actually surging right now. We have something like a 361 WAM, which has now moved to the high point of trade. We're seeing some traction in some other cash market stocks as well. Parag Milk actually, after a long time, has come back into the green list, and we're seeing some traction in Idea Forge as well. So all these stocks from the broader markets doing a little better than what the mid-cap index would have you suggest. But good time to get in our favorite segment, D Street Chatter, where Nimesh tells us what exactly is going on in the dealing rooms. Nimesh.
Hi, Mangalam. Another record high for the markets. But again, the good part is today it's led by the frontline stocks. So the likes of Reliance has done very well today, and that's backed by FI buying as well. Even overall, the sense is that the FI flows have turned positive, and that's going to be the trend in today's market as well. But do remember, today's institutional data will look large because of that large block deal where the promoter entity sold in Vedanta. That itself was close to 4,500 crores. So, one need to account for that in the institutional data. The sector of the day is clearly Telecom. Big move on the Telecom stocks, well bid as well by the large institutions. And I guess, the big chatter in the daily room as well as in the overall market is the tariff hike. Now the question is not if, it's a question of when. So that's what a lot of market participants are speculating, that it will come very soon. The other sector where the FI flows have been quite strong of late is the financials, and within that, the private banks are well bid. So another day of strong buying in the private bank stocks as far as flows are concerned, and that's the reason why the Nifty Bank is up another 0.5%. But clearly, today's move